Correct. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, the PCE came out, and guess what? Inline is the new beat. I heard that this morning. We talked about it a little bit on the watch list, but literally PCE, core, and headline, they came in right in line. There was, I think, month over month went up by 0.1, then year over year dropped by 0.1, and essentially everybody was expecting a hotter print from all of the data that we got 2 weeks ago, and then now this data comes in, not as bad. You got an instant rally, and honestly, market's doing a lot better there than the bonds, but all in all, the data was not a major surprise. Like we talked about yesterday, today, it has a lot of importance, but then before you know it, we are looking towards next week. Next Tuesday, you're going to be getting more data and PAL and everything else. So we'll see how it plays out. But Chatadonia, good morning. What up, Ferdy? Oh, my goodness. Yeah, we're starting with that, baby. Good morning. How you living, Ferdy? What up, Tim? What up, Bull Cycle, Cambolini, Battleborn, baby, Angel, Tim, PSC, Joey, Kakomo, Najee Wolf, baby, good morning, Sungrown, Mohi, Matthew Orman, Christina, John Corvo, Killer baby, yay, Regal, good morning, baby, how you living, what up, Skim, what up, Carlos, Tesa, Agent of Chaos, Lucky Soldier, baby, Peter, Ed, Jordan, Heather, Carlito, good morning, Mr. Samuels, how you living? Grammy, Cold Pizza, Ray Aria, Agent, baby, El Chapato, Awaz. Oh, happy birthday. It's not my birthday. I think it's in like 2 days on the 33rd, but thank you. Oh, good morning, Carissa Hines. Oh, I know, in daily public service announcement. Like the video, baby. Good morning. What up, Kenny, Tony, Crystal, Christian, Rodney. Good morning, baby. What up, Good Time? What up, Mr. Miranda? What up, Jesus Garcia, Organic Peso, Jerry Wood, baby. Winnie, Laurie, John Riley, Beans, FSS, Nick, baby. Good morning. Oh, what up, Dirty Bird? How you living, Asset Work? What's up, Ajo? Oh, Midwest Finest, baby. Oh, good morning. What about the Twitch? What about JG Industries? Charlie in the Tree, baby. Send Cow Hustle. Blowing Dough. Infested. Midwest Finest again. LV Lover. Joshua M16. Jake from State Farm. Blowing Dough. Pickle Pickler. KJ Lemur. Pingo, Big Curly, Brexton, Robo Handtech, Blowing Dough, Hailstone, Lizzie, Mr. Sober. How you doing, baby? Most Dope, Hailstone, Mother Liquor, El Coyote, Blazing Bob, Epic Eric, and S. Jones Jackson, Uncle Nick, baby. Good morning. So, Chad, I hope you're feeling good. I hope you're ready for an exciting day. Again, it's going to be a little bit weirder because like we're saying here, inline data is kind of being taken as a beat since nothing got worse at all. But Chatadonia, let's get right into it. I hope your Monday or your morning is good, your Friday Junior. But now, let me get you the news, and my assistant here, Mr. Josh AI, he's going to help you guys out. And remember, the point is to not be entertained for the first 7 minutes or so. It is to get all of the info. Amen? Amen. All right, I will be right back. Here it is. Here it is.
Wall Street gets relief after inflation report. Stock futures rose and bonds trimmed losses after inflation figures that matched expectations reinforced speculation the Federal Reserve will be able to cut rates in the second quarter of 2024. Equities were poised to extend their February gains after the Fed's favorite inflation gauge, the Core Personal Consumption Expenditures Price Index, rose 2.8% in January, in line with estimates. The report follows a recent jump in both the consumer and the producer price indexes, bringing a degree of relief to traders who had significantly dialed back their Fed bets. S&P 500 contracts rose 0.2%. Treasury 2-year yields, which are more sensitive to imminent Fed moves, hovered near 4.66%. The dollar fluctuated. Corporate highlights. Best Buy co-reported sales that beat expectations as the retailer made progress toward reversing a 2-year slump amid soft demand for electronics and appliances. Salesforce Inc. gave a lackluster annual sales forecast, but investors were pleased by the company's continued profitability, a first-ever dividend and an increase in share buybacks. C3.ai Inc. reported sales that suggested customers are responding positively to the software company's new artificial intelligence-based apps. Snowflake Inc., a software maker, delivered a disappointing sales forecast and announced that Chief Executive Officer Frank Slootman is stepping down from the role. HP Incorporation reported quarterly revenue that missed estimates, battered by the ongoing slump in personal computer sales. Paramount Global, the parent of CBS, MTV, and other networks, said fourth-quarter sales fell 6% to $7.64 billion, the result of shrinking advertising on traditional TV channels. Binance Holdings Ltd., the world's largest cryptocurrency exchange, said it has recovered $4.4 billion worth of digital assets for its users who mishandled their deposits in the past 2 years. The U.S. Justice Department is scrutinizing the midair blowout last month of a Boeing code door plug on an Alaska Air flight, in a move that could expose the company to criminal prosecution. According to a person familiar with the matter. Inflation data. The number traders have been waiting for all week will finally arrive today, as the U.S. reports a gauge of personal consumption expenditures inflation, a key metric for the Federal Reserve. The data is expected to show the headline and core data both picked up last month, highlighting the bumpy path the Fed faces in achieving its 2% inflation target. Russ Mould, investment director at A.J. Bell, warns that a hotter-than-expected reading could put the final nail in the coffin of the idea of a pivot to rate cuts before the summer. Bitcoin soars. Until then, Bitcoin remains the hottest topic in markets. The digital currency extended gains Thursday after surging above $60,000 for the first time in more than 2 years. It almost touched $64,000 and is in sight of the 2021 record high of just below $69,000. The move is being helped by new demand from exchange-traded funds, which are shaking up the market for the original cryptocurrency. The funds have seen more than $7 billion of net inflows in less than 2 months. Fed comments. Back to inflation, and today's data is under more scrutiny after 3 Federal Reserve officials said yesterday that the pace of interest rate cuts will depend on incoming economic data. Boston Fed President Susan Collins and New York's John Williams said the Fed's first rate cut will likely be appropriate later this year. While Atlanta's Raphael Bostic said he's currently penciling in a cut for sometime this summer. We'll hear from Bostic again today after the PCE report, along with comments from Austin Goolsbee and Loretta Mester. Index confusion. With the stakes so high, the U.S. Labor Department Statistical Agency sowed some extra confusion this week with an email to a group of data super users saying that a surge in a measure of rental inflation last month, a key factor in the jump in price gains, was caused by an adjustment to how subcomponents of the index are weighted. The information has implications for the path of inflation in the near term because the adjusted weights could keep readings on rents elevated through the first half of the year. Top overnight news. The Supreme Court's decision to take up Donald Trump's bid for immunity from criminal prosecution raises the prospect that a trial to hold him accountable for trying to overturn the 2020 election could face a lengthy delay, potentially until after the November election. An Illinois judge barred Trump from appearing on the Republican presidential primary ballot, marking the third state to impose such a ban on the former president for his role in the insurrection at the U.S. Capitol on January 6. Ben Bernanke's global savings glut is drying up. Long-term interest rates worldwide may be heading higher as a result. China banned a top-performing quant fund from the stock index futures market and vowed tighter oversight of high-speed trading, expanding a crackdown on computer-driven investment strategies that some have blamed for exacerbating market turmoil. Wall Street traders bracing for key inflation data waded through mixed economic figures and remarks from Federal Reserve speakers for clues on the interest rate outlook.
On the interest rate outlook, thank you. Thank you, Josh AI. That's it. Again, everything was pretty quiet today. We were just waiting for the PCE. I do got a little bit more. S&P futures, they are up by 0.2 Thursday morning, trading near the best levels after today's inline PCE report. Comes after U.S. equities finished mostly lower on Wednesday. NASDAQ was down for the 6th time in the last 8 sessions, with big tech lagging. Treasuries mostly weaker with the curve steepening. Dollar flat through yen, the strength biggest FX story after latest Bank of Japan comments. Bitcoin futures up another 3.4 after recently surging through 60,000, and WTI is up by 0.4. Remains to be seen whether the right inline January pre-CE inflation report shifts this week's more defensive tone. No, a few higher profile tech earnings underwhelmed after the close on Wednesday, while bond yields continue to back up. Some focus on stretch long positioning, month-end pension rebalancing as overhang. However, markets are now in line with Fed on pivot expectations, though that has also thought that sentiment has swung too far given broader disinflation traction. Street taking S&P 500 price targets higher on better earnings and and growth backdrop, though some scrutiny surrounding former given megacap tech contributions and potential for margin reversion. Buybacks and passive flows mentioned as supportive, though some skepticism about the extent to which elevated MMF holdings will flow into stocks. Headline core January PCE came in right in line with expectations, month over month rising slightly and following January CPI, while year over year ticked down a bit. Market has reacted positively with removal of fears from a larger jump higher. Personal spending also in line with personal income better. Initial and continuing jobless claims printed a bit higher than consensus. Pending home sales report yet to come. Fed speakers today include Bostic, Goolsbee, and Mester, along with Williams after the close. Congress struck a deal to punt spending expiration deadlines out a week. A few overseas developments in focus. Eurozone inflation data mixed with France a bit hotter and Spain largely in line, though broader disinflation trend intact. Bank of Japan Takata said central bank needs to consider ZERP exit. CRM full year 25 subscription revenue guide below, but margins, capital return, and green shoot comments positive. Snow down big on softer product revenue guide and CEO transition with valuation another headwind. MNST boosted by GM strength and strong 24 start. HPQ missed on PCs. BBY beat and raised dividend, highlighted paid membership growth. HRL highlighted retail volume strength. Celsius beat, but expectations are high into the print. Okta beat, boost beat by raise that helped dampen concerns about October security incident. PSTG beat and guide largely in line with full year 25, despite some concerns about guide down. Duolingo up big on continued daily active users, and Booking beat. Para helped by progress on DTC improvement. AI up big on subscription revenue, and then AMC missed and warned on Hollywood strike impact. Oh no. Don't worry, there's more. So Fed officials voice support for rate cuts, but emphasize data-dependent stance. Bank of Japan board member Takata says price target coming into sight. Odds of March rate cut firming. ECB more flexible framework to complement balance sheet reduction. Bunds Bank chief Nagel says ECB needs to stay the course until more comforting wage data. Bank of England man says prices increasing, driven by people who do not feel the impact of higher rates. RBNZ governor confident on inflation trajectory. BLS suggests surge in January CPI on rental triggered by adjustment of how subcomponents weighted. Stronger U.S. economy, vibrant growth boost, tax revenue, potentially stabilizing debt to GDP ratio. U.S. applications for home purchases dropped for a fifth week in a row. Global savings glut threatens to turn into a deficit, leaving long-term interest rates higher as a result. Falling inflation in German states points to another national decline. French inflation eased to the weakest level since September 21. German job losses increased more than expected. UK business confidence dips, but firms plan to increase hiring. Bank of England mortgage data points to momentum in UK housing market. Japan industrial production unravels post-pandemic recovery. Retail sales remain lackluster. Australian retail sales recover, but growth remains tepid. New Zealand business confidence index slips, inflation pressures ease. Apple resellers in China slashing iPhone 15 prices on prolonged demand slump. Salesforce quarterly sales, dividend cushion, weak outlook. Snowflake slumps on CEO retirement, softer product revenue guide. HP misses first quarter revenue on sluggish demand. FAA sets 90-day deadline for Boeing to create a quality control plan for 737 MAX. Disney and Reliance announce merger of India TV and streaming assets. Congressional leaders avert weekend shutdown, plan to wrap up funding bills in March. Supreme Court to hear Trump immunity claim, likely delaying his 2020 election interference trial for several months. Chinese ultra-long bond yields plunging as investors bet on more monetary easing support to the country's shaky economic recovery. Chinese regulators tighten scrutiny of financial derivatives and high-frequency trading. Hamas chief calls for march on Al-Aqsa Mosque as hostage talks struggle. South Korea and U.S. to begin defense cost-sharing talks in the near future. China Wang Yi invited Australia as Beijing and Canberra ties thaw after prolonged frost. And then Japan should fully lift arm export ban. Ex-security chief. Ba-da-bop-bop-bop. Not bad. Not bad, Chatadonia. Not bad. Like a lot of headlines, but not really. Again, the data, people thought it was going to be hot. It came in line. In line is the new beat now, apparently. We got a couple of pre-market movers. So We got 21% on Okta earnings, Bank of America upgrade, PTSG or PSTG up 10.2 off of earnings, HRL is up 6.7 off of earnings, CRH 5.9 off of earnings, HLN 4.7 off of earnings, MNST 4.7 off earnings, NTNX 3.7 earnings, Best Buy 2.6 earnings, SQM 1.6 off of earnings, AppLovin up 1.3, 19 million share offering, Enphase up by 1.0, nothing. CRM 0.3 off of earnings. STER up 25 to be acquired by First Advantage, and earnings RNA up 21.2. Earnings oversubscribed 400 million private placement. ESTA up 19.6 off of earnings. Duolingo up 19.2 off of earnings. AMRC 15.2 earnings. AI 14.7 earnings. CPRX 14.4 earnings. Verx up 12.2 earnings. Janx up 11.8, 4 million share. What is that? Secondary offering at 46. GDRX 8.2 off of earnings. IGT 7.0 to combine global gaming and play digital. Pavo up 5.8, nothing. Opera up 5.0 earnings. ALTM 4.5, nothing. Sound 4.1, nothing. NFE 4.1 earnings. Pizza 4.1 earnings. BTSG 4.0 off of earnings. DFH 3.7 off of earnings. PAGS up 3.7 off of earnings. GH 3.0 off nothing. STRL 2.6, nothing. 4.24 up. NVTS up 2.4. APPN up 1.8. BPMC up 1.6. PARA up 1.5 off of earnings. SCTL up 13 or 134 to be acquired by CoreRx. NRBO up 53%. Recovers First Sight RB approval in phase 1 clinical trial. FL or JL up 43%. Special dividend of aggregate of $6 million. VYGR up 21.5 off earnings. NXKU NXU up 13.7. Signs letter of intent with Electric Outdoors. AHT up 12.0 off earnings. Spec 10.5 aims to achieve production rate of 500 core units. Lex is up 9.8 off nothing. MRSN 8.2 Wedbush upgrade. VRCA up 8.0 earnings. RVNC 7.9 off earnings. DCGO 7.1 off of earnings. PLCE they're up 6.7, announces 78 million interest-free unsecured new financing. ACHV up 6.3, reaches agreement with FDA on long-term systemic exposure data requirements for NDA submission. PBYI up 5.0, CAPT up 4.8, EVRI 4.6, merger with IGT and earnings. EBS up 4.6, Tisha 3.0, AAOI up 2.7, REKR up 2.7, Nova up 2.5, Gilt up 2.4, ESPR up 2.3. Bitcoin stocks all trading higher. Same with China names. Snow, they are trading down 22.8 earnings. CEO change. BBWI down 6.9 earnings. Celsius down 6.0 earnings. MDB down 3.7. Snow Sympathy. ESTC 3.1. Snow Sympathy. VFS down 3.1. HPQ down 3.9 off earnings. Datadog down 2.6. Snow Sympathy. CFLT down 2.5. Snow Sympathy. Budweiser down 2.0 off of earnings. Ferg down 1.7, and Nettie's down 1.6 off earnings. GFL down 1.6, 17 million share offering. GTLB down 1.5, Snow Sympathy. Everg down 0.5 off earnings. Kemmers down 37, delays quarter 4 and full year 23 earnings results. CEO administrative leave. Dava up down 32.8 off earnings. IRWD down 29. Phase 3 trial once weekly in adults with short bowel syndrome meets primary endpoint. Stock is down though. XMTR down 27 earnings. DV down 18.5 earnings. FIGS down 14.8 earnings. CFO to step down. SDGR down 13.6 off earnings. FA down 12.9 earnings. NARI down 12.0 earnings. IONQ down 11.3. SHLS down 11.0 earnings. GRFS down 10.7 earnings. AMC down 9.8 earnings. Click down 8.5. MARA down 7.5. C1 down 7.4. ARQT down 6.8. 15 million share buyback. Iova down 5.9 off of earnings. SDRL down 5.9 earnings. Forward 5.9 earnings. PTLO down 5.0, 8 million share offering. X-Ray down 1.5 off earnings. Swin down 25 off nothing. Weight Watchers down 24% earnings. And Oprah Winfrey board transition. B-Fly down 23 off earnings. MIST down 20 offering. LPSN 19 earnings. CLLP common stock offering down 13. Beyond down 6 off Argus downgrade. And then a bunch of other stocks trading down lower below 1 billion and market cap. Wow. Chad, that's a lot of plays. That is a lot of plays. So not too bad. We got a little bit. I'm going to be watching a few plays. I'm going to be watching Okta, Snow, Duolingo, all of the big earnings beats from yesterday. Keeping an eye on Disney. Again, they've been announcing a couple of stuff here and might be able to outperform. Then Mara and Coin, just keep an eye on all the crypto plays. IRWD, I think that was the bowel drug. They had good data, but they dropped, so watch for a bounce. Figs, another CFO step down. Snow got clobbered off that. Then CRM and AI, just two hype plays there. CRM, a little bit more hype, but less... More quality, but same amount of hype. But we'll see how that one plays. But Chattadonia, I think we have enough time. I need to go grab me a water. I don't know if they got a commercial break for me, though. So let me check, but get ready. And yeah, we'll be right back. Follow me on Instagram
so we really
at the
don't
Trading
know,
Fraternity.
I
will see you in a little bit, baby.
Right.
The morning's about to start. Get your plays ready. Good morning. Happy
really
Friday, Junior.
About reining in deficits.
Well, I don't think markets tend to focus on this issue, do they, Julia, until the ratings agencies really, as it were, make a very, very clear noise, or bond markets revolt. So, Julia, when you look at the deficit situation in the United States of America, just give me your top line on the risk at the moment, because it is forever increasing.
Yeah, the deficits are wide, and that is sort of projected to be the case for the foreseeable future. They're not widening, so it's not a constant accelerating force. And it means somewhat higher interest rates. We've seen that. But it doesn't really reflect any concern about the dollar or the stability of the United States, at least not yet. The dollar's very strong. So I don't really think it's an issue, the main issue for markets. The market's done well under both of these guys, and with widening deficits. I think it's really more about the resiliency, stability, and strength of the U.S. economy. And that so far has continued to outperform. So I really don't think that the deficit is the main or will become the main issue in the election.
No, I mean, there is something relative to the rest of the world. The U.S. economy is on fire. It is turbocharged relative to the stagnation in the United Kingdom and the flatlining and even negative aspects of some of the German economy. Thank you so much for joining me this morning. That is Gershon Distenfeld and Julia Coronado on the markets. Coming up, your morning calls, and a little bit later, we'll dig into the markets on the equity side with Pinky Chadha. He joins me shortly. But the market implications from today's inflation report, that conversation ahead on the flows at Deutsche Bank on Bloomberg.
Love it, love it, love it. Chattadonia. All that being said now, you got your data. Inline is the new beat. You got another day. Again, most days, I think 6 of the last 8 days, we have kind of opened up red, so that'll stop this here. We're going to get a little bit more action, but Chattadonia, you're here right now. I hope I see you for the rest of the 7 hours, but you are here right now in the moment. Tell me in the chat, what is your first play of the day? Post it in the chat, baby. Let's go. Celsius, Coin, Spy Calls, Meta, Babysit, Snowput, IWM, Wolf, PSNY, AI, It Was Gold, Snow Calls, Tesla, Apple, Beetle Calls, First Solar, MSTR, 10-Day Scalp, Snow, Tesla, Disney, ONON, Tesla, NVIDIA Calls, Snowputs, Coin Calls, ALB, Sit on My Hands, BKTX Law, Josh Calls, NVIDIA Put, Tesla Call, Mara Call, Altcoin, Sound, NVIDIA Put, NVIDIA Put, NVIDIA Put, Spy Put, CL Dip, Disney Calls, 112, AI Calls, SMCI Put, Long Crude, NVIDIA Put, Holo, SoFi, 9.5 Call, Netflix, Coin Calls, Averaging Down, Joshi Calls, Hood Calls, AMAT, Palo Alto, Spy, UWMC Calls, Beto, SMCI, Spy Put, Palo Alto, NVIDIA, Smashing the Like, Delta, Red Bull, Altcoin, Pelosi, Bets, Beyond Put, Carvana Puts, Palo Alto Calls, Coin Calls, Sound Calls, Mara, Swing Trade, all of China, close the calls I made yesterday, Baidu, Long Heavy, Cashing in Snow, Baidu Calls, MODCA, Meta, Kava, Holding Doge in the final plays. Inverse Kramer. SPY puts, Biden puts, fade the pop, and sell BBY shares. Wow. Well, Chad. Look at that. We've gone through all the a lot of plays, honestly. I can see today everybody is all over the place. Everybody is all over the place, man. So we're going to see how it all plays out. But Chad Adonia, welcome to the cult. And here at the cult, before we do anything, there is something more important than enriching ourselves, and that is paying homage to the most special group of American citizens out there who have made our freedom possible, have made sacrifices, whether or not they have agreed with the current administration or not, whether they agreed with society or not. They made a commitment to serve for their country, and those people I am talking about are the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country and their families for real. Thank you for your service. Thank you for your commitment, and I encourage all of you to show that love and appreciation day in and day out till the day you die, because we don't give enough love and appreciation to those vets. So veterans, thank you, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody making their local community run. God bless you, baby. That's where it all happens. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Horna, let's go. Oh, good morning, Chattadonia. Good morning. Good morning. Y'all ready for a good one? Are you ready for a good one? Let's have a good one, my friends. So there it is. I already go over the plays. I did. All right, we got a minute and 45. A minute and 45 to like the video. Let's get that 1,000 likes, baby. Let's not run shy. I don't know. I think there's like 3 post earnings I might go after. Other than that, I'm going to be watching some of the more broader stuff and then just, I think, post earnings. So I don't know. It depends on the prices and the plays, but you're going to want to like that video. So let's get out here, baby. If you have any questions, you let me know. You need anything in the chat, you post it. Oh, we're almost at 1,000 likes. There you go. A lot better than yesterday. So, Chad, you got about a minute. Like that video. Make sure you're subscribed. Is there any questions? If you're not familiar with the data, PCE came in line. And the fact that people thought it would come in hotter, in line had a very positive reaction. This is our first day in a while where we are actually opening up in the green. So let's go. Less than a minute. We're almost at 1,000 likes too, baby. So close. Let's go. Let's go, baby. God bless you. Good morning. Hype train. Let's go. Shout out the Chad train. Let's go. Congrats. Yeah, again, Okta. That one's getting. Okta was up a lot more. Snowflake. I think you guys should have 1,000% on your snowflakes. They may have just fell out the money, but like I'm saying there, the post earnings, we may get an opportunity. All right, you got about 30 seconds, 20 seconds. Like that video. Oh, we need like 30 more likes for 1,000 before the bell. And 15 seconds left. Oh, my goodness. The report came in and it's good? Yes. It came in line. So the fact that it didn't surprise anybody and people thought it'd come in hotter and it didn't, it ended up being in line or positive. It came in higher by 0.1. Round 1. Fight. Alrighty. And we're off. I'm going to take a look at those snows. Snow option chain isn't open yet. What was the other one? There's Duolingo too. That one moved up a lot. That option chain is open. Oh, but they are not letting anything go through. The Duolingos are up 50%. For now, again, there's no Duolingo. What was the other one? Wasn't there one more? Okta, duh. I forgot. I don't know where our Okta plays are at. The Oktas are only up 100%, 50%. Yeah, again, that's like the 5th time that's happened. But that one, we did go out of the money. So, again, I did go higher. I think 2 standard deviations would have actually hit. I just went for the 3. So keep your eyes out for that. There's Snow. Where's the crypto plays? Coin. I still have those Maras. I got them Brian Maras. I'm down on those $2. So I'm down as much as Brian donated to me. A little more. Thank you, Brian. I love you. Mara. You got 150? My Octas ain't. And if 150, did you go closer to the money? Celsius. Yeah, Celsius wasn't bad. Celsius just had a high expectation. So, yeah, like low-key, Celsius is moving. That one could be a decent one. Let's see. Did that fill? All right. Ethereum 3,500. Oh my goodness. AI halted. It might. I don't know. But I made a play. Do we have 1,000 likes? How we looking? How we looking? AMD rocketing. Where's the other chip makers? We have 1K? Oh, there you go, baby. All right, not a recommendation. You will lose money. I have the, what's it called? I grabbed Celsius $90 calls for March 15th. I grabbed one of them at 20 cents. Not a recommendation. You will lose money. Alrighty. SMCI, I was just looking at those. Yeah, 863. That's a big bounce from yesterday. Where are the arms? And again, Celsius, I grabbed those for 20 cents. I think those are good for now. And then those squares are still up 100. Let's see. EW. Oh, Vanny. I forgot about that one from yesterday. A couple of the other bios still moving. Yeah, those Celsius is doubled already. That Celsius was a good pickup. Again, Celsius went from red to literally Celsius went up 5. Literally, that stock has gone up 5% since we bought that. That's insane. It was literally negative when we were doing those plays. My goodness. And then ARM 137, Eli Lilly, ouch. Yeah, watch if ARM goes crazy. Airbnb, VKTX is on the low. I don't know. I don't think healthcare is doing too hot. NASDAQ's up 0.8. Russell's the leader, 1.3. S&P is up by 0.5. And then Dow Jones up by a quarter, a little bit more. Weight Watchers came up 10. Oh, shit. It did. I'm still down on that one. I'm only down $400 comparatively. I was down $1,000 at one point. Oh, where's Cart? I forgot those puts are moving around. But yeah, Celsius was a good pickup. Yo, my Celsius call just disappeared. What the hell? Wait, Celsius halted? No way. Oh, what the hell? Yeah, Celsius is halted. I'm going to say my option just disappeared. I did not buy any Vanny shares today. I did yesterday. Wait, why is it halted? That's the weirdest thing ever. Unless they haven't had their conference call, but yeah, literally paused due to volatility. That's the weirdest thing ever. Nah, dude, that's weird as hell. So literally our calls just went up 100% in about 3 minutes, and then the stock got halted. Well, I'm glad you guys liked the video, though. You see, that's why you like the video in the mornings there. Amen. Amen. SMCI 880 now. That thing's running. ARM chilling. I don't know. NVIDIA's kind of going crazy too. Disney 112. That's big. So remember 112 here. Isn't this the level? Yeah, I believe 112.50. So watch out here. Disney, I mean, it might be able to break out, get a little bit of a run into next week, especially if that holds. Again, Celsius is halted. I have no idea why that happened. We got to play in there. Snowflake, they're bouncing. Again, Okta, they sold off a little bit. Okta, your cars are barely up. The ones near the money, though, are doing good. AI's on the high again. Mara's trying to break out. Snap on the high now, too. Snap is up 11.19. And then Airbnb 157. ARM is running, but I want it to follow with SMCI. SMCI is really going crazy. EW, what was that one play from yesterday? Oh, the Netflixes came down. The squares are up. Or was it NCLH? NCLH still up, but they came down. Bro, why is Celsius halted? That is the weirdest one out of all of them. Sold West Weight Watcher call. Are you selling cover calls on those? Not a bad strategy. Yeah, they've recovered 10 from the bottom. Snow on the high. No data pending, no. Redfin up to 8. Or no, they're up 8%, 6.5. WMS on the high. GM, ACAM. GM breaking out. Bro, Airbnb is doing very well. Is it the highest it's been? Yeah, Airbnb is about to hit a new 52-week high. Again, 158 leading into 160. Enphase up 6.5. And then Bonds is barely holding on. And then SPY's up 0.4. Russell's killing it. NASDAQ is not doing bad at all either. MPW is climbing up. And then Square. Bro, those Square pickups were great. I thought they'd go up a little bit more, but those Squares are 30 cents to $1 now. That's been a good one all week. Enphase, I have no idea. And then, bro, if Airbnb hits 160, we're going to love that. But Airbnb is about to hit a new 52-week high. That's like a subtle runner there. Mara's holding up. Booking still down. Where the China plays. Square keeps running. Let me know when Celsius. Oh, never mind. Celsius open. Bro, that's the weirdest thing I've ever seen. So Celsius literally almost 500%. 20 cents. It's now $1 on the ask. Bids at 40 though. It's back, but I have no idea why they just halt. I've never seen a post earnings halted with no news or anything. Like, literally nothing happened. And then Mara's starting to break out. Brian shares are coming back. Woo! Love you, Brian. AI dumping. Oh, yeah, I wanted to see Baba and Baidu. Yeah, Baba's still up a little bit, but the China names ain't getting love. Again, I think it was NetEase today. They had earnings. It wasn't too hot. ONON going up. Yeah, they're killing it. AI as well. AI got its first down candle. And then Coin down. Mara wanted to break out. And then watch SMCI. They just had a pretty gnarly run. Six two. Airbnb 159. MPW above 432. So watch if the chips turn around here. That'll be the other one to watch for. Data in 3 minutes? I don't know. Oh, pending home sales. I believe. I do think we have real estate data. And you have Chicago PMI. You have Chicago PMI in 3 minutes, and then in 15 minutes, you have home data. Airbnb, I mean, at this point, I would just argue they had the best earnings out of any of the travel names. That's it. Otherwise, again, like their earnings were good. Wall Street was weird with it. They didn't dump. But like, go look at Expedia. Go look at Booking. Any of those other names. They all did bad. Bonds got a huge little rocket here. HRL Foods ripping. HRL, yeah. Airbnb 160, man. Haven't seen that in years. But I'm down with it, man. I'm down. Yeah, Hormel's up 16. Very good call out there. All gold miners up. I'm seeing Airbnb. Yeah. So Airbnb, that's great. That's literally, it's on the top end of its range, but it hasn't been here in years. But you got a small little gain on Airbnb now, and then do every account. That's good. That's helping out the long term today. Let him do its thing. At LAN. Where's those Celsiuses at? Hormel's still going. Again, PMI data. It's regional, so it's not going to be too crazy, but that comes out in a little bit. And then Bond just had a random rally out of nowhere, outpacing now the SPY, still underperforming the NASDAQ. And then Celsius, that was a weird-ass move, bro. I think it's because our contracts were going to 1,000%. So, yeah, Celsiuses are 100% in holding. Again, Square, you got a nice one. $87. Am I buying Fubo for earnings? No. We might. I mean, we'll see when we do the run-up. I did Weight Watchers shares for earnings, so you never know. Mara flipped after about to go green. Same thing with Coin. Okta, 110. Unfortunately, our contract is still kind of neutered. You only got 30% on that Okta. We were too far out. Then Square's still up there. Leader of Yemen Houthis. We introduced military surprises in our Red Sea operations, which our enemies won't expect. Did they just give an earnings report? Like, what? Why is the leader of the Houthis talking? Like, what? This makes no sense. Chicago PMI 44. Estimate was 48.1. So Chicago PMI is a little weaker. And then Airbnb sold off after hitting 160. NVIDIA a little bit off the bottom. SMCI, ARM, Celsius going up again. VTNR, is that Square still or PayPal? Both of them. MO's even up. Pfizer, Disney. Baidu starting to move up. Gold is up 3. We're holding Vanny. Yes, for now. I think on the next like crazy pop, I'll probably get out of it. So, but it's not really moving today. It went up a little bit, but way more moves yesterday. Like I said on the watch list, I found out Vanny is an old company. Have you guys ever heard of remember I said it yesterday? Have you guys ever heard of a company called Second Sight? It's called Second Sight Medical. It's literally them. So they reverse split and changed the name. I've known about this company since like 2014. So they used to work on like eye drugs. That's why it makes sense why they had an eye drug and then they have that other GLP one. But it is like they've been working on eye drugs for a while. Yeah, eyes and ears, they were eyes. So that's why when I was like, wait, the CEO, I was like, well, how is he running this company? It's because it was the same company. Celsius, that was a good one, honestly. I mean, we got to sell the pre-earnings run-up on Celsius, but literally that plays almost 20 cents to $1. It's very volatile, but that was a good pickup. Celsius 52-week high now. I got you, bro. I got you. Let's see. COG-T went up a little today. Still down. I don't know. I don't think biotech land was too excited. Where's the other one? There's only one biotech I wanted to see this morning. Ironwood. Yeah, these guys, they dropped 33% and their data met one of the endpoints. Surprisingly. And then 10-year, 30-year bond still breaking out. SPY coming a little lower. I don't have VWAP up today. SPY, damn, we almost hit 5,100. I guess we already pumped it up around there. But you're right there, right near 5,100 this morning. My goodness. SMCI trying to come down a little bit. Yeah, pending home sales in like 12 minutes. Google on the high. Iova on the high too. Is inflation back? I mean, not off of today's data. Everything was just in line. Again, people were People were preparing for a really bad data set today, but the fact that it came in line, that was good news. So everybody's expectations were so high that now, you know, at the margin was seen as good. Yeah, the hiccups. Oh my goodness. Yeah, Chicago PMI came in a little lower. Bonds started moving ahead of that. CC halted. See if BNB comes back up. Netflix trying to climb again. I sound like a pig. I'm still holding my breath. CC on hold. Chemers, they had bad news today. I read that in the morning. Again, Mara dumping now even more. Bonds still going again, and Okta. Maybe the Oktas will wake up. And then Celsius, that one's killing it. Literally 75 cents on the bid, $1 on the ask now. I sound like a squeaky toy. Is the Okta scammy? No, I think Okta, we're just far out the money. That's it. Because remember, I said Okta has a lot of upside, but I didn't want to spend a dollar on the contract yesterday. And we got more time. So now they're climbing up a little bit, but like I'm saying, I think the 110s, these would have been your contracts. They were going for $1, but you only made like 300 on them. Let's see. Canada to require visas for Mexicans starting February 29th. Says Mexico, there's Celsius. Killer post earnings, man. Killer. So, yeah, that's literally 500% in the last, 20 minutes? 20 cents to over $1 now. Nice. See, I'm glad you guys liked the video. See, right? You guys see that bright and early? Y'all did good, man. Y'all did good. Oh, my gosh, with these hiccups. You can ghetto spread the Celsius, I think, because I don't know if that one's going to hit. I guess we're closer to it, but you can ghetto spread the ones below, get 100% and give yourself $500 of upside. Mara, I'm clapped on it. What made you decide to trade Celsius? They were down 5%, but their earnings were good. So I said it right when I played it. Somebody called it out in the chat. They were like, Celsius is moving up. And I was like, they were down, but their earnings were good. And then right as I looked at it, it was right at break even after gapping down. So I figured if it already recovered 5% earnings, it may have to come out. And then I looked at the contracts, and all of them, they had the premium kill. So like these are the contracts I bought. They were remember, we sold out a lot of these yesterday. They were going for 70 cents. 80 cents yesterday. This morning at the same price of yesterday, they were going for 20 cents. I literally bottom ticked them. So the idea was, though, post earnings, negative play goes green in the first couple of minutes. That's usually a sign. Sometimes it fails, but in this case, ended up working out. And now I have the hiccups. Nice to meet you. Why won't this go away still? What the hell is happening? Celsius call starts in 8 minutes? Oh, no way. So there's still a little bit of a catalyst there. You need a Celsius? I'm kind of down. I have them in my house. I haven't drank them in a while. I mean, I'm kind of down, though. You made progress, Octa Snow, Celsius. Thank you. There you go. I'm glad, baby. Glad to hear. There was definitely hitters yesterday. Like I get to experience, missing out on some of them. Octa scammed, but we kept it cheap. Octa's still good, but, those prices and where things ended up yesterday, I think that was a really good opportunity. So hopefully you guys have been learning off that. Weight Watchers, they came down. They bounced up a little bit, but still overall down. Nvidia's up. SMCI, stay in pin. ARM 2. Uber pop. Yeah, Uber's at 71. Again, watch Disney, that 112.50. That is the upside level. And then literally Airbnb hits 160 and then just comes down immediately. Bro, I'm still hiccuping. This is a long, drawn-out hiccup here. AMD on the high, Microsoft, now Meta. Meta, big candles. Watch out, all your big cap names. They may start to run up here. I've done the hold breath thing several times. It's just not working. I'm going to go to the bathroom. I'll hold it while I go to the bathroom. Get some water. You know, I need to maybe move around. I think I'm going to go grab a Celsius. Let's celebrate a Celsius today. I'm down with a little bit of caffeine. We could get rid of this. All right, I'll be right back. Follow me on Instagram at The Trading Fraternity.
The transference is to the broader market as inflation is behaved. Disinflation remains the narrative, so the broader context of the Russell expands by 1.3%. That's the dependence on rate cuts for the Russell narrative. The rest of the markets remain firm. Nvidia also strong on the day. So at the moment, yields down, stocks higher. The correlation is very real. Stocks are rising. We'll hand you over to the rest of the team for your trading diary. In the meantime, Raphael Bostic speaks a little bit later this morning. We'll get more Fed speak. Goolsbee, Mester and Williams reaffirming, I suppose, the long road to cutting. Dell reports the earnings after the bell. Friday, University of Michigan consumer sentiment, and we get the ISM manufacturing. That's it for Countdown to the Open right here on Bloomberg from New York. I'm Manish Krenny. The rest of the team will carry you through the rest of your trading day. Good morning.
Anywhere you go look, there's going to be a shortage of welders. There's a big learning curve with welding. Virtual reality simulates that exact muscle memory. I want them to get out into the field. I want them to make good money. And that's what this does.
I want to become welders. Bro, what the heck? Let me go to the bathroom.
Cataracts are the primary cause of
What the fuck? Bro, these are meta commercials.
We need more trained surgeons to address the problem. Virtual reality helps provide the training at a scalable level.
That's crazy. Bro, those are just meta ads. I thought that was an ad for like ITT Tech welding school. That was an ad for Meta. Bro, that's kind of wild. They're making all these virtual reality things. What stock is that? Meta on the low? Or on the high in the bottom right? Yeah, Meta is literally popping. Oh, you got real estate data in 2 minutes. I was trying to hold my breath. All right. Well, I wasn't done going to the bathroom. I was trying to hold my breath. Everything just moving so fast. On PTN, buy more, sell for loss. Only on 25 shares. You could sell for a loss right now. I do think there's a chance it comes up, obviously at the risk of it going lower, but I'm down to hold it for a little bit. I think yesterday, I don't think our price was too bad on where we got in. So I talked about this on the watch list. If you didn't know, second link, very good, especially if you're making plays and you're curious about the plays and what's going to happen. Especially one I've talked about a lot. That one was the last couple days, but like I said yesterday on it, probably going to hold it for a little bit. But if you don't want to take that risk, you could sell out whenever. Because, again, the catalyst, the whole data thing, that has already passed. Mara earnings were good, but then, again, Mara's earnings are very, it's one of those, like, non-GAAP type beats. So, like, if you look at their metrics, like, the rate of change is very good, but, like, they still lose, like, a lot of money per share. You know, like, so they're adjusted and non-adjusted, GAAP and non-GAAP. So I think GAAP was bad, non-GAAP was really good. Oh, my gosh. Arm pop. I thought you said arm poop. Nivda. Bro, bond's still running up. Pending home sales down 4.9. Estimate was up 1.5. That's really good. So market might like that. Pending home sales just collapsed. Some people were expecting -2.5 though on the month over month, but then year over year dropped too. What's the year over year number? 1.3? No, that has to be from last time. Yeah, month over month was down 4.9. Estimate was 1.5. Some people, Trading Economics says down 2.5, but I think that is good data. Again, today, inline data, no surprising reaction to the downside. This time around, again, weaker economic data, inflation not coming up, messing things up, or again, the real estate prices staying up. That's a good sign, or at least the sales not going up. Chug water. I've been drinking a lot of water this morning, but the hiccups just clapping me. Atlanta GDP now falls to 2.9 from 3.25. Celsius starting now. You guys want to listen in? Oh, I didn't even grab one. I said I was going to get one.
The year-over-year perspective. On a core basis, 0.4 rise, 2.8%. But both of those lower than they had been. The disinflation story continues. Personal income was up a great 1%. A lot of that due to the dividend payments that went out at the end of the year and the beginning of January. Wages and salaries were also up a decent amount. The dividend thing is kind of interesting, Katie, because what we saw was a big increase in portfolio management. Again, Wall Street's been doing so well that it is contributing to inflation. We were up 5% for that category of inflation, also helping drive it. But as you can see, the percentage change is much different. Housing and healthcare as they have. But we didn't get the big housing pop that we saw in the CPI, which made people feel better. So what now? Well, we've got more data coming up. But Jay Powell is going to be the issue going forward. He testifies on Wednesday and Thursday, I believe, of next week. And we will be carrying that live. That's really going to be the risk moment for markets in terms of the Fed trying to reset perceptions.
Yeah, he'll actually be testifying during this show, so a lot to look forward to there. What could we expect him to say? What do you think the tone of that testimony will be? Well,
after this PCE report comes out, relatively decent, and we did see December revised lower, he can make the argument again that inflation, progress is being made on inflation, but there's still more work to do. We have a little bit higher monthly inflation in January, so we want to wait and see if that continues into February. We'll get a February CPI report before their next meeting. And so I don't expect a whole lot different, but markets have been very interested in whether or not the Fed is going to give them guidance about May, June, or even in July as a first rate cut. So we'll see what he has to say.
And it's always fun to hear what lawmakers ask Jerome Powell as well. So that should be a lot of fun. Bloomberg's Mike McKee, thank you so much. And let's take a deeper dive into the markets right now, because I'm pleased to say we're joined now by Mandy Zhu. She is head of derivatives market intelligence over at Cboe. Joining me on set, Mandy, it's great to see you.
Great to be here, Katie.
So it's a big macro day, and it's interesting. If you look over the course of 2023, it feels like the FOMC, CPI, some of these jobs days, they turned into non-events. That's changed a little bit year to date. If you take a look at some of the numbers here, what does that tell you? Is that maybe a sign that broader volatility is coming back, or how are you reading that?
So what actually stood out to me was in the lead up to today's PCE, was just how much, there was lack of fear across all asset classes in terms of levels of volatility. So if you look obviously at equity vol, VIX in the low teens in the lead up to PCE, but not just equities. If you look at credit volatility near historic lows, FX volatility also multi-year lows. I think what that shows is that investors, yes, sticky inflation clearly is still an ongoing risk, but on the back against that, people are weighing, better than expected economic data, and I think that's that's why markets have been so resilient year to date, is that even though inflation, as we saw today, it's coming down, it's making progress, but it's still sticky. But overall economic growth is picking up, right? And within equities, earnings have been great. So I think against this backdrop, people have gotten a lot more, I think, constructive.
And when you think about, what we're seeing in the VIX, what we're seeing in some of these skews, do you view that really as complacency or exaberance? I mean, how would you characterize the fact that you don't see a lot of demand for these downside hedges?
That's a great point. So to give you some perspective, measures a skew in the S&P, so that measures the demand for downside puts versus upside calls.
8,000 milligrams of caffeine
recently, right? So there's very little demand for the downside protection, and there's actually right now a lot of demand for those upside calls.
200 milligrams?
Perhaps, but one thing I would point out, and I think that is kind of what is underpinning this flat skew.
I want to listen to it, but the Celsius thing is on right now.
Over the past 2 years, markets have been more volatile on up days than down days. It's very unusual. Typically, we think about stocks, crashing lower and grinding higher, and over the past 2 years, it's been the opposite. We've seen grind lower, moves and then rip higher, right? Think about Q4 last year. So against this backdrop, I think it's not surprising that people are turning more to call options to help manage that upside volatility, that upside risk in the market.
Should that make me worried? I mean, when I hear that, it sounds like, okay, maybe we're entering this crash up environment again. You're really not seeing the demand for.
I don't see the Celsius one though. So we'll see. But other than that, we're still holding up from the PCE gains. Some people talking about real estate. Again, pending home sales just slipped there, so that's somewhat good news. Kind of helping out, but pretty much, I mean, once again, data could have gave us something. It didn't, and now we're going to be looking ahead for the next things. Lennar is up 1.8. Lennar, Pop, SMCI coming up. You guys said ARM and Vanny. ARM is near the high. Yeah, Vanny woke up. Yeah, we need that thing back in the 4s. Yeah, Meta's looking really good. Again, 491. I can't believe those ads were Meta, bro. That was crazy. PSTG, that was another earnings. Pure Storage. So they're still killing it. Celsius holding up. Disney and Airbnb look the same. SPY going lower. So, again, chips are going up, some of them or most of them, and then SPY is lower. Russell is the leader. Dow is close to going red. We're kind of in that same setup. It's been about, 38 minutes? How is volume on this day today? 7 million. I mean, it's better than the last couple days. It's only been 30 minutes. Remember that one day we did 5 million in the first hour. Airbnb shares are positive on every account, yeah. Even our highest average, but even on some of the other ones, I don't know, I think Colt YouTube and Colt Sister, they might be up 6 to 10%. Let's see. No. Yeah, you have 6% on the YouTube account for Airbnb. And then, let's see, Colt Sister. Colt Sister, Airbnb. It's up 2.7. So the YouTube account has the best one. AMD, 52-week high. AMD kind of taking off from here, and then SPY, a little bit of a chicle. That kind of messed up VWAP a little bit there. Let's see. Celsius still. AMD is rocketing. My goodness. Check if Intel, I know Micron's down. They were the leader earlier in the week. Airbnb up 75, 77. Hell yeah. If you bought the dip on Airbnb, I mean, Airbnb, it's one of the top performers, from those $80, $90. Again, held up in, I think, top 5 stocks last year. AMD, Intel kind of moving. ADIL, that was the one yesterday, I think. ADIL was a biotech from yesterday. They had data. They're still continuing. So watch out for that one. That one might be able to come back to life. Again, Vanny just dancing around, but nothing new. MGNI. Mara getting flushed on now. Damn, I came back and then I got flushed on that. Yeah, gold is doing very well considering, all the dollar move. Bro, SPY is flushing. So interestingly enough, your chips are holding up, but my goodness. So literally you just sold off a decent amount of the opening. You are still very elevated from when PCE came out. So to give you a general idea, you're still up 1/3%. And then that's like what? That would still be higher than the PCE thing. So very, very big. No news hit. I see West concerned about Russia rekindling Moldova's frozen conflict. No, I don't see anything coming out. People are talking about the oil ban stuff, like Russia banning the exports, but I don't think that's like causing this. And then especially unless we get like an immediate energy move, it might be, but for now I'd say no. NVIDIA to 800. I want to see if the chips actually come down here. So again, like the other days, you would watch chip makers go down and everything else. Today now, we actually had a little bit of strength, but now you're watching the chips hold up and then everything else kind of sell off. So very interesting compared to the last week and how we've opened up and traded. UVXY on the high, it's still in the red. NASDAQ still up, everything up except the Dow. And then Russell once again outperforming. Microsoft still in the green. Apple about to go red. Amazon was looking good. Netflix went red. Square. Vanny. Oh, Vanny's kind of moving now on the high ticker. My criteria for averaging up. Pretty much everything else needs to be up. Pretty much no alternative, right? Like Abivai, there was a lot of names that were up at the time, and then even the names that were down, I didn't want to add to them, so I averaged up on Abivai like 130. So just really depends on like relative valuations and then how I feel about something more or less. Yeah, Vanny's awake all of a sudden. And then SPY still selling off, man. So literally you just gave up half of that 0.3 now. I would say half of the gains pre-market you've now given up. I think once you get over here, you drop like another half a point. Netflix flushing. But literally like half of PCE gains have now been given up. We are still well above where the PCE came out. No news or anything. REITs are still up, surprisingly. Square or Celsius? Celsius contracts are calming down, but the stock's just holding. Coin flush. I know Mara's flushing. Yeah, coin's down to 197. Yeah, all the crypto plays. Honestly, I don't even think crypto's up. Crypto's down intraday, but up overall. Oh, sell the Airbnb calls? I forgot about that. Maybe. Let's see where they're at. I think these are still the same price. Yeah. I want more contracts. I want to sell above here. I want to sell above 220. So I'm down to wait for it a little bit, but the idea is there. Because again, we could sell cover calls on Airbnb. You're going to be able to pull in like $1,000 to $2,000 off that. Celsius calls. I'm up 100% on them still, but the stock is up. The premium's definitely calmed down. Coinbase. You want to put the entire YouTube account on black and video roulette? Not bad, not bad. Maybe in 30 years when we're ready to sell it, and then we'll see what happens. But for now, I'm liking the long term. We got Airbnb up. You got Redfin climbing up today. You got all the Ubers, but we got a deposit in a week. I'm down to keep building. Yeah, 420. Vanny's waking up. I mean, I'm down with it. What's our break even at like 460? So we're right there. Pre-market was just the what's it called? The PCE, and it came in good. It actually didn't come in moving at all, but everybody was so cautious that it was going to be hot after CPI. PCE coming in line just instantly sent the market up. The one thing this morning that I thought was weird is that everybody ignored personal income. Personal income went up by 1%. I thought that was very suspicious. That was the highest personal income reading in the last 12 months, I believe. Yeah, bonds are selling off right now. Just literally when the market sold off, so did bonds. Bonds are doing better than the SPY, and now I guess technically bonds are outperforming the NASDAQ. Some CI still holding. ARM. Is that beyond on the high? They got a downgrade today. God bless the call, baby. Pay the plug. Biggest day ever. Oh, man. Way to make the biggest day ever. Amen. I love it. Welcome to the markets, baby. Vanny's all-time high was 562. It wasn't. It had a reverse split. I think they were as high as like $40 when they were eyes. So I remember trading eyes back in the day. I'm telling you, this stock blew my mind yesterday, but I don't like it as much after finding out this is a company from like 2014. So this company has been trying to get an FDA approval for 10 years. And then now they got an Ozempic one too, mixed in with dry eye disease. Vanny. Vanny is eyes. If you remember a ticker called eyes, yeah, that's Vanny. They just switched the name. It's the eyes is Vanny, Vanny is eyes. You're wondering why you're charged. That's what I was saying yesterday. I didn't know I got filled because I was like, wait, why does it say I have these at this price? And I was like, none of this makes any sense. And I was like, oh, it may have been an old reverse split. But then, like, I realized I had like one share or a couple shares of eyes back in the day. And then it all switched over. But I never realized it. A wildfire in Texas becomes the largest in state history, growing nearly 1,700 miles. Oh, man. GCT, didn't they buy someone today? And then Weight Watchers came right back down. Unfortunate. A lot of names are like that this morning. Senate Majority Leader Schumer aims to pass short-term funding bill as soon as tonight. Majority Leader Schumer says he hopes for final passage of stopgap funding bill by this evening. The video on the low, SMCI and ARM holding up a little better. Celsius, dude, I can't believe they halted it. I feel like without a halt, that thing would have been going even crazier. But yeah, it's the contracts are chilling out after this thing staying pinned. Celsius, we have a lot of time on it, but that one, bro, that thing was moving. And then it just calmed down now, and then now it's climbing up still, but those contracts are not getting juiced the same way. Baba on the low. Watch out again. VWAP got messed up. Bonds have been selling off since the market has. Visa, MasterCard, Discover. They're on the low. Remember, those were doing good the other day. You said on earnings, the 13%. That's kind of what they did. Yeah, but Celsius, we didn't buy the pre-earnings. So when we bought Celsius, I mean, we bought it this morning. It was trading at like $68. So but that's why, like, we got our contracts cheap. We're still up on our contracts over 100%, but the general idea was, like, 10 minutes ago, those contracts are going for 500-600%. Now we only have like 100, 200, even though the stock's still up. Yellow on that long-term caffeine play. I am drinking a Celsius right now. It's very nice. It's very nice. And the long-term is hitting another high today. Again, Airbnb, Disney, a couple of others. I would like to see Airbnb go back up, though. That would be nice. It would be nice. 40 cents away from breaking even. Nice, baby. Let's go. I think we are breaking even on there now. Like 446 or whatever. Coin stock. SQM on the high. Didn't they have something? SQM had something, or just sympathy? There's Tessie. Again, NVIDIA. I guess NVIDIA's up too. It just doesn't seem as strong as the other guys. LT growth stocks. PayPal. I think that's my only growth stock I like this year. It was Disney, but now we're up like 25% on Disney. So I do think, I think PayPal. Or maybe like Alibaba, even though it has a dividend, but, you know, that depends how you want to take it. Watch if ARM breaks. I'm looking for ARM 150. That's what I really want to see. I would add MO, yeah. I mean, I'm thinking either MO or Pfizer by Friday. We could let it wait a little bit, maybe give it a week, but I do have a deposit coming up. I'm thinking either MO or Pfizer. Why don't you like Tesla growth stock? Because it's still expensive. So you're not buying it like cheap at like a lower growth rate. Like you're still paying for Tesla at a price as if it's going to keep growing a lot. So like if I wanted growth, I want like a real good deal on my growth. You know, it's kind of why like it took us so long to make money on Airbnb, because we bought it at a higher price. It had to grow into the valuation, stuff like that. Celsius, Vanny, and I hit another high. Coin may have growth, but the only problem with Coin was it was just at $40. Buying at, I mean, I'm almost green on my $200 positions, but I don't know how I feel about them at that prices. VKTX selling off. So we're back to green on Vanny from yesterday, and then that's getting a nice run. My target for Vanny, like I said, I just get one big, I think the next sell-off or next like run-up, we could sell off. So just like yesterday, I told you guys, speak now or forever hold your peace. Pretty much all of these pops, it's either we get above here. I am looking for another $6 test, probably around $6 is where I'm looking to get out. But other than that, or if I really feel unstable, you get out now. But I'm kind of down to let it ride. And again, I'm coming off some gains off the first set. I have a couple of REITs. We have IRM, MPW, and O. And then Mara still clapped. Mara's actually moving around, though, all things considered. And then ARM is climbing. ARM about to hit 140. Let's see. SPY back at VWAP. Again, Vanny had a nice, that's literally like $1 and change rally. Again, yesterday it literally sold off around these levels. It hit the 5, the high, or the middle 4s, and then went a little crazy. Cowie, what up, baby? IRW. I kind of wanted to play IRWD because their data met the endpoint and they're down 38%. I'm kind of like, yo, that doesn't make any sense. So I'm pretty sure IRWD, their data was actually good, but then everybody just dumped it. I guess some people are saying the results are mixed. Yeah, this 2 secondary goals failed the study. So primary endpoint was met, but then their secondary endpoints missed. Oh, ATUS, I forgot about that. Celsius is good. We still got 160%. It was up 500 at one point, but it's kind of starting to stay pinned now. Let's hit him with the ghetto lockup on Vanny. I don't know if it's gonna have too big of an effect. I don't think were we able to confirm that it even like the ghetto lockup. We don't. It's all superstition. Well, I don't know. You think it works? I mean, I could try it for you if you want. I'll put my Vanny shares. I'll put them up for sale at 100. I got you, bro. I got you. And then who was the other one? Airbnb. Oh, Square. Oh, those came down. LH on the low. And then SPY right below VWAP. Bonds came up a little bit. So again, remember, bonds and markets sold off there, but bonds are closer to a new high. Now bonds are outperforming everything except the Russell. What'd you say about Vanny? I put my shares for sale at $100 a share. It's the ghetto lockup. It's just kind of a superstition on some of these plays that if you put your shares up for sale at a higher price, nobody could borrow them against you. So different results. Sometimes some people think it has an effect, some don't. So that's why somebody asked me about it. I did it for them so that they could they could see it, and maybe it works. Maybe it works. Maybe it doesn't. Celsius dump. Womp, womp, womp. Just watch after that halt level. See how it trades around there. Doge running. I mean, we were just talking about that yesterday. Yeah, now I'm only up 70% on the Celsius. Bro, that was a hitter. They were like, hold up, halt it. Vici on the high. Yeah, ARM won't get above 140. That's what I was saying. Last time I went above 140, it went crazy. I want that to 150, you know? My Shiba, I have no idea. All I learned yesterday is that, like, I mean, technically, I think I bought it higher, but my Coinbase does say I'm up on my ETC. But that was the thing that shocked me. I was like, damn, ETC is literally like, I bought ETC at lower prices. But a lot of those, even the Stellar's coming up. But the way all of those shit coins are moving kind of has my mind blown. But we did even talk about Doge a little too. We bought some ETC at 80. I think at 60. But then we also bought some at like $19 as well too. So that's why I'm like, it says my average price is $19.50. I think my average price is around 30. I think that's like the true average. But my goodness. That's why when I'm looking at it, I'm like, damn, that actually all came back. So I guess there's a little bit more, but I'm down. I mean, it's not like I needed it. You know, the whole idea, all of the trash portfolio in crypto, if all of those come back up again, oh my goodness. But I will look to exit if that does happen. Yeah, Vanny's still holding. SPY right below VWAP. Tried to short MSTR. Maybe shares. There's just a wide spread. Puts would be a little crazy. Nat gas numbers just came out. Where'd it go? Or a couple minutes ago. I swear I just saw him. And then Sky News Arabia tweets, Biden considers conflicting narratives about shooting during aid distribution in Gaza. 50-50. Like when we say that, 50-50. Good, good, good. Rhino. God bless you, bro. Good morning. How you living? RXRX on the high? And Forum, where's 4? Remember, they had that buyout offer yesterday, or people were rumoring it. Tesla, DYN on the high. Biden, Israel, Hamas ceasefire probably won't start by Monday. Well, remember, that was some of the good news people thought at the beginning of the week. Where's oil? Oil's still kind of elevated, down, barely moving, honestly. I kind of missed those days where oil was moving 4 or 5%. DYN on the high, CRM breaking out. Oh, I forgot about CRM. Yeah, CRM's starting to move a little bit. Oh, that Phil? Goolsby or Bostic? We'll get either. I mean, again, I don't think a Fed reporter has moved the market in a long time, or a Fed speaker. It's actually like kind of crazy. You know, like they were moving us a lot more, but until the data really changes or that dot plot, I think these Fed speakers are duds. That is the craziest part about all of it. Wall Street Bet says Celsius to 100. Maybe that's why they halt. I can't believe they halted it for no reason. And then it just literally loses all that steam. So we'll see. But I made a play. This play, I was talking about it yesterday. Not a recommendation. You will lose money. I did a CRM, Salesforce, March 15th. I grabbed one of the 345 contracts, call for 30 cents. So remember, I was just telling you guys yesterday, I like the upside on CRM. But remember, I was telling you there's a good chance we could pick up every one of those contracts for a big discount. Well, these contracts are going for $2 yesterday. So even this morning, they were going for 50 cents, even as low as 15. They're kind of all over the place, but I'm down with one of those. I spent about $30. So if they break out here, if they kind of do with a Celsius, start off small, then start to move, maybe we get lucky there. So $30 post-continuation, but it's just literally cheaper. This was like trading the pre-earnings, but now 90% off. Well, Celsius, we'll see. Our calls are still up, but literally they popped up first 5-10 minutes of buying, and then they spent the last hour just slowly working their way down. They did run up a lot. Celsius did. They just were scamming, though. It's okay. It's okay. I'll take it. But again, I like this CRM. I hope our deal works out. I mean, again, CRM, if they have the ability to go crazy, I just wasn't willing to pay for it yesterday. So now, 2 standard deviations back to $30. I'm down with that. Octo is nice if we got closer to the money. ESTC, ACAM. I think ACAM has earnings. ACAM has a bunch of new contracts. Looks a little suspicious. Yeah, I think people are buying sound for the earnings. ENVB. This thing was going crazy earlier. Literally, Enveric Biosciences. ENVB. So this thing was already up. Let me double check what it was. But they're popping again. NASDAQ popping. Root on the high. What is it? NVIC signs non-bonding term sheet to pursue exclusive out-licensing of 3 compounds. They have an AI drug, too. The company's Prisberry platform, computational chemistry, and AI drug discovery system. They're talking about licensing it out. So, yeah, ENVB, they're licensing it out, their drug development technology or some drugs. Bostic, they're all the same. Maybe I'm just becoming too much of a reductionist, but I do think that they're all going to say we don't like the recent data. We got to go slow. We're not confident, but we're going to cut rates at the end of this year. So I think Bostic he's usually bullish, but he'll throw in one hawkish statement, talk about cutting rates, maybe talk about QT, and then they move on. SMCI breaking out too. ARM, NVIDIA is trying to climb up. ARM above 140. What do you mean Bostic has been historically hawkish? I strongly disagree with that. I don't think he's been historically hawkish. I think end of 2023, he was even bullish when a lot of other people were hawkish. I don't know if you know Bullard, but remember when Bullard was talking 5-6%, my man was talking about that being too much and thinking that things are looking a lot better. Bayer proposes Jeffrey Urban as member of supervisory board. Bro, literally ENVB, biotech with licensing deal, they're shooting up. All right, man. That caffeine and all the water are already hitting. I need to go to the bathroom again, Chad. They're playing the welding commercial again. I can't believe this is a damn Netflix commercial or Netflix Meta. SMCI breaking out, ARM, AMD, all those chip makers going nuts. Bro, SMCI is pretty unreal. That's 9% today. My goodness. Let's see. Welding simulator. I told you, welding simulator. I remember watching that on TikTok, but now Meta's making ads about it. ARM on the high, SMCI. So again, the mega cap chip names, AMD, ARM, SMCI, NVIDIA, they're all just going nuts here. Because like SPY and Bonds are in their own little world. I'm sure you could tell right now. And then Russell's leading, but all the chip makers are doing their own thing. So let me see. The chips are scamming. Just more broadening out. 50-80. Everything's just taking time.
Though for
the Ozempic revolution.
Typically have to take it
Follow
within
me
a
on
certain
Instagram.
number
I'm at the
of
Trading
hours
Fraternity.
of eating.
I will BRB,
and so
my
as opposed to giving it weekly, you have to think about when you're taking it in the course of the day, and that may be trickier for people to comply with.
What did you learn about whether they can use this in kids? Because child obesity is a big problem as well.
It is approved for use in children, and the American Academy of Pediatrics actually, in their guidelines, say that for children 12 and up, it should be part of the options that are explained to parents. All options should be explained, including medication and surgery. And for these kids, you think, oh, kids are just overweight. No, they're pre-diabetic. They're taking heart medication. These are people with the comorbidities that adults have. Plus, they're going through adolescence, so they're being teased for their weight. So this could really be a game changer for kids who are, where bariatric surgery was the only other option. This could be another option, but there is one big caveat, and that is trial data is only available for 1 year in this age group.
So you wonder about the long-term impacts, wonder about the access and who's paying for all of it. Right.
And in the doc, we take a look at two families. One of them right now would like to take a GLP-1. Their daughter is being teased every day. It is impacting her mentally in addition to physically. And the family cannot afford it, so they are just not going to take it.
And what about broader indications or more? I mean, even the idea, the potential ability to curb alcoholism. I mean, is that a real thing?
Yes, because this works with the brain. So it basically makes you not want to have too much. So for alcohol, for drugs, for all sorts of kinds of addictions, this medicine is being considered and investigated right now.
All right, Melissa, stick around. We're going to get a bit more on the stock impact, of course, of these weight loss drugs. It's a conversation we've had before with Jared Holes of Mizuho Securities. He's the healthcare strategist there. And I mean, you know, we've talked about this with you on set as well. Lilly and Norvo, the front runners. I assume you believe that will continue for some time, Jared.
Hey, David, thanks for having me. Yeah, I think these are the two front runners for the next several years.
Are they talking about giving Ozempic to kids? Like, not like for who need it for diabetes, but for weight loss? Bro, ENVB, that one's running. So, again, they have a licensing agreement, just a small cap biotech. It'll probably go until the money runs out or the hype runs out. So kids don't get bullied? I thought they don't bully anymore. Like, I thought they just, like, get weird with you on the internet, but in school, they have to be really nice to you. Ozempic I'm pretty sure Ozempic is like $1,200 a month, $1,000 a month. It's like $250 a shot, and you need 4 shots a month. Yeah, it's expensive. You obviously don't know many kids. Well, I am an adult. I know my nieces and nephews, but they're like kind of really young. But yeah, well, I just go off the internet. I thought we don't bully as much anymore. I thought that's why we kept getting canceled. I mean, we got rid of all of these things. We canceled all these people. And then kids are still getting bullied and they have to take Ozempic? Like, what? Celsius. Watch ENVB and ARM and those chip makers. Those are the number one spot. CRM came up a little bit. CRM and Celsius, I think those are good post-earnings. We'll see if Celsius, I want to hear that conference call, but I couldn't find it. They have online. That's why I thought it was more online bullying. But even then, though, that's crazy. They're talking children as young as 5 to give them Ozempic. So I don't know about how like other diabetes medicines work. Like I don't know if there's kids on them that young. But again, if you have diabetes, it's one thing. But they're saying for weight loss. Fed speakers soon. I think in a couple minutes. And then SPY getting a little bit of a green shoot. Bonds about to hit the high. Maybe bonds hit new high as SPY gets above VWAP. Vanny, it's another biotech. So again, you got a couple of these runners here. ENVB and Vanny. And then AMD, that was Terran before anything. Bostic, Eat, and Goolsby. I like Goolsby more than Bostic. I didn't think I'd like Goolsby, but Goolsby has grown on me. I don't know, something about Goolsby. He's fun to listen to. I think he likes his job. I don't know. He seems kind of nerdy and like economic nerdy, and I like it. Oh, where is it? Where is it? I'm trying to see the Bostic one. It says it's live. Fireside chat with Jennifer Burns. He's done like 3 fireside chats. No text. Yeah, there is. That's why I'm like, I see live Q&A. I see there's going to be an interview. So it's going to be interesting. We're not going to get the pre-written text, but I don't know. Bostic Mace. If it was a chart that showed, it looked like a biotech, like my faith in what these dudes are going to say, it has just dropped off completely. Because again, a lot of it is just, they say rate cuts, say good things, say one thing bad, and then that's it. And then just move on. UBS, big red candle. Down by 0.42. It's still up by 0.42, but they just sold off like 20, 30 cents in one candle. UBS. You think pharma companies are the next bubble? No, pharma's been like this. I've always said it, like, you know, even when like GameStop and when the market moves crazy, like pharma has been doing that forever. So like pharma trading well above valuation, that's happened since the beginning of time. When they fail, they die. When they do good, everybody overpays for them. I mean, go look at Eli Lilly. Go look at Ozempic or any major drug recently. So I think it's just always going to be like that. Yeah, Moderna. There's a lot in biotech land, but it's either a lot of buyouts or a lot of failure. That's it. But you're not really. I don't think it's going to cause like a bubble. VLCN. All right, we'll put it up. But please don't pump it. I see homie keeps donating there. It is up 78%, so GG. I hope it works out. But be very, very careful. By 2040, I read 40% of adults will have some form of cancer. My goodness. SPY moving. Well, we're still in this weird data reaction. I mean, keep that in mind. You know, you had PC this morning. No surprise, got us shot up here. We're still maintaining those gains, too. There's Vulcan, ENVB, and then Vanny. Those are your random runners today. And then there's one more. Ironwood is just clapped. When was the last time they were at 8? Fed Bostic, inflation came down much faster than I'd expected. Fed Bostic, last few inflation readings have shown it's going to be a bumpy path back to 2%. I believe he said that last time. Over there it is, February 29th. Where is it? It says there's a live stream. I don't know. I think we might have to pay for it. Usually this is by the Atlanta Fed. They should have it. Bostic says we have to stay vigilant and attentive. Last few months shows is going to be bumpy, coming back to 2. Yeah, paper Fed is a real thing. Hain. ENVB's coming back up. Bostic probably appropriate to reduce policy rate in the summertime. Yeah, I think we're going to have to wait for Goolsby, but I can't find this one live. But he is talking right now. Classic Bostic. That's bullish. It's very bullish, but he said this before. I think last time we heard from him, but he's saying, you know, that's more bullish than not because he's advocating for a quicker rate cut than not. Yeah, but he said this before. That's the thing. That's why I'm like, all of these guys lately, no matter what they say, I don't think anything's new. So in this case, Bostic, that is bullish, but no reaction here with bonds or SPY yet. We get data in 3. What data? Kansas City Fed? The Bank of Chicago. Yeah, IRM, that one's crazy. Yeah, first time he said it, we were at 460. Yeah, I mean, when he would say it when we were lower, the market would love it, but as of lately, it's still the same story. Bostic says economic data will ultimately be our guide on when rate cuts start. There's data. There's Kansas City Fed manufacturing. Yeah, that just came out right now. Literally -4. Estimate was -2. I don't think it's going to cause a real big move. But there is something. AM Dizzle's still climbing up here. ARM came down. IRM's been going all day. These REITs haven't been too bad. You think it's going to be slow throughout the day? I mean, kind of. We might get bigger moves because of the data today, but I mean, after these Fed speakers, like later in the day, middle of the day, it may slow down, but I think the range might be a little bigger. I mean, we're already trading a little differently than the first couple days of the week, so that's at least good news. By Dulo today. What's up, bro? Crazy how small the world is. What's up, man? Small world. Cold world. Won't lie. Won't stop till the races won. Volume's a little better than yesterday. Still kind of lower, though. So remember, we've been getting some low volume days. I mean, we are, an hour and a half in, and we're at 17 mil in volume, which is good. The other day, we were doing like 5 million an hour. So we would have had like half this volume yesterday. Yeah, Kansas City Fed manufacturing, actual 3 -17. Kansas City Fed composite -4. Microsoft announces public preview of Microsoft Copilot for Finance. So again, I think that's part of the AI stuff, no? The Copilot thing. Microsoft announces public preview of Microsoft Copilot for Finance. All right. I got Goolsby. There's no audio, though. These old guys haven't figured it out. But I think this is amazing. Bro, Goolsby, he have like a bright red phone. Like, you know what I'm saying? Like, this looks like a prop. Like, he have a bright red phone. Oh, and we have a bright orange peach. Brought to you by Bradley Frizzle. Are you kidding me? Oh, my goodness. Ladies and gentlemen, boys and girls, Bradley Frizzle and the peach. Oh, no, let's go. Oh, my, are you kidding me? Are you kidding me? God bless you. Thank you, Bradley Frizzle. We needed that. Wow. Maybe that's why the sound wasn't coming through. The peach was making way. Aren't peaches pink? I think peaches are orange, sir. I don't know. You may have been scammed your whole life. Yeah, I thought that was an apple. What do you mean peach isn't orange, huh? Oh, man. Wait, no, peaches are peach. I didn't think about that. Peach is a color, huh? That's crazy. All right, going lower here a little bit. SPY about to hit a new low. NVIDIA flushing out of nowhere considering how all the other chip stocks have moved here. Pfizer dumping. Microsoft, that Copilot news didn't affect it. Yeah, Pfizer down to 26 again. NVIDIA still green, but literally into the low. IRM, meanwhile, is like, woohoo, we made it. I think Vanny's still holding. Tessie on the low. Apple iPhone 15 sales not doing well. That was in the morning. We had some of that.
So welcome back, everybody, to another webinar organized by Princeton for everyone worldwide. We're very happy to have Austin Goolsby with us. Hi, Austin.
Right.
Hi there.
Bond's going down.
Austin is the president and CEO of the Chicago Fed, and he will talk about monetary policy in this unusual time. So we will run something special today.
JK, baby, God bless you.
What is the unusual time? So when I think about it, three things come to mind. One is soft landing. So we have a vertical beverage curve. I will talk about that. And then we have a lot of monetary policy changes without monetary policy moves. And then also we have in the long run, more structural, we have a different fiscal situation. The debt level will be much higher. What are the implications of that?
I commented on there.
So let me start a little bit to talk about soft landing. So we have a huge decline in inflation without a recession. And that's very uncommon. We had an earlier webinar with Alan Blinder going through the history of soft landings and non-soft landings, hard landings. The question is it primarily because energy prices just went down? We were lucky about that. And supply chain frictions were lifted over time, or is it really monetary policy which moved it? The other thing is we still have a continued labor shortage. That's the case despite this huge immigration in the United States.
Bro, bonds kind of dumped pretty big there. So
and also in Europe,
much.
where
I thought bonds were going to recover a little bit.
There's some recession, so the economy is not growing so fast. But nevertheless, there's a labor shortage. This might also be because the COVID situation has changed the attitude of working from home and other different labor arrangements. But concerning the beverage curve, which, is the labor market from a monetary policy perspective. You have on the x-axis, you have the unemployment rate, and on the y-axis, you have the job openings, the vacancy rates. And typically, when the unemployment is high, there are few job openings, and when the unemployment is low, then you have a lot of job openings. So it's a downward sloping. And you see this, during the Great Recession, after the Great Recession. And the red line here is how the beverage curves looks like this. And we're currently in the last year, we have the soft landing. You see a vertical decline in the job openings.
And the bonds came down here too now.
Not an increase in the unemployment rates. So that's a new phenomenon. It's like a soft landing. A phenomenon.
This is a setup where maybe bonds sell off end of the day,
we have to explain why this happens.
Just still stays up.
But there are also other commentators out there who think we should not
IRM had really
so
good
much
earnings.
weight on vacancies, because in today's HR arrangements, just leaving a vacancy open, just let it stand there is very costless. But removing a vacancy and then reopening a new vacancy later on is very costly
off the bottom.
Because HR systems are set up this way. So perhaps the vacancies are less meaningful, but overall we see in the beverage curves a very, very different phenomenon. And that's unusual. Let's put it this way. A second thing which is very unusual is that, since the summer of last year, the policy rate has stayed pretty much constant. But if you look at the term spread or the long-term interest rate, it moved dramatically. So term spread went up significantly, almost 100 basis points in the last summer to the fall, and now it came back down again. So even though the policy rate hasn't shifted much, Wall Street's attitudes towards the longer rate has shifted a lot, and hence people borrow on a longer-term interest rate, not on the short-term policy rate. The financial conditions have softened and tightened first and then softened. So there was a lot of policy moves without policy tightening changes without policy moves. And the third, I think is not so common. It's quite uncommon around. The other thing which is unusual in a sense, is that we have unusually high debt, and even projecting forwards, we have a high debt level. So if you look after the Second World War, of course, we had more than 100% debt to GDP ratios here. That's from the CBO, the Congressional Budget Office projections. And then we had a huge increase in the debt level, also then the COVID spike. Then inflation brought the debt to GDP a little bit down because real debt was inflated away. But the projections going forward are going up significantly, almost to 200%, given the current projections, given the current fiscal rules and current government laws. That raises a question, will this in the long run, who is determining the long run inflation? Will it be the monetary authority or the fiscal authority? And will there be more interference from the policies of policymakers to central banks and hence undermine central bank independence? Will there be a fiscal dominance regime? In particular, when the debt level is so high, an interest rate increase by the Fed will actually lead to huge government expenditures. And of course, they have to cut back other expenditures. This is very unpopular, and there will be pressure on the Fed not to raise interest rates. So the fiscal dominance might be a threat, and that's something one has to take into account as well. Of course, to determine how the inflation then will be determined, one theory is the fiscal theory of the price level. And typically the equation is that the value of all outstanding government debts in real terms divided by the price level, so that's the real value of all outstanding debt, is just the expected present value of primary surpluses. Like typically when we price assets, we use cash flows. Here we just use primary surpluses. That's what the bond holders get. But there might be a bubble term because the primary surpluses going forward, they're all projected to be negative. So how can it be that the treasury value, real value of all the US treasuries is positive? It's because there is a bubble term as well. And the question is, how stable is the bubble? Is there danger that the bubble might be bursting? And so there might be additional uncertainty coming up on this dimension. That might also be leading to unusual times. So with this, I would like to go to the poll questions, and I'm grateful to all of you for answering the poll questions.
CRM going up.
The first question was the Fed policy key in reducing inflation? And the question is yes, because if the Fed would not have hiked the interest rate so sharply, even though it was late, the inflation anchor might have broken. Or was it no? Actually, it would have come down anyway because supply chains were repaired, energy prices came down, and so forth. And the answers were 76% thought actually it was the Fed making sure the inflation is coming down. Only 24% thought it were other external effects. Second question was, is the strong economy, the strong economic activity a sign of overheating?
Bro,
yes
it's
or
been
no?
like 5 minutes of questions.
16% thought it was as a sign of overheating. No thought 84.
It's going to be good, though.
There's no sign of overheating according to our audience. The third question is about the persistent wage growth. Will this prevent the return to 2% inflation? Is the last mile of going down to 2%, is this the hardest? And here it's a yes or no. It's 42% yes and 58% no. Fourth question, higher than expected trend productivity will continue. Yes or no? Yes was 55% and no 45%.
Bond's coming back up. SPY still same spot.
And finally, the final question was, is risk in the monetary policy changes if you change it asymmetric? So is it loosening too early? Is it more harmful than loosening too late? That's what 51% thought. So a slight majority for that. Loosening too late hurts more than losing too early. That's 30%. And the risk is symmetric. It's 19%, almost 20%. So is the majority, I would say, slight majority, is that you shouldn't, losing too early is the more dangerous thing to go. So there's an asymmetric distribution on that. So with this, I pass on the mic to Austin, and we're looking forward to your take.
I just gave you 15 different questions, Austin.
Thank you, Marcus. That I decided to go with this unusual time rather than emphasize monetary policy from unusual people. And I would expect no less. I think your viewers and listeners' votes show them to be quite sensible. Some of what we're going to go through here, I'm going to emphasize in a way it's going to then become a straw man. But there are people who think differently than your viewers. Let me start with a couple of
we think a little differently
slides. I guess I would say I'm going to do 2.5 things. If I can get this to work. I want us to think through this, what just happened in 2023. And that corresponds to the year I was on the FOMC. I started at the Chicago Fed in January of 2023 and was a voter on the FOMC. Went to the first meeting like 1 to 2 weeks after I started. It was an extremely unusual year, Marcus, as you highlighted. I started early in the year calling the possibility that you could get a really substantial drop in inflation without a recession, more than just a soft landing. I started calling that the golden path, and that though there were many people saying such a path was impossible, there were weird elements of the year 2023 that might make it possible. And as we look back, it was an amazing year for the dual mandate. We're going to look back on 2023. That was kind of the golden year. But the key thing is, well, what does that mean for 2024? Were the supply chain issues, the labor supply issues, the productivity growth, are these things that were one-offs that enabled 2023 to be as good as it was? And we should stop expecting that rolling forward into 2024, or how do we think about it? Second, I want us to think about this question you raised in your poll about inflation expectations, the role of the Fed, and how much the credibility of the Fed was an anchor that allowed the golden path to be realized, if you will. And if we have time, I would be remiss as long-time listener, first-time caller, not to talk to Marcus himself about non-bank financial institutions and whether that colors our ideas about monetary policy transmission. Okay, so first let's just think about 2023 and the golden year, the golden path, something about the inflation dynamics. We had a huge decline in inflation without a recession. Virtually unprecedented. We had many very serious economists and friends of mine, you'll remember, Marcus, 1 to 1.5 years ago saying, cannot be done, impossible. If you're going to get inflation down in any significant way, virtually all central banks have had to have pretty serious negative medicine to do that. And here are just some measures of core PCE inflation over time. And you see we've got a really substantial drop. And even with the PCE data that came out this morning, which show a month of rebound, I think you want to be careful extrapolating this little part. This might go back up a whole bunch. The main thing to see is that we had very substantial progress over a long-term basis. And if you have floating around in your mind
Mara on the low, I don't know about Coinbase either.
The thing that makes 2023
they have earnings after the bell
quite different is if you take change in core PCE inflation on the right to left axis and a measure of the unemployment gap between what is unemployment and what is the estimate of the NARU, let's say. And we can use whatever measures you want. It's going to show the same thing. 2023 has among the biggest drops in inflation on an annual basis in the modern history of the Fed. And it's way down here in the bottom left corner, which is sort of not supposed to happen. Where unemployment is below the natural rate as people expected, but we're still getting very substantial declines in inflation. And it's worth also remembering over here, this wacko point is also coming out of COVID. So there is a sense in which the immaculate disinflation follows at least partly the immaculate inflation. So there is an argument that this is basically just supply chain repair. And if you believe that it's supply chain repair, there are even people saying, the Fed had nothing to do with it. That basically all that happened was the supply chain was damaged and now the supply chain is fixing. And there is some element of truth to that story. And we're still engaged in a kind of a religious war over understanding the inflation of 2020 and 2021. It doesn't come from excess fiscal stimulus, excess monetary stimulus, and that it's fundamentally a demand side story, or is it this supply side story? Now, the thing that I want us to note with the supply chain, this is an index that the Federal Reserve Bank of New York puts out, and it's just a kind of a quantification of what you will see out in the reserve banks. We talk to local business leaders all the time, and their anecdotes, many of which are repeated in the beige book each FOMC cycle, they just kind of track these measures. It's true that this thing comes down substantially, and now we're back to zero. So there could be an argument that's done. The supply chain is now fixed. We're sort of back to the pre-COVID times on the supply chain. So whatever happened in 2023 is over, and you shouldn't expect any more benefit as you go into 2024. Be a little careful with that argument, because one of the things that I would characterize that we learned how team transitory, which is now translated into team supply shock, got the timing wrong was failure to appreciate the persistence of inflation, I think, by these spillovers from the supply chain has a bunch of steps in it. And so as it started to go wrong on one stage, then it would move to the next stage and move down the supply chain. And that added a persistence of moving through the supply chain that we had not expected. We came into it thinking, hey, if it's a supply shock, it's going to go away in 3 to 6 months. The San Francisco Fed, there's some research out of the San Francisco Fed that just tries to do a supply chain impulse response. And it has all the pros and cons that you would expect. But the idea that when you get a supply shock, its impact on the economy and on inflation particularly is not instantaneous. It takes some time to work its way through, call it a year, before the supply chain works its way through. And one of the stark realities that we learned through the pandemic is this isn't a 2-month, 6-month process. It takes a long time on the way up. But my argument or slash question is, shouldn't we, as we look at this, if we're just getting to zero in the fall of last year, and this drop took a while to work its way through the economy and end up in disinflation, doesn't that same persistence argument that explains why the inflation was higher for longer than we thought it would be, doesn't that also suggest that the benefits of the supply chain repair will outlast simply when the index gets back to zero? And I think it might. And then the second thing I'd say is, I have been saying all along that a bunch of the supply shock wasn't just the supply chain, wasn't just energy prices. It was fundamentally, in large measure, about a labor supply shock. First negative and now positive. And what I put up here, it comes from a paper. We have a sort of a predicted trend of where labor supply was supposed to be now. Labor force participation is substantially higher than it was expected to be at this point. And people can get themselves twisted in knots a little bit. There's one tendency, some people say labor force participation is still below what it was before the pandemic. And that is not incorrect. That is true. It's just, remember, the population is aging, the baby boom is retiring. It wasn't supposed to be back to what it was pre-pandemic. It was expected to be something much lower. So we're way above what the trend we expected. I think part of that, Marcus, is immigration.
This trend is calculated before 2020. It's a long run trend.
I believe this trend is calculated before 2020. I have to go back and check it, but it is a long run based on demographics, age, immigration, trends in labor force participation status of the various age and demographic groups, what you would expect it to be. And whether you accept this model, which came out of research done at the Chicago Fed, or a different model, it's just important to realize the standard that you should measure labor force participation against is not what the level was pre-pandemic, because there are a series of demographic trends that suggest that thing should have been falling. Now, I don't want to just say this is all supply shock, because as you highlighted, it's a tight labor market. And in tight labor markets, like here's pre-pandemic, in a tight labor market where wage growth is high, it's going to pull people into the labor force. And it's not the way to think about that is not a labor supply shock. That's if the price is high, you're gonna get more supply. So there is some component of that. But I think that there was a major negative shock to labor supply from the pandemic, that's unwinding, so that part of the positive supply shock is on labor supply. And the thing about labor supply is, I think the lags, I haven't seen an impulse response for a labor supply shock, the equivalent of the one for the supply chain, but I think the lags are longer. And that kind of brings me into my is it an old saw? It's kind of an old saw, or at least a repetitive saw. I've just been saying it over and over. Be super careful about wage price dynamics when using the wage data to predict in the near term what's going to happen with inflation. I appreciated that your listeners and watchers, Marcus, did not fall prey to this issue that if wage growth is above X, then that means inflation cannot come down. In the long run, we basically believe that inflation is going to equal wage growth minus productivity growth. And we'll get to the productivity growth thing in a second. But the question is, the wage growth observed consistent with target inflation? you got to remember that we think wages are stickier than prices. So you got to be really careful. If a shock hits, prices will go up, then wages will go up. Then prices will come down, then wages will come down. And you want to be very careful in the short run saying, but look, wages are high, so prices can't come down. There was a lot of discussion like that at the end of 2022, that wage growth is high, so there's no way price inflation can come down because labor is 3/4 of the cost basis for a lot of these industries. And yet it did come down. Price inflation did come down because I think when making that argument, that's a long run steady state argument. That's not a short run dynamics argument. And this whole discussion where we kind of had an argument about this informs, I think, should inform our thoughts about how long will, if we are getting positive labor supply shocks, should we expect that to last in an impulse response sense even longer than the impulse response from improvements to the supply chain? And I kind of think that we should. And this is a fun literature, and a lot of it is cited in this paper by Gotti and Wojda, which came out of here at Chicago Fed, and I refer folks to. But it's fun to think about those. Yeah. What'd you say,
Peter Kahn is asking a question from the audience. There's a huge surge in immigration. Do you think it also played an important role?
Yes, absolutely.
And how do you see this going forward?
Well, I think of that as a labor supply shock. Mm-hmm. And we had a huge negative labor supply shock on immigration at the beginning, even starting pre-COVID from policy changes. But in COVID, there's immigration drops to zero. That's something like the majority of labor force growth in the United States in the pre-COVID period is immigration.
Though.
And now we've had a rebound of immigration to at least at the flow level.
SPY is coming down, and a couple of chips
every bit back to what it was pre-COVID.
NASDAQ not hanging on as well.
It didn't overshoot to refill the hole that was lost, but I think that rebound of immigration is part of
$500 million deal.
Labor supply that's coming into the market. And I do think that even if you think immigration cannot go up as much as it went up, it went from zero back to where we were. It's not going to go up
and then Vanny's
that much again. It's still worth thinking of
that ENVB still holding.
How long is it going to take that to wind its way through the economy? And I just think there's a dynamic component that it's
do you think there will be a challenge too, because the composition of immigration, how much high-skilled computer scientists are coming in relative to low-skilled workers? Do you think that has implications for inflation too, or that goes too far?
I don't mean, what do you think? That's clearly relevant for the wage distribution and for income dynamics. I don't know how much of what the magnitude is for the macro economy. What do you think about that?
I think it's primarily a distributional thing. So you will keep the low-skilled wages lower, and the high-skilled wages will go up further. And that might be causing tensions in other dimensions. But typically, high-skilled wages, they have a lower marginal propensity to consume. So the inflation implications are probably not so dramatic.
I see. So for the business cycle, that sounds plausible. It would definitely be worth somebody doing some research on that.
But in terms of, there was this high inflation of 10%,
we were at the
which
same price
eroded a lot of purchasing power, and you have to have some catch-up later on. So do you think we caught up already fully, or we still have to catch up?
Now, you know what?
Just for the catch-up element.
I'm gonna call an audible here and go into my appendix, and let's just think about let's think about the composition of core inflation. The thing to remember is
4-week bill
in
auction
this
about to come out.
Pre-COVID period,
shouldn't move us too much.
We were at the target. We were actually below the target. So it can be a little more inflation than what we saw pre-COVID and still be perfectly consistent with the 2% target. But the thing to remember is if there's housing, services, and goods, we were at or below 2%, not by everything being at 2%. Okay. Goods were at -1%. Housing was at 3 to 3.5%. Services were 2.5%, let's call it. Because that added up to less than 2, you could add, let's say, 0.5% to any one of those and you'd still be at 2. Fundamentally, the supply chain stuff leads to this. Core goods going through the roof. And as the improvement of the supply chain has happened, core goods is now back down to very much what it was before COVID. And core services, we know to be more persistent. We kind of thought,
hey,
this goes
right
up.
Now.
I think a large measure of that is from labor. You get a negative labor supply shock.
So
it's going to wind its way through the economy, and it's especially going to wind its way through in services. But we've actually seen substantial improvement on core services too. The thing that is
OCEA, that was another hype biotech from a couple days ago.
And the thing that I'm watching the most, and I'm still trying to sort out, is why hasn't housing inflation improved more than it has? You see, there's some progress, but it's still running way hot compared with what it was before. And
I wonder if he's going to talk about that BLS thing on housing today.
It's even more of a puzzle. If you go look at a bunch of market measures, they really bottomed back out and they're absolutely back to what they were before. And maybe that just has to work its way through with a lag, but that's been the surprise. This is the thing that's weird. And that's why I still think let's keep our eye on housing and try to figure out why isn't it improving as fast as we thought.
But do you think it's mostly the way the statistics is measured in housing, or is it because of high interest rates?
I don't know, man. Goolsby's growing on me.
New house buildings are going down. Because rent is always measured with a lag.
I'm super interested and puzzled by that. I thought I would have put 3/4 weight on it's just the way it's calculated. And but that has led me to every month be like, okay, now it's about to be back. We're going to be back in business. And so far it hasn't. I still think that majority has got to be the way it's calculated. The issue about supply, I think we're gaining appreciation about. My puzzle has been, shouldn't that always be true? The fact that somebody's locked in at a low rate and they don't want to sell their house because it would mean getting a mortgage at 7% instead of 3%. That felt like it should always be true about monetary policy. Whenever you start raising rates, there will be a short-run transition period of people who were locked in at the other rate. Maybe it would be more prevalent now because we raised the rates as quickly as we did. So there's more there. But fundamentally, that's got to be a short-run phenomenon. Eventually, people are moving because they retire, because they're taking jobs, because whatever, and we ought to work that through. But it's certainly, as you raise, that's certainly a possibility of part of what's happening with this series. Okay, let's see if I can manage to get us back where we were. No, well, close enough. Okay, so that's what's weird in 23. I think that a large measure of what happened is reflecting that supply is improving and fixing what was broken, and that looks like a supply shock. And I think part of that drop in the beverage curve, vertical drop in the beverage curve, is actually telling you that wasn't it's not on the same beverage curve. There was some supply thing shifting in there. And I will at least say,
all right, you're getting to the first, or the second
I
little
was
pop
recognizing
off of
it enough to say that was my
but we are hitting a new low 4 minutes
for
after
why
Euro close.
we could pull off
starting to go down. Names that are holding up are doing good, though. So
we're going to get
just
back
keep in mind it's different parts of the market. Like the other day, I don't think we're moving.
We talked about the wage price dynamics of why
him or
I
Bostic
still
has said
feel
as
like
of yet.
we might get further benefit in 24 from the supply chain working its way through, just like we got further negative when the supply chain worked its way through on the way up and made it more persistent. But now let's just think about that last term in the basic equation, which is inflation is wage growth minus productivity growth. Up to the beginning of 23, it was not looking too good for teen productivity. Okay, from the initial jump in productivity, which was almost certainly due to composition effects and stuff like that. From here to there, it was like, yikes, we got 2.5 years with trend negative productivity. And so if this was the productivity trend, we better get used to disappointment if we're going to have that. Starting somewhere around 2023, productivity growth begins going up. And for most of this period, as you know, Marcus, productivity measures are extremely noisy. So that's why we don't usually key our short-run policy decisions around measured productivity growth, because there's just too much noise and too many things going on. Now, that said, it gets back to this trend line. That's already is it a triumph? Kind of a triumph. There were a bunch of people saying we should get used to disappointment. Trend productivity growth is never going to go back to what it was pre-COVID. Not only do we get back to it, we now have almost a year of much faster than trend productivity growth. I don't need to tell you or anyone else, if that continued, that's the greatest thing that ever happened to us. It would certainly have an impact on monetary policy. Part of what allowed the golden year to take place is we had really substantial productivity. So we could be having robust GDP growth, very strong job market, even below Nehru levels of unemployment. And yet we had 7-8 months in a row of inflation literally at or below the 2% target. Mm-hmm. If this continues, and I'm not saying, honestly, probabilities are this thing is just going back to trend, about timing. And we should take the win.
He's given this speech
that we got back to productivity
before.
But
very,
if that
similar.
Thing continues,
it's not like he hasn't talked about this, but
going to want to monitor that, and that will have direct implications
a lot harder.
For monetary
like I said, he's growing on me. We'll talk about it when he's done, but there's a lot you could get from this.
That kind of moves us to section 2. Which is,
but I think it's a good,
shorter than section 1.
I wonder how it's not going to change, honestly.
Don't be fearful.
But everything he's talking about,
those
he hasn't touched on anything
that I just described
had
nothing to do with
what he said. It hasn't even hit headlines.
The supply chain would have fixed on its own. The labor supply, the immigration, that stuff would have fixed on its own. The productivity
NVIDIA red, SPY selling off now. Pretty big reds here. Again, we're a couple minutes after Euro close.
Note about the magic
we're cutting into the PCE levels. You're now break even on the SPY. Dow already went red. Nasdaq's closed. But yeah, you're at the first PCE candle now. The top of it.
If you can't really explain where
again, this candle here, top to bottom,
can't be AI,
where you're at right now.
AI is this
right
tiny
after the PCE
there's
morning,
no way that
3
can
hours
explain that the whole economy in 2023's productivity went up. Chad Severson gave a speech.
Lower.
He's my old friend and co-author. He gave a speech at NABE in which he highlighted, yes, look, it's noisy. It might just go back to trend, but there has been a substantial rise in business dynamism back to old levels. So the new business formation was relatively low and constant for a long time. And for whether it's because it made us change our views of the world or we don't like working in the office or whatever it is, new firm business applications are up and they've stayed up.
I mean, he just did say,
even if it's not,
he said if substantial productivity growth continues,
increases,
that would have an
we're
impact
get
on monetary policy.
Growth
Other than that, though,
like
I think we were just selling off
4 or 5
Euro
years.
close.
I still think it's going to be highly relevant to to
do
our
we
monetary
know in
Inflation
which
numbers.
sectors this business formation increased a lot?
And don't
Is it
forget, it's
across
the last day
board,
of the
or is
month,
it-
you guys.
The we is doing a lot of work
So
in
that
that
end of the day
question.
rebalance,
If somebody
or end of
knows,
the month
I don't
rebalance
know.
is real.
It's not across the board, I don't think. But I don't have it.
No, I can imagine that, for
Yeah.
example, if you're in the tech space, if you want to start up a new tech company, the fixed up costs are much lower now with all the
Yeah. So
platforms.
look, this all might be internet companies. There was in the old days, if you say, what do you do? I'm
QRed.
self-employed. They say,
Yep.
oh, so you
NASDAQ
don't have
is.
a job. You know,
That's it.
and
You've given
now
up
what do you do? I'm the
three-quarters of the
CEO
PCE,
of my own startup.
like on that
you know,
candle itself.
yes.
But you're almost about to
But
give up all of the
it
PCE
didn't
gains.
change
We're about to be
suddenly.
unchanged since PCE.
Right then.
And again,
You see what I mean?
PCE was
What about
practically
CapEx
unchanged. Again, it went up by
investments?
0.1, down on the year-over-year.
You're exhausted. I just had one slide.
Yeah,
that I
ARM
put in
selling off.
appendix.
Google's at the
I
low.
refer everybody
Watch
to
if any of those big
to
tech
the
names go red.
Keynote address. That it's worth at least considering. Maybe there are some fundamentals behind the increase in productivity growth. Maybe it's not just totally random, and we can't think what it is. Okay, now let's see if we can get us back. Now let's think about what the role of the Fed. And you've even had some people publicly saying, the Fed has nothing to do with it. I don't agree with that. It sounds like your listeners don't agree with that, and you don't agree with that either, Marcus. And the thing that I'll say that I also highlighted when I said I thought a golden path for 23 was possible, part of it was supply chain is fixing. Part of it was maybe productivity growth is higher. And part of it was we don't have to fight the second dragon of getting inflation expectations back down, as well as the dragon of getting the actual inflation down. Okay. And we can go through, there are many measures of inflation expectations, and I don't want us to get too bogged down in it. My claim is no matter what you use, it's basically going to show you this, that fundamentally in past times when we had high inflation, the 10-year inflation expectations went up with inflation. And that makes it extremely hard. The root of why is the Volcker period as tough as it is and have to have as deep a recession as it has.
February ain't going red.
They have to get down the red line
That'd be crazy
and the blue line. Because the blue line is where things are going to settle back. If you hold everything else the same, the natural settling
Red
point
line's core PCE.
for inflation,
And again, that came in
I
today.
think, is going to be back to the blue line. And if you look at what just happened in COVID, we have a soaring of core inflation, headline inflation even more, get to 9%. But the Fed said we will get it back to 2%. And fundamentally, the world believed that.
That's crazy.
And that's critical to actually
Literally,
pulling
this chart
it
is
off.
showing you
B
inflation expectations
is
barely
why
moved.
I'm
You go look at the past.
extremely
Anytime inflation would
what's the
actually
right word?
move,
I am
people would
against the
forecast
people
more.
who
AKA
were
you got
so
Brent,
convinced that inflation
easier to
could not come
brainwash
down
people.
that
Is what I'm
they
gonna go
call for the Fed to change the inflation target, make it 3.5% and declare victory. No, do not do that. Look, the essence of why the blue line did not go up when the red line went up is that people believed the Fed when it said, do not pay attention to the inflation rate headline of today. We're going to do what is necessary to get back to target.
Again,
if you abandon
the
the
difference
target,
between now and the 70s,
then
that chart
you just
is
made
what
life
it's
harder
showing you.
for the next people.
Literally, you did not have.
So we still have to be grateful to Paul Volcker for helping us.
Absolutely, we do.
More
Absolutely, we do. And I keep,
even though inflation was
he was a dear friend and mentor of mine. I worked through the financial crisis
in a weird
with him,
way,
and his
transitory
widow
saved
gave
your
me
ass.
the original 2x4 that they sent him, and it says, "Please lower these insane interest rates." And I keep this on my desk to remind us that was hard-earned credibility right here, and we carried it out in a way. This is the second part of the legacy of
kind
the
of
battle
you
against
didn't give up the
inflation
full
is that when the
PCE, but
Fed now says
still within the first minute
we
of PCE
will not allow, we will get back
and
to
15
target.
minutes after Euro.
Fundamentally, they believe it. And when they believe it, it allows
your cash in your long term. What are you going to buy?
When they believe it, to me, that
if you have a plan, it's okay.
Where if we clear out the supply,
what's the plan?
First supply got worse, then it got better.
You're going to sit. You're going to get some yield.
I just did that backwards. First it got worse, then it got better. The labor supply is going to filter through. All those things are going to filter through. And then the question is,
today
and then where will we settle?
The end
Once
of the month.
all of that is done,
so just
and
don't
we're
forget
back
that.
to steady
There
state,
might
where
be
will we
some
settle? And I think where we will settle is back to the blue line. And it didn't go up.
Where we might get
and
a
so
lot of
that's why I
moves
think there
to
is
end
a
up at the
fundamental
same spot.
force that's pulling us back
I don't know if I can say that
target.
confidently, but
and we're making
it is the end of the day, end of the month.
Even if inflation goes back to 2%, the price level will be higher.
No question.
We've still lost some purchasing
power. No, look, there's no question. The price level will go back because we don't have a price level target. We're not, the Fed's job by law is the dual mandate. We're stabilize the prices and maximize employment. And that's what we're going to do. As a thought experiment, I think it would be hard if you said, we want to get the price level back to 2019. What would the Fed have to do that? That's not what we've said the target is or what our rule is. But even if you made that your target, that would involve draconian. But how would you generate the deflation necessary to do that? I think that's.
But are you also saying that the average inflation targeting, which the Fed proposed as a framework in August 2020, I think, is not really something which is still pursued? It was stated very vaguely in a sense. It was not clear how many months or years you take the average over.
SPY still bouncing around again.
Yeah,
if you're going to be
flexible and
inflation targeting, you should actually now bring inflation to negative territory in order to have an average 2% over 5 years, let's say.
I see where you're going. And I don't disagree that the principle of average targeting is something about both overshooting and undershooting. The only thing I will emphasize is we went almost 10 years under the target. So that we're over the target, in a way, you gotta think about that. You got to think about that. How much of this is making up for that, and that's a little complicated. I mean, you're a world expert on that. What do you think? What is your window? That's kind of the question. What is your window of averaging?
I mean, if you do inflation targeting, essentially the window is 1 year because we measure inflation over the year.
No. Wait a minute. You could say that it is 1 year, but then you have made a choice about ignoring the past. So if I told you that for 9.5 years we were under the target, how does that affect you the year after that happens? This 1 year window argument says we can ignore that. I don't know if you can ignore it. I think we got to think about we got to think about that too.
Average inflation targeting seriously, I think then the question is how many years you take into account, and that I think should depend on the average maturity of debt contracts and also on the wage stickiness. Now, if the wages are sticky over 3 years, then you might take the average over 3 years. If the average maturity of a debt contract is years, then you might tilt towards 5 years.
That is a fascinating idea. And look, as you know, we publicly announced the Fed is going to be considering the framework in the next year, and I will expect no less than a public comment from you, Marcus, outlining what the components should be in factoring in that window and thinking about average inflation. I do think a cousin issue. It's not exactly analogous, but it is a cousin. Goes back to your initial slide about the monetary policy that didn't come from policy change. That is the market long rates going up, coming down. the financial conditions index also has a window. And in a way, my intuition, when people will wring their hands a little bit, when they'll say, the Fed SEP came out, and then the market moved in a certain way, and the market moving in that way loosened the financial conditions. So if they were trying to be tighter, now they have to worry because the market's interpretation is loosened. Like in December, the SEP came out and it said there would be predicted or projected 3 cuts in 24, and the market jumped to 6 cuts in 24. And so some financial conditions indices would say, look, that's loosening in and of itself. My read of the evidence is that let's call it the lag of market moves on the economy, the proper window to think about that is fairly long, is measured in years, definitely not days or weeks. And so that gives me the tendency to kind of look through movements like that, because the discrepancies between what the market thinks the rates are going to do and what the Fed's SEP median projects, they tend to close over time. They don't remain huge for long periods of time, because, like one of our board of directors put it, he said he tells his people, we can fight the Fed as long as we want, but the last time I checked, the Fed is undefeated. And so in a way, the market is going to react to and correct to the short rates.
As long as the Fed is steadfast following its own.
And the Fed is steadfast. As long as the Fed is steadfast, I agree with that.
It's a little bit like what I find surprising, that there's a lot of wishful thinking in the market that the interest rate will come down. And it is the opposite what happened in the 80s when people thought the interest rate will stay high because people were familiar with high interest rates, and they didn't think Volcker will sustain and bring the inflation down. It's similarly here.
That's interesting.
That the market always thinks the interest rate will come down again. And the Fed always says,
my only addition to that thought is this thing. If you predicted that there will be 7 rate cuts in 2024, and there's a meeting or two where there are no rate cuts, there's only 8 meetings a year. So the market is going to find out quickly what the Fed is doing, and they're going to adjust. And you saw throughout 2023 and even at the end of 2022, multiple points, usually when the SEP comes out, then the market would say, well, they say this, but we think they're going to do something different. And I just caution everybody, go back and read the post-mortem about what happened with Silicon Valley Bank, where I couldn't understand why they did not hedge the interest rate if they had such exposure.
Listen to the damn SEP.
And the answer was they did hedge the
idiots, because there's only 7,
but then
8 meetings
they
in a year.
concluded that they didn't.
Why did you think we were going to cut at every
carry
meeting?
out what it said it was going to do? So they
I
got
don't
rid of
know
the
why
hedges because they said they could make
put
more money
all
that
of their
way.
money in a 0% bond.
Then
and we kept
actually
saying
the
we're going to
Fed
raise
did
rates.
carry out and was steadfast and kind of blew them up. So they're definitely a risk.
I like Goolsby. I'm listening to him.
Being committed to what it says it's going to do.
Goolsby's moved up. New guy got game.
Okay, so let me just
even though he's like, again, I don't know about Mr. Golden Path, but then again,
in this environment,
I like his emphasis on the time and the lags.
Well anchored.
And then even what he just said there with the dot plot.
I still feel like
we have a
there
dot plot in a
is
couple weeks, so
supply benefit coming through the
just
system
said.
on both the supply chain and the impact of labor supply. It is worth our thinking, how restrictive are we? What is policy? And I think rates are pretty restrictive measured by the real federal funds rate compared to historical, compared to what the
said that before. Again, he's
SEP
bringing up
median
history.
says we expect long run real rates to be. This is a restrictive environment. And so as we think through what each of us on the FOMC or each of us observing in the market thinks should happen, I still think the question is, how long do we want to remain in this restrictive of a territory? And the argument that I appreciated, again, that your listeners did not overly index on quantity numbers as a sign of overheating. You got to be extremely careful in periods where there are positive supply shocks happening, over interpreting quantity data as indicators of overheating. So there is one logic that says inflation was good, but GDP was really high. Inflation was good only because of the supply chain. So as that goes away, if GDP growth is over 3, well above trend, and the inflation is going to come back up as those supply shocks work their way through, now we're going to be overheated. What I think is a little misleading about that is the same thing as the supply shock unwinds, the same thing that brings inflation back to trend would bring output down to trend as well. So we're going to be in the environment where we're thinking about how restrictive the rates are, and do we want to maintain that level of restrictiveness going forward. If inflation keeps coming down, it will be making the real restrictiveness go up.
I guess the key is how much to attribute to productivity growth, because if
that's a great point. That's a great point.
And then if the productivity is very high, then it's not so restrictive in a sense, because you should have a higher R star.
Yes, I agree with that. If you had a permanent change to growth rates, it would change your permanent R star. I guess in my mind.
All right, I ghetto spreaded the Celsius, not a recommendation. I shorted the 95 call for 55 cents. So I got a little bit more than 100% back on the play from this morning, and then we have 2,000% upside. Go up to $500. We spent $20 on those. Again, that's the play from the morning. They're at like $1 right now. $1.20.
Growth rate will affect what do you think the R star is, if you want to think of it in that model. So it's an area that we should consider on a research side. If you take a step back in sophistication and just say
I don't
historical,
know why AMD is going crazy.
It's pretty restrictive. We're starting from a pretty restrictive real funds rate, and it's worth thinking about those. Okay, so I went longer than I expected. So I'll just put on the radar screen, and Marcus, you will keep writing papers to emphasize however you want to measure it. Non-bank lending, the rise of non-bank financial institutions is pervasive, is as a share of the total is higher in the U.S. than in most other places. And it raises a bunch of questions that I still think we're just learning about, of how does the monetary policy transmission mechanism remain the same or change in a world where finance is not primarily banks? And there are places where it can go either way. There are some ways in which you might think it attenuates the impact of monetary policy transmission. If, say, there are substitutes that, it's going to, bank funding gets more expensive, but it shifts the lending out of banks into non-bank lenders who are not as directly affected, that would kind of dampen the impact of monetary policy channel. And we've got some research at Chicago Fed that's fascinating look at auto financing. So if you look at auto financing, it's majority now non-banks, and so there might be some dampening of that channel. But then there are others where the non-bank channels are more risk-taking, and the issues of short rates impact on the economy versus long rates might be getting greater, and they might be encouraging more risk-taking, shift to higher risk-taking. They might react more to monetary policy. And this is just a fascinating area. Anybody out there who's who's thinking of doing research in the kind of macro plus financial space, this is a very fruitful area that's worth looking at, I think. So with that, Marcus, I'm done with my
Can I come back to your Phillips curve picture?
Yes.
Phillips curve
because perhaps it's not the change in core PCE inflation should not be on the x-axis. It could be if we take it relative to the inflation expectation or relative to the anchor, then 2023 might not be so radical.
Might not be so radical.
So because
explain that more. Why wouldn't it be radical?
If
we look at that expectations,
it's pretty
slide,
stable.
It is stable, but this drop relative to this still seems like a major outlier in a way.
But the inflation level is still high.
But the inflation level is
still
still
make it even more extreme, like do an old-fashioned Phillips curve.
Yeah, right.
But instead of the change in inflation, we put just inflation levels on the x-axis. Then 2023.
Marcus, you're one of these. You're like the birthday magician's nightmare. He's like, ta-da! It's got no. Wait a minute. You put the card in there. He's got it behind his neck. Look, I
just want to rescue.
I think you're right.
I
think you're right. I grant your point of any particular measure.
Yes.
If you take a step back again in sophistication and just say, was it on anybody's bingo card in 22 that you could cut inflation, whether headline, core, whatever, by this kind of magnitude and not have a recession? It was on very few people's bingo card. And you had smart economists that I respect, Larry Summers, Peter Henry, others, saying things like, Larry said, we got to have unemployment go to 6% for 5 consecutive years before we would see inflation come down. And so I kind of think no matter how you measure it, you're going to find some version of 2023 is weird and not on your line. And which is to say, it wasn't on the same Phillips curve, like the supply was moving around in there.
Yes. No, it's fair. But let me come, the
Peter Henry and Anusha Chari paper is the one that I'm talking about. It was a very interesting paper. It was mostly not on the U.S. case. It was a lot of international evidence, but there were a lot of folks saying that.
So do you think we will continue the golden path? Because, normally we stop our webinar always with a positive note. But your note was so positive, I think, let me first ask you, do you think we will continue? And then perhaps this time we have to end on a negative note just to balance it a little bit. Saying what keeps you up at night?
Yikes. Yeah. Well, look, there's two parts of that. As you know, the job of central banker is to worry about everything and to stay up at night. That's our job. We're the night watch. And so I still think that the things that make me the most nervous, and it's a good position to be in, but they are external shocks. And
what keeps you up at night? Yes.
Easier soft landings than the one that we're thinking about now were derailed in the recent past by external shocks. And how can you not look around the world and say, yikes, there are a lot of possibilities of external shocks, whether in China, in the Middle East, and in commodities markets, and a whole bunch of things.
So we're going to have a soft landing unless there's a black
deeper
swan.
Question about is the golden path to continue. Partly I don't want to jinx it. That's why I like talking about 2023, because it's done. That's closed. 2023 was the golden year.
23, son.
If it were to continue in possibility, that was a weird way. That was like a Yoda-esque way to say it. If it is possible for the golden path to continue in 2024, I think it would rely on these issues about the length of the transmission mechanism for things that already happened. I don't think
that's
if
what
you
I'm
look
saying,
at the
this
labor
thing he keeps talking about.
labor force participation, or if you look at the supply chain indices, we're not going to get the increase that we had again. So the beneficial part will just still be what's working through the system. We'll hopefully, if we're returning to normal, we're going to be back to a circumstance in which all the lessons, accumulated wisdom about monetary policy will once again apply. My only thing, and actually it's
that's good news.
Perfect ending, because it brings us back to the
thing. Once we actually normalize,
the title slide is about this,
again.
The unusual. 2023 was extremely unusual because, I won't say very unique because that's wrong, logically wrong. There's only unique or not unique, but there's unusual and then there's unusual. And this was one of the extreme unusuals because of those supply shocks. But I still think there's a decent chance that we get a little more positive coming from that.
Finally, a last word. Of course, we had a huge fiscal stimulus still going on. I mean, still spend we have a deficit of 6-7%. I'm not sure whether you want to comment on the fiscal side, but the monetary side is a little bit restricted, but fiscal side is very expansionary.
Yeah, I think you are quite sure whether I want to comment on the fiscal side. Look, and then I'm a Fed man now. I don't comment on the fiscal side. Okay. I do think that the team supply shock spent multiple months in the wilderness soul searching to figure out how did team transitory get it wrong, that it didn't seem transitory. It was more persistent than we thought. And it was the camp I was in. And my conclusion in looking through that was a lot of this inflation persistence as things worked through the supply chain, that the impact of supply shocks lasted longer and kept lasting more than I anticipated. The one caution that I would give to team over stimulus is they, in their joy, in their kind of bragging rights, they never did the soul searching to go back and do this, because they were like, see, we were proven right. There is a puzzle that if you're on team stimulus, you gotta take a position on, which is, given the stimulus, everything is delta from last year. So if you think what predominantly drove the inflation was the CARES Act and the rescue plan, et cetera, then you got to explain why it was like, okay, we had plus 2 trillion, but that becomes minus 2 trillion. And the inflation didn't play out like that. And one argument of explanation is, well, it went into the balance sheet. And so it's kind of smoothed over. It's not going to be that bang, bang. But that raises a second puzzle, which is, if people actually saved most of the money and they're drawing down on the savings, then the initial stimulus really shouldn't have been big enough to lead to 9% inflation. That I kind of think at the end of the day, inflation starts soaring when the unemployment rate is above 6%. And on its face, that's kind of evidence that something weird was happening on the supply
million
side
barrels
too.
a day in December, down from November.
As regards Fed policy, we don't
Celsius
get
is killing
into,
it.
as
Those
I
contracts
say,
are
the Chicago
600% now.
motto
And then
is
we
there
made them
is no
free.
bad weather, there is
But
only
my
bad
goodness.
clothing, and we would just you tell us the conditions, and we respond to the conditions. And fiscal policy and its impact, that's just one of the underlying conditions in the economy. And we're going to get inflation back to target. We've committed to do that. I think the level of restrictiveness, if you stay at a quite restrictive level, you will eventually start having to think about the employment side of the mandate too. We haven't really had to think about that lately because we've been doing great on that side, and where we've been lagging and failing has been on the inflation side.
Okay, thanks a lot, Austin. And we
Marcus,
hope that what we have learned from this unusual time, we can make it usual. And what we don't want from the unusual time, we can,
nicely
avoid.
said. I like that. Can I take that? I'm gonna use that.
Yes.
Marcus, it's a real thrill. Thank you for having me on.
Thanks a lot for doing it. And
all right, they just turned it off. All righty. That was a good speech, man. I don't know. I think we've heard a majority of it, but again, even with data just coming out, there was some stuff. Again, he commented on it again. He said if substantial productivity growth continues, that would have an impact on monetary policy. Again, that's kind of saying good news is bad news, essentially. So there was a couple of things, but again, the way he was talking about time, I got a hint for the future dot plot. Again, he was saying stuff about the SCP. I think he's just a very strong emphasis on you know how we'd always talk about getting boxed in with the Fed meetings? That's what he was bringing up. He was just saying, I don't know why the market was pricing in 7 rate cuts if there's only 8 meetings in a year. He said, you'll quickly find out we're doing what we say we're going to do. So I would be very keen of any changes on the dot plot coming up. And then all in all, I don't know, man. I think I don't know. Maybe today, I don't know if something about Goolsby. I really liked, and I really enjoyed listening to him today. And I even think he may even lend towards shifting the view a little bit or tweaking the view on this year, man. Because again, he was Golden Path. That was Mr. Golden Path when things weren't looking Golden Path. You got to really remember that. He was very, very bullish. But well, I am saying, end of this year or all of this year, that policy shift is going to be the most important thing. But I also think, like he's talking, he's saying, he's saying the time, whatever is going to happen on the data, nothing is happening. It is just things playing out through time. So, you kind of pretty much the rest of this year, we kind of know what the data is going to show. And we're going to wait for it every month and it's going to change. But what he's pretty much saying is that everything is still working itself out from a long time ago. So even this year, at the very least, they know even inflation isn't going to come back up at all. There's no chance of it rocketing up. They have expectations down. That doesn't mean, though, some of the other stuff may show up again down the line. That's why they're being so cautious. But he's saying, yeah, we're going to have a good path unless there is an external shock or until it takes long enough for either things to go back to normal or for you to really see the effects of what has actually been happening there, from the labor market exactly and supply chain. So I don't know. I think in a weird way, just be I guess simply Square dropping. Is that like a flush? No, they've been selling off. They're still in the green. But I would be more patient and maybe look your eyes towards external shocks rather than data in a weird way. I feel like, it sounds like what's it called? This year, it sounds like last year, but this year I think, I don't know, maybe the data will start having less of an impact. Yeah, maybe China or any sort of credit issue, banking issue with commercial real estate, car, auto loans, defaults, somebody going bust, if anything. But I think that's that's at least what I'm thinking about after, I feel like we've heard this speech too many times, but again, there was a couple of differences and just thinking back on it, looking so far, even again, another set of data, very important, comes in at the margin. We do have Powell in a couple of weeks. We have more data. Next week is jobs data. But I don't know if the data is really changing. And this guy, he was very confident on Golden Path. He's being a little bit more humble about it today. But even then, just what he's saying about lagging, that's what he was saying about the Golden Path to begin with, is just lagging. I don't know. I just think time and the emphasis of time really showing or not showing things is very big when it comes to policy and policy action, or at least this time around. So, yes. Market needs an exogenous event to drop, melt up until then. Pretty much. And at the end of the day, too, I don't think, like, the data. I think this is why it's surprising when these economists are wrong. And I'm sure there might be a couple surprises here and there. But I don't think you're going to get any sort of, like, outlier data move that is going to scare people. Or change the trend of inflation, more or less. That's why the more time that goes on and the more time that they kill and then see what happens, then you could start to forecast for the next year pretty well. And like he's saying, even timing-wise, like the Fed, they only have 8 meetings and you're only, so if you get month, quarter at a time, like think about it. From here to the last Fed meeting was a month, or the last SCP, though, it was about 3 months. We've burned now 3 months. Powell and the gang got to get 3 more months of data while feeling a certain way about things. So that's why it's like the more time they kill, the better. But like I'm saying, like Goolsby saying, I'd pay attention to more of the external factors. Otherwise, we might be in melt-up mode, and maybe the data really is not going to change that much, or everything is going to stay within the guardrails for the most part. Yeah. The war in the Middle East affect the market? Yes and no. I mean, I think the only way the war in the Middle East affects the market is if it turns into something like the 70s. So, I mean, man, inflation expectations aren't even like the 70s. But you would need, like, what was it? The Strait of Hormuz. You would need, like, that shut down. You would need people. You would need the Saudi Arabians and everybody else mad at America for supporting Israel and then sanctioning oil. Like, you would need a lot of things to happen. So as of now, I would currently say no. Is it a sad situation that we support wars and we have them left and right here, from Ukraine to Israel and Palestine? I think it's a tragedy, but I don't think it's going to impact the market or policy direction unless it gets, sadly a lot worse. Or would lead to, again, big, way bigger economic shifts, or economic reactions like sanctions from the larger Saudi Arabian countries. Data priced in. Well, kind of no. That's the thing. I guess to a degree, I think everybody is expecting, like, you're not going to get a data shock that will be sustainable in the next 8 months now. That is, I don't know if that's priced in or not, but that's where it's like kind of the general, like, that's what I think Goolsby was communicating. And again, I kind of believe him because there's kind of evidence of that. That's all we've seen lately. And even if you go back, ever since he's been saying golden path, I mean, it really has played out like that until there's like a real big sustained shock. Like, everything that you see on the data is so much slower. Like, we're aware of this, but I just think that, all that being said, I mean, we are really pocket watching the data, but I don't think it's going to move us too much. Honestly, that's why I think we'll see the SCP, but until, like, the only thing that's going to upset something is an external shock. I don't know. It sounds kind of crazy. Maybe it's kind of too simple, but I'm kind of down with it. Have I seen the Fisker pear? No. I saw one of the Fiskers on the road the other day. But no Fisker pear. Sounds tasty. I'd be down with the Fisker peach. Oh, this looks cool. It looked like the hamster Kia. I don't know. They have another one that looks dope. I like the old Fiskers from back in the day. That was a good time. What do you think about this being the longest bull market in stock market history? I don't really think about it, like, in the sense that, I mean, we are in modern times. Like, like the best ever world. You're living through that right now as we are talking. So it's like, I don't factor that in as much, like the length and duration, as much as I'm looking at just like the situation, all from, you know, access to capital, how much capital is there in the supply, you know, and like just some of the other broader factors of like business of where we're at right now. But I'm not too concerned with like how long, because again, I think we did have a pullback not too long ago. I mean, that's kind of that's the paradox to all of this. Before we took off, we dropped substantially in COVID. Like, people suffered during COVID. Believe it, I know some of you made your epic start to the stock market, but COVID was a very interesting pullback when it was large when it happened. So we're coming off that, and then there's been stimulus and all. So I'm focusing on that stuff. Maybe it's more MMT, but yeah. And yeah, man, best ever world. Like, that makes sense, right? Like, think about it. You are living through the peak world right now. Like, this is as the best it's ever gotten. You may be like, oh, I would like the good old days, but like companies are making more money than ever. Like, this is the peak. Like Grand Theft Auto 6 isn't even out yet. You know what I'm saying? Maybe when Grand Theft Auto 6 comes out, that will be the best ever world. I know, I get what you're saying, where you're like, no, it's not, because, you know, there was a much simpler time where real estate prices weren't high and people weren't as crazy. You know, granted, it cost 10 cents to receive a text message back then, so count your blessings. But you know what I'm saying? But like in general, like, you are at the peak of civilization currently. Is that a good way to put it? You are at the peak of modern civilization right here, right now, in this moment. This is as good as things have ever gotten. So you're like, wow, there's a big bull market and it's lasted this long. It's like, I mean, we have more money than ever. We are making more products than ever. Your new technologies, whether you think there's going to be more in the future, right now you got almost the peak there. I don't know, 5G. I like, you know, you have all these different things. Apple Vision. You could go down the list. I don't even want to go down the list, because then I'm like, damn, this is the peak. That's sad. But in general, this is like the high time of society. So I mean, damn it, we should be having a bull run. We should be doing, if things are as good as what it's supposed to be. Mass layoffs are happening. They are. It's still not at the crazy pace that we've seen at other points in the past. But then also, too, like, this is kind of part of it. It's been like, you know, even if you're saying it's relative, too, kind of not really. Because I do think, like, you know, I keep bringing this up every now and then, but it's like there's been a lot of years that have gone on. Population has increased. You know, there's more kids who are in the workforce. You have more population all around the world. You have different things going on, like even all the way down from prices, wages. Because, like, dude, I'm not going to lie to you, man. I thought people, like, before the pandemic, I was like, man, how do people even afford shit? So, you know, fast forward 5 years now, I'm still like, damn, how do people even afford shit? But there is more people. There is more wages. There's so many more things. I'm not saying all wages have gone up or anything like that, but more or less, like, a lot of these effects too. And we're like, wow, the best ever certain things. Like, we have the most people ever, and you have more people getting involved in certain activities, whether it's investing all the way down to production stuff, not to mention production technology. So, yeah, good rant. Good rant. And Celsius, those are still killing it. Those Baidu puts, not the call, those went up. So I think I might hold those till next week. And then the NCLHs are still up, but not as much as they were beginning of the week. We still got a little bit more time on that. AMD is insane. They're literally about to hit a new high right now. SMCI is still up a lot, chilling. Same thing with NVIDIA. I mean, market's not bad. We're like at the second candle from PCE. I've been keeping up the extended hours chart. Pfizer down 1.4. It's crazy because Pfizer dipped at beginning of the week, then bounced. Now it's dead. But I'm like really down with this, man. You have no idea. We get our deposit tomorrow, and then Pfizer about to make another attempt at the lows. So let's see what we got. Baidu expires next week, yeah. But I think it's close to being in the money, no? Baidu's around the hundreds. That put, it was like 20 cents to 50. I might pick up more Pfizer. Question is, do we just buy it there? Because like it moves around pretty weird. Like at these levels, it's pretty much like bounced every single time, but hasn't been here in a while. If we get it at this price, I would love the pickup. But then I'm also like, well, if we wait and it does end up flushing, we could even get it like at a way better discount. So kind of all depends. But we'll be fine either way. Just do we try to time it and get a bigger discount, or do we just pick it up and call it a day? Or MO, but I feel the same thing with MO. Because MO was just like at 40, now it's at 41, or just fell below. But like I would have liked low 40s. That would have been nice. But I also like MO. That's on my list. You want to get out of Celsius. You don't want to get greedy. Yeah, you could ghetto spread it. I ghetto spreaded it. That's what I did. I didn't want to get too greedy. We have like 500-600% on the play. I just ghetto spreaded the 95. Leaves you 2,000% upside. And then you get back 100% of your initial investment. So you won't lose money. You get back a little bit. But, you know, if you want to push it for gains. Because that plays till March 15th. So we actually get next week and then the week after that. So you get a little bit more time. Why not split between Pfizer and MO? I could because they're around the same size, but since my goal is like build up my dividends, I'm trying to like stack. You know, like one thing lately is like I'm, you know, even moving forward, I want to like, you know, there's a couple new names I might want to get. Depends how things move, but like I want to stack up the names that we already have and like add to them. So, you know, we already got good positions on Pfizer and MO. So I'd like to put a full deposit towards one or the other because that'll help it grow. They pay a dividend. We could compound a little bit more. And, you know, the faster we do that, the sooner we start, the better in the long run. But not a bad idea, honestly. MO scares you. MO's very, I mean, I see it as very stable. They haven't had any issues or reasons to worry about like their dividend or earnings. But again, Pfizer too. Pfizer people were a little worried. They did say stuff about not cutting their dividend earlier. Yeah, 3M is up there. I could consider that one too. But then I'm like, well, Pfizer's at a much deeper discount. What percent of dividend stocks? About 50%. I think right now we're 50-50. Or I think we have a little bit more dividends or growth, I believe. I calculated it last on the video. Well, let's see the fidelity, the FIDO. It's like $160,000 account. I think like 80,000 is in. I think it's 50-50. Any new company? Just the ones we brought up at the beginning of the year, but like I'm saying, I like what we got, and I'm kind of focusing on stacking some of them. News, day range, earnings date. Nice. Yeah, we're at 165. I think it's slightly a little bit more growth, and not just because growth names have been coming up recently. But this is what I'm saying value-wise. Like, MO, we have 13,000 in. And then, where's Pfizer? Pfizer, I have 9,000. So, Pretty much Pfizer will be like the same size as MO, or I could add to MO and make it the pretty much as big as Uber. Like I'm saying, the bigger these positions get, it starts to get really good because now, you know, if they make certain moves, we have a lot of money in them. It's able to really stack up. And then again, same thing. This is the small YouTube account. But this one, I mean, we have there's a different mix in this account just in terms of the growth, but I do think Pfizer MO is bigger in the small account than it is in Pfizer, but then now after this deposit, Pfizer could become bigger if we buy it. I don't know. Pfizer or MO? Pfizer or MO? But then the question is, do we buy tomorrow or do we just wait? Wish you bought more Abivai. I feel you. Always. Always. Abivai was great. Still is, but my goodness. And then Celsius up a decent amount. Flip the gold coin. Wait till after Powell. We could. I wish they had dividends close by to help make the decision for us, but they don't. I don't know. Altria dividend might be coming up. Pfizer was just in January. That won't be till April. So you do have a reason to kind of wait on both of them. MO is closer to the dividend. You haven't bought anything in the long term this year, just stacking deposits. It's still 4.9. It's great. It is great. 3M was looking good. I liked it because 3M, when it was at this price before Pfizer dropped. Pfizer was up like 8% when 3M was down here, but then now Pfizer dropped, so I'm going to invest in Travis Kelce. AMD, another 52-week high. Sound earnings? Probably not. I sold out of my shares a couple days ago, but I don't think I'll play the earnings. Maybe afterwards. Pfizer is a very interesting stock. It's been around for a while. It invokes a lot of emotion. So, we'll see. I don't see it's worth to watch. Classic Bio, they have phase 3 news. Do you know when? Oh, shit. Zscaler, they have earnings today. Where is that one? Well, those are going to go up. Hood on the high. And Coin and Mara smashed. They look so good in the morning. Celsius Consolidate. I've kept that one in the top right. I still can't believe it got halted, but that was a great play in the morning. We did good again. Like literally, I wish we got the snow. That would have been a nice hit. But we were talking about CRM and Celsius being cheaper afterwards, and we did good. We did good on those. Celsius though, that was monster, down 5 to up 18. It's like a 25% move. Some people were talking about buying the dip on snow because it dropped like Palo Alto, and now they're like, it'll go up like Palo Alto. All you need is Nancy to buy Snowflake, and then that's it. No, I kept the CRMs. I think they went down. They were up for a little bit. Sherm. Yeah, they same price on the ask, lower on the bid, though. Snow might be able to come back. I mean, all just depends. It's like it was one part guidance, one part CEO leaving. So depending on probably news of like a good replacement, or they'll probably keep fading until people are willing to upgrade them. PCR moves ZQ 10-year. The PCE moved the bonds. I think the ZQ, that's the Fed futures. I think the Fed futures actually got a little bit more dovish. But ZQ and the 10-year are different. But all the bonds did move after the data. Amadis says not interested in Shift 4 transaction. That's FI. Fiserv. Sipping on some Fiserv. Weren't they supposed to buy them? Yeah, but remember there was that buyout rumor yesterday? So one of the companies says they're not interested. I got a Fed Daily headline too. If we cut too quickly, inflation could get stuck. Daily risk of persistent inflation, economic downturn. There's no imminent risk of the economy faltering. We could have policy in a good place. We could cut if needed. The sad part is I'm pretty sure Dolly is a voter and Goolsbee isn't this year. Yeah, so 4 had that drop. And then what time? It's actually 9:30. Macy's dying. Well, they're closing the stores, both good and bad. Within that buyout stuff, but they're down 6. They are down a lot. I think there's one bad retailer too the other day. Yeah, Fiserv, Amadeus, and someone else. That was who was interested in 4. Remember, they had earnings and then again buyout rumor. DWalk dying. Why? Down 8%. Yeah, Pure Storage, that was earnings and runner afterwards. Up 23 still. They kill. Again, Snow, Duolingo, Okta, and Pure Storage. These are all just like 20% movers. I have no idea how it's still in SPAC. It's a company. Like, I don't even know how it's like ran. It may not even be ran. They probably like Trump just hired someone to make a website. I don't know how it still stays up. But I have no idea now that I think about it. Or that one guy, Patrick, talked to him on the phone. I never followed up with him. Isn't he supposed to make $3 billion off the merger? Is he? I don't think there's any way. There's no way it's even worth that. Damn, the market cap is $1.5 billion. I don't even know, man. I don't even know. Fed Dolly officials ready to cut when data demands it. We have policy in a good place. Can cut if needed. Want to avoid holding rates all the way to 2% inflation. Seeks collage of evidence. Inflation is headed to 2%. He could reap $4 billion as legal bills pile up. No way. They approved the merger, which could be worth as much as $10 billion. Set to get a shareholder vote March 22nd. If the merger is approved, His stake could be valued at $3.95 billion. Who would own 79 million shares in the new formed venture. But you have to wait 5 months before he could sell. I did not know that. Who's going to buy it? I think they're saying, like, if it merged and then it kept this price, I'm assuming that's 79 million times 40. Yeah, 3.3 billion. So that's assuming the stock merges and then the SPAC holds up a $41 price on all of the issued shares. And SPY curling up a little bit. I mean, we've been under VWAP literally all day, except for the first opening 30 minutes or so. And then we closed, the Euro close an hour ago. We dumped. We're still actually even below the Euro close. The next catalyst is a little bit of data tomorrow, consumer sentiment, as well as I think like one of the ISM numbers, and then some more ISM and PMI numbers next week, and then JOLTS jobs openings on Tuesday. That'll probably be the big one, and then or one of the first big ones, and then Friday, non-farm payrolls next week. So next week is jobs, less earnings, and then Powell on Wednesday as well. You have Jerome Powell Wednesday, March 6th, in front of Congress. And, yeah, jobs. That's it. Dollar finally coming down. UUP, I still see dollar near the highs. 4 still dropping. AMD still going up. NVIDIA. CRM, Celsius trying to still make the climb. NEM, damn, they bounced. Fuck. That one was in the, that one's going to die now. Jobs might be bigger than you think. Well, it holds the most importance in terms of weighting. That is the big data. But let's see if the little bit of new thinking from Goolsby comes into fruition. But I don't even think the data. I think the data is still 12 months lagged behind. As wild as that sounds. Bill for the dividend, I think beginning of the month. I have no idea. I'd have to double check. I remember Bill was like the beginning of the months. It'd have X dividend or end of the month. Should you sell your Cybertruck for $180? How much did you pay for it? But they should hold value for a little bit. I'm always a fan. Always a fan of a good flip. I saw a used Model Y Tesla with 7,000 miles in autopilot going for $30,000. That kind of blew my mind. He bought it for $107 after tax. That's not bad. $180. It'll probably get $150, $180 for it for a couple of months. And then eventually it'll come down as more come out. Oh, that's not playing. I'm just worried about the resale clause. If you signed one, yeah, you might get sued. Maybe if Elon cares. Beamer Imaging, BMR, I feel like we've seen that go before. That's starting to pop a little bit. Up 12% on the high. Vanny still holding. Was that other one VLCN? That one ended up dying. What was the other one? ENVB. That one ended up coming down too. Crypto all the crypto names are down. I think crypto itself is still green, even though it's selling off. And then again, a lot of those biotechs even got clapped too. Companies with a lag. I think you're right. The jobs report after this one will be the surprise. I think even like maybe all year, maybe I'm shooting too far ahead, but we just may watch a lot of lagging still. Like again, maybe the economic data just doesn't. I don't think it's gonna get out. I don't think it's gonna exit the highway that it's on right now. There's 4 lanes. You could go slightly higher, slightly lower. You could stay right in the middle, but I think things will come in line until like maybe another 9 months, possibly. That's why I think Powell is trying to again, if Powell and the Fed can wait another 6 months and then forecast the next 12 because they know it's lagging, I mean, there you go. That's why it's like they've already gotten rid of 3 months and then nothing's changed, kept the rates high, but kept people feeling decent about it. So I think they're going to try that for another 3 months. And at that point, you'll have 6 months of the data gone by, and then maybe they'll feel confident about it. They still might cut in 2025, but that's maybe what they're saying. Like maybe the data doesn't start collapsing on the lags until 2025. Ricardo, BWXT. That was a great play, man. That one ended up going. But Chad, you know what's another great play? Is that we've been here for 2.5 hours. 3.5 hours, actually. Wow. We have 3.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. That's the play, baby. Come on. If you hit the Celsius, do a push-up. Get up. Get beside your desk. Just move around a little bit. Stand up. Stretch. Move the body. Do the worm. Do the plank. Do a squat. Do a jumping jack. Just get moving, baby. Come on. That's what you got to do. You got to move around a little bit. Then drop the shoulders, too. You know that you're holding a lot of trauma in your shoulders. You got to relax it. Yeah, that's all of that pressure of life. Everything. You're holding it in your shoulders, man. Just drop it. Relax a little bit. Relax those trauma traps. You know what I'm saying? And chest to the sun. Flex the core. Tuck the hips in. And then, boom, baby. You could still do push-ups if you didn't hit Celsius. But if you did, you should. I had a Celsius this morning. You know that? I drank a Celsius, so I'm kind of. I should. That's a pre-workout, technically. I'm jogging in place right now. Wow. Drop the shoulders, man. Legs in front of you too. Don't mangle that spine, okay? And then relax the jaw a little bit. Go. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. Go. Oh, just like that. All right, man. So get the body moving, bro. Just move around a little bit. Trauma traps. No, bro, that's what they say. That's what they say. You hold all the trauma in your shoulders. Trade Representative Ty, if WTO talks break down, intra-BRICS dynamic will have contributed. Oh, man. DWAP, Trump Media sues company alleging a scheme to dilute shares. Oh, co-founders sue company? So is that DWAP? Oh, man. Okay. One more set, then wall stretch. Then we balance, and then our body movement for the hour will be completed. All right. Wall stretch. I'm still here. Can you hear me? Echo. Hello. Oh, man, I have an embarrassing story to tell you guys. Actually, maybe I'll make you guys wait till tomorrow. You guys did like the video, but it's an embarrassing story. I gotta do the leg balance. PG Snow Riot calls for me. Our city. You need a trauma philo. I don't have a trauma philo right now. I think have we had one in the past, but I don't know. Today's philo, we might not get a philo today. I might have a small one for you, but I don't know. Today we're gonna see. Yeah, they wanted a trauma philo. I do think relax your shoulders though. I mean that could go a really, really long way. A D-Walk quickly down 13. Danny posted that news about someone suing him. The co-founder saying it's a scheme to dilute Chaz. ACAM on the high again. They report today. Is it down an additional 15? Because remember, when we looked at it, it was down like 10. No, so it's down 13, 14 total. Okay. Switch legs. GoDaddy. GoDaddy's been running all day, low key. Yeah, someone about suing. Wait, was that first article? Was that the thing that dropped it? My goodness. GoDaddy pop. GoDaddy. Oh, that's really big. I called it out. I didn't click on it, though. I don't think that volume candle on SPY is real. Again, we're just right below VWAP. We're like literally right at Euro close. Even bonds down to the first like little dump level it had today. Oh, separate. Can you click on the high ticker and it pulls up the chart? Yeah. That's how I set it up with the links. So like if I click iBit, that'll go up there. There's no way you just noticed that. So my top right chart is linked to the high ticker. It's been like that for years. It's like, that's fancy. Troy's like, it's crazy. You got it in real time too? You get real-time quotes? That's amazing. You've never seen me do it? No, I do it every single day. Literally, I think at least once a day. At least. This is E-Trade Pro. You've never noticed it either? That's good. That's good. You learn something new every day. Why are you picking on Troy? Because you weren't here. I was waiting for you to show up. I was like, oh, I can't wait to pick on Cam. And I couldn't see Cam, so I was like, I'll just pick on Troy instead. Why is TLT? TLT is just clapped. I mean, again, even on the data came in line. I guess TLT is kind of working its way up, but for the most part, I mean, bonds are still elevated. I mean, rates are not, like, I think the 10 years back to almost 4 or 5, I think. But now everything across the curve is just pricing in X amount of rate hikes. So equities could go up, but in a weird way, like bonds, they're just holding this level until there is data or a policy change that is going to lead it to, like, actually have people starting to move and you know, price in the future or change what they're expecting in the future. But for now, I mean, on the 10-year, people are expecting 4.5. The 2-year, I think 4.8. People still think rates are going to be higher because, again, month after month, we're getting this data. Rates haven't been lowered. And kind of like that Goolsbee thing, like, think there's only 8 meetings in the year. So we've already gone through 2 of them, and we're about to have our second one. So what do you think is going to happen? If you're expecting X amount of rate cuts or this to happen, I mean, every meeting we go through and nothing happens, or every month the data is not changing, I mean, why would the rates start to price that in? So factor that in on like a 10-year bond, or I think the 2 years is the best example. Right now, the 2 years at like 4.8. So that's about like 3 rate cuts per se. That's matching up. But if we get to like towards end of the year and we still haven't cut rates, that 2-year bond is probably going to be up towards 5. Or hypothetically, let's say we get to the last meeting of the year and the Fed hasn't cut rates, where do you think the 2-year will be? Let me ask you that. Obviously, certain data could change that could give you an answer, but can you answer this question? Let's say you are on the last meeting of the Fed year, or let's say you're at 2 meetings before the end of the year, and the Fed still hasn't raised rates. What would the 2-year bond be at? Some of you gave me crazy answer. It wouldn't be at 7. Why would it not be at 7? The only way it would be at 7 is if what? But there's 0 way it'd be at 7. 4 to 5. That's a wide range because the rates aren't at. So yeah, the only way that would happen is if they raised rates. So the answer in this case is that if you're at like the last meeting, 2 meetings before the end of the year, and the Fed still hasn't raised rate. Remember, these rates are supposed to move with what's expected for the Fed. That 2-year would probably be at like 5 to 5.25. Because obviously, it depends on the other data that comes out with it. But for the most part, you're telling me, well, you only have 1 meeting left, and you still haven't cut rates. Well, why would we be expecting then in 2 rates? You know, again, if you're not cutting rates based on what the market expects after that behavior and how much time is left on either the bond or that future, you give a yield to it. So in this case, the 2-year and the 10-year and the 30-year, right now, they're all holding up like right where we are kind of pricing in for rate cuts. Until that changes, the bonds don't necessarily have to. The bonds, if data comes out and something's really bullish and people are like, yeah, more rate cuts, the bonds will move. If not, they're probably just going to hold until we either run out of time and then they move with time, they move with duration, or they're going to move with new data. Thanks for everything through the years. Thanks for letting me with the chat, man. Of course, my brother. Thank you. Thanks for always holding it down, Jorge. My man. What a great guy. Showing love, man. Showing love. Amen. So get ready, though. Get ready for bond land and economy land and duration land. Remember, we talked duration for a while at one point. Duration. And that's literally all I'm talking about right now. You know, like bond yields based on a duration have an implication. Say it with me, y'all. Bond yields with the duration have an implication. Bond yields with the duration have an implication. Bond yields with... are you with me? No? Anyways. But that's the idea. So depending on the time frame, the duration, and how the duration you get closer or further from it, it implies something about rates, that asset, whatever it is. So again, if we're just looking at interest rates, government bonds, or a 2-year bond, which is tied to the Fed, right? Or a 30-year, a 10-year, more attached to the cycle in there. It has an implication based on that rate. 2 years, 5% rate. That means people are implying that rates will probably be at 5% in the next 2 years, right? If you think rate cuts are going to happen tomorrow, the 2 year is probably going to drop down to 5 or drop down to 4 or 3, depending on how many rate cuts people think are going to happen. So based on the duration, the implication of that 2 years, if you think rates are going to get cut, then you're going to imply lower rates. I think they could keep rates through 2024. Like I'm saying, I don't think the data is going to move much. They're going to burn some time to try to figure out, but I mean, it's very possible every month that goes by, no movement, no action, no big change. They just hold the rates up while they wait and see or decide. UK Chancellor Hunt leans towards retaining 5 pence per litre UK fuel duty cut. They might drag it on all year, but then again, it will be weird for bonds, like we just talked about, right? Because then I don't know what the 2 year is going to do. The 2 year would probably have to rise. That means little by little, 2 years is going to have to rise up. But then if they still do cut the rates at the last meeting, then people are going to start pricing in cuts again. So maybe they're like, okay, now they finally. So it just really depends on where we're at before. What do I expect? Well, regardless, I think real estate market, it may be at a lag. I think, once the jobs finally go, real estate goes. Until then, I think real estate holds up. If I see it for another 3 months, this data is just status quo sticky. I really think then if the Fed is like, all right, we'll do this then, I think we're really waiting another year for the data to show up. So I think maybe 2025, once all the layoff data and everything else starts showing up from years in the past, then maybe. But other than that, I think real estate should just be stable until the jobs market makes a big reaction or has a big reaction. AMD, no more data for the day today. Nvidia R, I just go through all of them. AMD's at 190 now almost. They're just right under it. Where's BNB, bro? BNB hit 160 today. That was a lot of fun. Yeah, that Celsius play was dope. It is up 600% right now. And then the ghetto spread. You're doing good, man. You're doing good. Good call out. Well, thank you guys for liking the video. You know what I'm saying? There's a lot of those morning plays, and y'all ain't be liking the video. You know what I'm saying? So y'all had 1,000 likes before the bell. So you know what I'm saying? You got that real time, man. Right when I bought that at 20 cents, bro. It didn't last for too long, but it was there, man. It was there. I mean, I got it. I got bottom tick the shit out of that. Everybody talk about top tick Josh. Nobody wanted, you know what I'm saying? Bottom tick Josh gets hella shunned. Yeah, so always like the video before the bell. Amen. I forgot about TSM. They're at the high too. Sound big pop. Yeah, they got earnings. They're up 11. ACAM too. I'm kind of mad. There was cheap options on that earlier. I chose not to get them. I'm not sure how people got it. By the time the alert came in, it was 60. It just moved insane. The stock got halted. That's the crazy. I've never seen that off of a post-earnings move. It wasn't even news. So, I think by the time I executed it, the stock was at, I want to say it was at $66. By the time I, executed it on the stock, it was 66 going up to 67. And then by the time anything else, it was at $73. So I still got it. We got it out early, and the people saw it in here, but it was like the stock just got halted. But the way it moved up 5-7%, I think, within just a couple minutes. No, you had a little window on it. So that was me at the bottom. Yeah, there's a couple at 30. Went up to 60. Then it came back down to 30. Then went up to $1. Then came down to 25 again. Then to 40. And now it's back at 150. But that was one of the craziest post earnings. Like I'm telling you, that halt and how it moved, that we should be up more. Not gonna lie to you, we should be up 1,000%. But that halt and how they slowed it there, that just because we were up 500% real early on that. End phase, no. I feel like there was solar stuff the other day. The government shutdown. No, they kind of punted today. But I think the government, I'm tired of that shit. Like, you realize we do it like once a month lately? It's kind of become like a normal state of business now at this point. Apple, I see that little wick. And then SPY's above VWAP finally. What's the other one? CRM. Those went up for a little bit, but then they came down. But there was big movers yesterday, and then there was big names that just got cheap. So, like I said, the whole idea was Celsius and even like CRM was just like, remember, both of those plays were pricing in a shit ton yesterday. Like they were all pricing in 20% moves, 30% moves for 2 standard deviations. They open up either down or barely moving today. All of those options are just murdered. Soundhound, that's tonight. IoT, Josh Brown buying. CNBC, what was that other one? Ionic. They had earnings the other day. 4 still on the low. Ionic came down. Hams. Pfizer. Yes, sir. It's screwing stuff up for work. Basically, in March, we have stuff we need to buy and have no idea what our budget looks like. That's crazy. That's for NASA. That's an inside look at government shutdown on NASA. That's pretty dope. But that's wild. He's like, we need a rocket ship. How much money you need? $20 billion. Okay, well, we don't know the budget. Yeah. Congress is going to get a continuing resolution for April and argue for 2 weeks, go on vacation, and run out of time. I feel like they're just going to keep doing that. That's why I'm like, bro, it's just one. Again, these CRs, these are like new. That's why I'm like, in a weird way, this like strategy of using continued resolutions, it is becoming the new like norm. It used to be you'd wait like months or years at a time. Every time we'd have this debate, then they'd agree. Now they're doing this every month. That's why I'm like, man, it's kind of nuts. Dollar at highs. Yeah, honestly. We even worked. The dollar was creeping up while we were creeping up above VWAP. Relief rally. Biden is too old. Trump is dangerous.
Joe Biden loses them all to Donald Trump if that election were held today?
Indeed. On average, by 5 points, Trump would be victorious. And even, Joe, if you add third parties into the mix, candidates like RFK Jr., Trump still wins.
Pretty fascinating stuff here. We saw a bit of a ray of light for Joe Biden in Michigan. He's still losing the state by a small margin, though. And the big headline, Kaylee, is too old. That's different than really old. You might think he's really too old means he shouldn't be the president, right? He's too old to have the job.
Well, this is what's interesting is 8 in 10 voters in this poll did say they find him to be too old. But even among those who say they plan to vote for Biden, 7 in 10 said he fits that description. So I guess they'd still think he's too old, but they'll vote for him anyway. This is probably a question best put to Eli Oakley, who is joining us from our partner on this poll, Morning Consult. He's a U.S. politics analyst there. So, Eli, should our takeaway here be that they may find him old, but a lot of them still plan to vote for him? Just how problematic does this poll look for the Biden campaign?
Well, I think it's a big problem. Nobody wants to be called too old. Clearly, that's weighing on the president. And I mean, even in our national tracking, this is weighing on him more than it is Donald Trump. Nationally, a good chunk of voters, about half, think Donald Trump's too old, but they're far more likely to say that about Joe Biden. What we did in this survey was we kind of forced voters to pick. We said, do you think Donald Trump is too old? Do you think Joe Biden is too old? Do you think they're both too old? And where voters are inclined to go is Joe Biden. Clearly, this is something that is a big problem for him. Now, one ray of hope for him here is the fact that a good chunk, like 4 in 10 voters, said they think both of them are too old. And that might give Biden a bit of an opening as we're moving forward. You know, Donald Trump has been campaigning for president for the Republican nomination for a while now, but he's not as dominant as he will be in the coming months as he takes the mantle likely of the Republican nominee. I think you saw President Biden on late night TV trying to flag to voters that the former president is pretty old too. And so I think the current president might be leaning on some of these other descriptors like dangerous to try to remind a lot of these voters from 2020 why they didn't like Donald Trump in the first place.
Well, talk to me about that. Eli, it's great to have you back. By the way, I don't know, would you rather be too old or too dangerous? Too dangerous seems like that might be a bigger problem.
I mean, whenever we've been talking about these surveys, I mean, the way we've been kind of thinking about the election isn't necessarily about issues. I mean, it's almost about senility versus criminality. And which of those two things is going to matter more to the electorate? Right now, Donald Trump has an edge, but I'm going to bang the hammer on this nail so many times. The American people are not tuned into Donald Trump like they used to be. And the coming campaign and the job of the Biden campaign in the coming months is going to be able to remind voters why they didn't like Donald Trump 4 years ago. And I think what we're seeing on the legal front, on the perhaps the danger bucket here, is going to take center stage in the coming months as Donald Trump is at trial after trial defending himself from a range of serious felony charges. And not to mention the kind of talk he's doing on issues like NATO, kind of changing America's place in the world. There's a good chunk of the electorate that is leaning isolationist, but it's not everybody. It's not even everybody in the Republican Party. And we saw that stick out in the open ends questions. I mean, the very first thing we ask is what voters are seeing, reading, or hearing about these candidates. And without any prompting, a good number of folks listed NATO. And so people are starting to take note of some of these things, but it's just not as widespread as the Biden campaign needs it to be in order to damage Donald Trump ahead of November.
Well, as we think about the NATO question and as we've considered the U.S. relationship with our allies, how Congress or members of it, for example, view that. A lot of them say we need to be focusing greater attention on issues here at home, on our own borders. And on that point, Eli, both Donald Trump and Joe Biden are making trips to the border today. And that's something that came up in the poll, the issue of immigration. A majority, we found, still hold Biden and Democrats responsible for the migrant surge we are seeing there. But I found it interesting. Blame for congressional Republicans and the Trump administration went up 5 percentage points. Is that because the border bill tanked in Congress? Is that telling in some way that voters recognize the role Republicans played in that?
Yeah, I mean, what we're seeing nationally is that more voters than ever since we started tracking see a crisis at the U.S.-Mexico border. As more voters have seen the economy improving a bit, more voters are listing immigration as their number one issue in the 2024 elections. And as this process in Washington has played out, what we have noticed is fewer voters are blaming foreign conditions, economic conditions, war, and more are blaming Washington. And Joe Biden and congressional Democrats heed the bulk of that blame, but it's not just them. Since we did this last survey, since this bipartisan border deal fell apart on Capitol Hill, it does appear that some voters are taking note that Republicans are part of the problem too. It's not a lot, but it's some. It's about 1 in 5 voters now. That's up 5 points about congressional Republicans. Some voters are blaming the Trump administration more than they were a while ago. And, this is happening in Arizona, places that are close to the border, but also across the swing state map.
There it is. Fedmester doesn't comment on monetary policy. Possible FHLB loan changes could increase need for discount window. Ba-da-ba-ba-bop. All right, Chattadonia. All righty. Apple will not lose 180. Apple's very strong. Very, very strong. I don't know how. Tesla, Microsoft. Everything just chilling, man. Chilling. I'll keep up AMD. Mm-hmm. Mm-hmm. Chattadonia. Chattadonia. How are you? Are you ready for PHILO? Honestly, I didn't really expect to have a PHILO today. I got a mini one for you. I mean, I don't know. I think I got a PHILO. I got a PHILO filled with love for you today. I don't know. I got a lot of different things I could tell you about, man. But all in all, I will start it off by saying, 1, you are blessed. 2, you are loved. And 3, shout out to you if you have taken any personal responsibility over your life and where it is going. And if you never have, today is always a good day, baby. They say the best time to plant a tree was 10 years ago. Second best time is today. So, honestly, man, keep it up, bro, for real. Somebody even said something towards the long term today. Like, they said it helped with the FOMO. I like hearing that. I was looking at the long term, and it's nice, man. And I really hope above all else, and it goes beyond finances, man. I hope you guys start thinking about your future above all else. I will always be one to encourage that. So that is why, when we have these moments every day and we talk about stuff related to the future and life, even with, both intertwined and also outside of trading, that's why I always give a shout out to those, considering the future and, focusing on that and really building. And don't ever forget, man, if I could throw this into the PHILO, there is always a difference between your current self and your future self. Okay? Don't you ever forget. And I don't know if you're smiling right now or if you're frowning based on your current situation, but depending on what your current situation is, that could be determining how your future self, their countenance, more or less. So, all that being said, like I'm saying, I'm just throwing this out there. I'm just starting it off with PHILO, man. You know what I'm saying? I'm just starting this off. Your future self died, then you must be ecstatic right now. If you're not, then something's not right. That's it, because that's the way. That's how it works, man. That's how it works. But don't get me distracted. You know, because today's PHILO, man, it's something. There's a lot of weird points I could touch on. I did when someone asked me about PHILO today. I didn't really have one, but another thought came to my mind instantly. And it was something I shared on the live Watchlist, I believe, last week or 2 weeks ago, but it happened to me again. And what happened to me was I just walked outside, and then I look up, and I see the sky, and it just hit me different. I don't know. I looked up at it, and I was like, man, that's beautiful. And I didn't, I guess I wasn't looking at the sky before because I was inside all day, and I wasn't I don't know. It took me back, and it gave me a second to really be appreciative. And that's something just here that if I could give you a little PHILO, man, and I could give you a good reminder. We were talking, I hope you don't reject love in any way, man. And I really hope you guys could take a look around your lives, man, and find a way to be appreciative and I don't know, even more in more of a way, just be mindful about taking things for granted as well. You guys know you all have stuff, and I'm not talking physical or I'm not talking material. That's what I'm saying. Even, bro, what we just did an hour ago? You were blinking. You know what I'm saying? You are moving your body around. That's one thing I hope all of you should be grateful for. You know what I'm saying? It's we take a lot of things for granted, but then also too, man, this is what I want y'all to do. This is what I throw in for your PHILO. Can y'all do me something? Can y'all do me a favor for today's PHILO? I want you to go and give somebody a hug who deserves a hug, but you haven't given them a hug in a while. Oh, I don't think y'all feel me, man. I don't think you feel me. That's what I'm saying, man. I think y'all need to just don't take for granted the beauty in your lives. And and for real, just look around. There's things in your life from people, maybe, honestly, some of you may need to hug yourself. If you've just shat on yourself for the last 2 months to start off the year, and you have not given yourself any credit for anything, you have not taken care of yourself, you know what I'm saying? Man, go take a nap. Go eat something good, bro. Drink some water. Relax, bro. Go relax and don't feel bad about it for one day. I don't know, maybe. But also, too, man, I don't know if you have people in your house. You got kids. You got parents. You got all sorts. You got people. You ain't got no kids, no parents. You ain't got nothing good in life, but you got some good friends who are good to you, man. You know what I'm saying? Go give them a hug if you ain't never given them a hug. But, for real, I'm saying, man, just recognize a lot of the blessings and be blessed. And I'm saying, too, and just look around, man. I'm looking around right now. Look around the world, bro. Life is beautiful, and you are blessed, and don't ever forget that. And I guess, I could throw in another. I'll throw in a quick one, too. It reminds me of something else, bro. I don't know if you've got, I don't even how did you jump to this point? But welcome to PHILO and the wild mind. But, all that being said, this is what I was telling y'all, man. I got a PHILO of love for you today. I really hope you love life, even if you have no reason to love it. We had a PHILO on talking about that the other day. But, what I'm saying, find ways to find the appreciation and love. And at the same time, maybe if you're having difficult doing that, I hope y'all always show love. And I hope you always, and by love in a weird way, I hope you always show mercy. All right? That's it. Just don't forget. Don't forget. I heard this the other day. I think I saw it on a reel, and it was saying how Moses lost the promised land because he got angry. But how he responded was, it was like a lack of mercy. And I really liked it because it did say a lot. You know, literally back then, the people were complaining. Yeah, they were getting mad. They were getting mad at how long it was taking him. And then God was like, all right, give him some water from the rock. And then he was just pissed off. He was not. He was like, man, you ungrateful pieces of, you know what I'm saying? He was like, man, I don't want it. And they like, we want some water. And then he got clapped for that. So I don't know. One thing I can show you, man, I want you to give love. I want you to receive love, man. Don't fight it, bro. It's okay. Come on. Whose child you really trying to resemble acting like that? But like, above all else, man, just as a reminder, don't cut off mercy to others, okay? There's always consequences to that. I don't know what you believe. You know, I believe it's spiritual, but like, even if I wasn't spiritual, I feel like I would always believe this. But like, for real, you cut off mercy to others, there is always a consequence to that in life. I believe that whether you call it karma, whether you call it crystals, whether you call it, I don't know, what is it, a Sagittarius, whatever you want to call it. I don't know, man. You could, but like, Buddhism, Islam, I just think no matter any way you cut it, I feel like I would, no matter what I believed, I would always believe this. It's just like, seriously, if you cut off mercy to others, there is always a consequence for that. All right? And that's why I just like, though, there's always a reason why it was said many, many times before. Like, literally, sacrifice without mercy is useless. Again, even judgment without mercy, like, what is it? Like, again, mercy usually comes above all, and in the grand scope of things, being appreciative of life and all of it. I always hope you always show love and ask yourself, you know, again, is that a part that you're missing on there? So, Chad, I thought I would just throw all of this on you. I didn't really have much of a philo, but I do think you could work your way in between these topics. But above all else, man, I really hope you guys are taking the appreciation of life. I hope you have been appreciating so far. You know, I'll throw the final cherry on top, bro, because we talked about this just today, man. I hope you appreciate, like, where you are right now. And not like, you know, like where you are at in life, but like, dude, above all else, you are still living through the best time in the world right now. Like, you are living in the modern day of, like, the epitome. This is the current world. Like, you got the new drop. Like, you are living in it right now. Whether it's a Bitcoin, whether it's a stock market, a technology, whether it's Ozempic, bro, come on. You know, whether it's freedom or censorship, but you're living through it right now, man. So, I don't know. Find a way to take appreciation for what you've learned, how far you have came, what you are going to learn, and, I mean, even the broader opportunity. You know what I'm saying? So, on that note, Chad, I hope you get something of fruit from all of this. I hope you take this one to the bank. But that is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile. Press high chat. X out the chat. Hit the thumbs up button. Second link, nightly watches in main channel. Every night, 4 p.m. First link, Scream Alerts Boot Camp and Real Estate Course. And I love you. God bless you. The Chadadonia. Yeah, that's it. Do we have anything here? Is there audio? No audio there. Okay. Please hold. Please hold. You know, it hit 160 today. I'm gonna play it for you. I've been enjoying it thoroughly. Amen. All right, chat. I'll be right back. Get ready, cause it's earnings time. There was a lot of hitters yesterday. Even this morning, man. Someone said lava. Pfizer potential buyout. I haven't verified that.
Pull up in a bed body, I don't put a tap back.
Alright, I'll be RP.
I don't even need the NASDAQ. Skinny and she pretty, I don't even need the ass fat. Guinea was a freebie, I don't even need a fast one. I was never greedy, I just never fucking had shit. Now I bet that I ain't never fucking going bad shit. Please stop backing, y'all need masking. Little more balance and a lot of bit of counting. Pull it to the valley, got these motherfuckers counting. Pulling up the line, so got it looking like a million. Remember when I put them on the motherfuckers daddy? Put it some more fighter, I don't give a fuck about it. I'm still in the game like a screaming out athlete. Got a little fame, but it ain't changed nothing about me, nah. Same OJ, you smoke more J, still make them plays, but I play less games. Always ready for the war, I ain't playing campaign, but I really need a reason for I pop champagne. Proper for the fall, so I gotta stay safe. Lot of money on the table, boy, that look like bait. I'ma think it before I get it, boy, that look like fate. Either way the story goes, no, I love that fate. Had these motherfuckers hated me before they love me. Now they selling half and they ain't playing with their money. I told them take a tenth and pay yourself, cause that's your money. Put me on the bench, cause I ain't playing with you dummies. They ain't give us nothing, even if they did, no, I wouldn't take it from them. They was took a shit, but we still try to love them. Got so many wins that I can trip about a fully on my wrist. Nah, rather get a B&B and rent it for the scenery, and maybe live the season and keep on buying stats every month, spread it evenly and shout it out to people that believe in me. I hope you living peacefully, and same thing for the people that don't speak to me. I do this shit for everybody equally. I guess it's just G and me, and when we done with that, we going back to the reality. Yeah.
Airbnb, bro. Airbnb. Airbnb, man. You know what I'm saying? Dang, you miss PHILO? You guys all miss PHILO? Dang, y'all all miss. It was a mini one, man. It was a mini one, but I liked it. LVTX, did that go up? Do you guys have anything on that? Lava Therapeutics. I don't know if this is new. Somebody has a SC13. They own 2 million shares. Someone said partner. I don't see it yet. It may come out a little bit delayed. But again, a lot of bios. I don't know, man. Like crypto go crazy. Biotechs low-key go crazy. People been feeling it lately, man. It's there. Watching lava circulate post-rumoring Pfizer is going to talk about LVTX partnered biospecific. Stocks forgot about from BZ, Benzinga. Pfizer does have a conference next week. It's interesting they're selling off before that. Bazinga. Okay, Sheldon. I don't want to rot that. All right, man. Well, we should be having the press secretary, but they've been live for 72 minutes with no sound. You the shit, you Nez. God bless you. My man. Y'all just showing random love today. God bless. Y'all were doing that yesterday too, man. Thank you. Thank you, my friend. I hope you feeling good. I hope you blessed as well. I hope you're ready. I mean, this is the end of February. So I was going to say, I hope you're ready for it. But today is the last day. Remember, we were talking that rebalance stuff. So let's see how this all ends up. I like Snow. I think the discussion, I don't know if I'm going to play it yet. I want to give it a couple days. But what people are saying is it literally, is it going to Palo Alto? Just very similar, big dump. And then is it going to find a way to work its way up? So maybe if we see a day like tomorrow where it like moves up a lot and then barely closes green and then like kind of could get a, stair stepper, maybe. Octa on the low. Can you see if we listen to sound at 2 p.m. on the next 30 minutes? I could try my best. So whenever this press conference starts, I'm going to try to get the previews. I don't even know if I have a sound earnings preview. I don't even know what y'all are expecting. But let me see. Because I do think sound is like, just one of these like press release companies for now. Or isn't it just NVIDIA invested in them? Or did they just have the first AI? Yeah, I don't have a sound earnings preview. But we'll price it in. But y'all should be familiar with that too, though. I really hope the pricing in has been, again, all of those names that moved yesterday, if they did beat expectations, they did move to that pricing, like $50, $24, like right on the dot. To be like, yeah, we know NVIDIA. So this quarter, we went to NVIDIA offices like 3 times. So we're looking good. No, I think they're expecting like 40 million or something in like investments. I think sound is part of the whole, hey, I'm Josh AI for restaurants. I heard you need help ordering. You could say something like, I'd like a drink. Or I'd like to order a pasta. And I could help you out. Sorry, we don't have lamau. Are you looking for lamb? We sell a lamb at our restaurant, but not through the drive-thru. Let us know. We'd be glad to help you out. Here at Sound, our intellectual property portfolio includes over 250 granted or pending patents. We have all the patents. Patent pending. Yeah, no, that's exactly what SoundHound is. It's going to be cool, though. Not really, but we'll find out one day. But for now, it's still early stage. Wait, that's snow. I was like, they dry. I think Sound is up. Sound is up like 10%. I can't believe right when I sold it, it just rocketed off. After I held it for like, 6 months or something? My goodness. Can you tell me the price on the Baconator? I saw a really funny, joke about the whole Wendy's thing. And it was saying, dude, there's, never even a crowd at, a Wendy's drive-thru. Why does it matter? They're trying to test, surge pricing, but it's, Wendy's isn't even that popular to the point of, what's really going to even happen? If you get one of those at Chick-fil-A, game changer. A Frosty would sound good right now. Good Frosty goes a long way. And a good baked potato. Infa, SMG on the high, too. Wendy's are busy by you. Here, I think I've seen a line out of Wendy's once recently. But then again, I've not been to a Wendy's. Last time I went to Wendy's was because something in the stock market. And I was like, that sounds good. Literally, I'm such a weirdo. I literally drank a Celsius today because of Celsius. You see, I don't know why, I need to stop doing that. I'm too old for this shit. I just be getting reminded about things on the I'm not influenced by things in the media, you know, but in the stock market, I'm oh, I just heard about that. I'm down. That's weird. It is weird. It's very weird. NPC activities, no. Hey, maybe I am an NPC. They say the first step is acceptance. Well, guess I'll start talking like this more. Hope you're having a good day. Make sure you guys like the video. We're live Monday through Friday, 30 minutes before open. Hopefully see you there in the morning. Great. Celsius, hitting another high. That's good. There you go, Habibi. Might have ghetto spreaded too early. Still good gains, though. OVTX still going. Biotechs. So just be careful. Again, a lot of them, kind of when the hype is stopped today, I've seen like 3 of these just sell off pretty big after running. I mean, even Vanny did that yesterday too. I did a ghetto spread for Celsius. So I made like an additional $40 still, which is like 200%. But I have 140 and then I'm down 40. So I have $100 off of 20. But the original play is up like just under 700% right now. $20 into 165. I like the CRM still too, though. I'm just that CRM. That premium crush was awesome. If you didn't play it before, if you got it before that, the old Celsius. Oh, would those have hit? Damn, I think we might have double dipped on these. Yeah, that was a March 85. Oh, no way. No, was that for next week? Bro, those still killed it. So these were the pre-earnings plays. We bought these for like 30 and sold them out. What the fuck? So we got really good gains on these March 30s. I sold out for $100, but they went up to 235. So I think those did 1,000%. So even if you held the original Celsius, even if you didn't play it post today, those also hit. But yeah, the pre-earnings plays hit. That's crazy. Everything hit on it. Yeah, right now, the ones today are up 725 now, but then like literally you still made, I think, if from the almost 1,000% on the pre-earnings plays if you held them through. I'm feeling good, man. I'm hoping we could get some
Pfizer visited
previews.
Mexico. We spoke of the
Perfect.
importance.
All right, I'll BRB. Let me get these previews back. I'm
um,
feeling great now.
Renewing their
Let's get it, baby.
efforts. They did. We've seen a tremendous drop in the number of encounters across the southern border. The most difficult part south of our border to patrol is Sonora on the Mexican side, which is why Arizona, the area of Arizona in Tucson, continues to see an increase in the number of encounters. But the president will see firsthand what the Border Patrol needs and what the legislation would deliver if Congress would pass it.
Mr. Secretary, is he going to contrast his approach with that of Donald Trump, who's calling for mass deportations?
This visit is focused on the work that we do, not the rhetoric of others. This is focused on operational needs, operational challenges, and the significant impact that legislation would have in enhancing our border security.
Are there no executive actions that the president can take to reduce the large number of migrants that are coming to the U.S.-Mexico border that we saw in 2023 and continue this year?
The fact of the matter is that the only enduring solution is legislation. Congress needs to act. We have a bipartisan piece of legislation that 3 senators worked on intensely for a number of months. I was very privileged to be at the table to provide technical and operational expertise. The administration was represented at the table. We need Congress to act.
In lieu of the bill passing Congress, though, we've reported that the administration is considering using its 121F authority. Can you comment on that? Is that something the administration is considering? And will there be any executive announced today at the border?
There will not be any 212F. There will not be any executive actions announced today. As I continue to say, the legislation is what we need. It is the enduring solution. Actions taken outside of legislation are often met with litigation challenges in court.
Do you think that would be the case with 212F? This is a power. Can you then speak to the relationship with Governor Abbott? Obviously, that's been multidimensional, to say the least.
One of the benefits of being in Brownsville is to see what can be accomplished productively in the service of border security when local officials work with federal officials to address a shared challenge. We have a very good relationship with the leaders in Brownsville, and the Border Patrol will speak to that to our president. And we will have local officials present in Brownsville. So when we work together, we have a better result in achieving what the American people expect and need. When a state leader purposefully and deliberately refuses to cooperate, coordinate, collaborate, communicate, we see actually a detriment to our enforcement efforts.
When you think about his effort of busing migrants directly to other cities, what has that done for the feds, for you guys?
It is a tragic thing when a public official uses human beings and their lives as political pawns.
Congress back in session. What are you doing to prepare for the possible impeachment trial? And have you spoken to any lawmakers in Congress?
I have been incredibly busy with the work of the Department of Homeland Security. That's my exclusive focus.
Mr. Secretary, why is the president and you, why are you taking this visit now? What is the significance of this time of year? Is it just something that, was able to be put on the president's schedule right now? Essentially, what I'm asking is, what's so special about this day at this time?
We have a bipartisan piece of legislation that needs to pass to enhance our border security. The president continues to advocate to Congress that they must pass this bipartisan piece of legislation. He is going to hear firsthand from the people who work tirelessly and bravely to secure the border the impact that this legislation would have on advancing their mission.
And you also talked about, you're talking about the resources that your agencies need. And in addition to the border legislation being dormant last night, so was the extra money that DHS was going to get. Can DHS get the money that they need through the regular approves process that would end March 22nd at this point? Is that possible with all the help that you need right now?
We desperately need the funds that the bipartisan legislation provides. We're talking about approximately $20 billion in funds. That provides for more than 1,000 more U.S. Customs and Border Protection personnel. It calls for more than 4,000 asylum officers to meet the challenge of increased migration that is not only impacting the southern border of the United States, that is not only impacting the Western Hemisphere, but we are seeing this globally, the greatest number of displaced people around the world since World War II. So those are, it would provide for more than $400 million to purchase and implement non-intrusive inspection technology, the state-of-the-art equipment that enables us to better detect and interdict fentanyl, contraband, and individuals who are being smuggled across the border through our ports of entry.
Let me make one more here, please. The makeup of people crossing has changed a lot. Why do you think that is? I mean, it's different source countries, different claimants, different grounds.
It is.
Why is that happening? Why is it changing?
The demographics have changed significantly over the years. Traditionally,
the last 12 months even.
Well, it's a number of years. Traditionally, the vast majority of individuals encountered were from Mexico and the Northern Triangle countries of Guatemala, Honduras, and El Salvador. We have seen country conditions throughout Latin America, particularly Ecuador and Venezuela, for example, diminish in quality, as well as country conditions around the world. whether it's in countries in Africa or elsewhere, authoritarian regimes elsewhere. And by reason of that, we're seeing a level of migration around the world that is really historic. And that has resulted in increased encounters at our southern border. And very interestingly, in my conversations, bilateral and multilateral conversations with my counterparts from around the world over the last few weeks, when I discussed this with the Home Secretary in the United Kingdom, the first issue that arose was migration, the migration challenge that the United Kingdom is facing and what they are seeking to do legislatively. I spoke with the Home Secretary in Australia, and the number one Homeland Security issue that she raised was immigration. So this is a global phenomenon that, of course, we are experiencing ourselves.
Thank you so much, Secretary.
Thank you all.
Do you have anything left?
Can we get, I think right before we took off, the president talked to reporters on the South Lawn about reports of the over 100 dead in Gaza after. Can you tell us a little bit about it? Has the president been briefed on the situation? What's the latest?
Yes, he's been briefed on the situation, and I'd just like to make a few points about this. Obviously, the events in northern Gaza are tremendously alarming and of deep concern to us, deeply tragic, the loss of human life. Too many civilian lives have been lost as a consequence of military operations in Gaza. We think that this latest event needs to be thoroughly investigated. We've been in touch with the government of Israel this morning to gather information and to request that they investigate and provide more information about the circumstances that led to this tragedy. We also think that this event underscores the need for expanded humanitarian aid to make its way into Gaza. You may be aware our USAID Administrator, Samantha Power, is in the region right now doing just that, working on delivering additional resources she announced yesterday for humanitarian aid, also meeting with a variety of stakeholders in the region about trying to open up additional humanitarian corridors in addition to the two that are currently serving as corridors for humanitarian aid into the region. But beyond that, we have consistently and vocally communicated to our Israeli counterparts the need for there to be viable plans to maintain basic security in areas of Gaza where their military campaigns against and military operations against Hamas have concluded. We have consistently also communicated a desire to see that those plans move forward, and we have yet to see those be implemented, and we're deeply concerned about that. Once again today we're making clear to our Israeli counterparts that we'd like to see those plans implemented very soon and provide for the basic security of the Palestinian people, because the continued loss of life is deeply alarming and very, very tragic.
People had already said that the estimates from Monday for a ceasefire was optimistic. How does this affect that? And does this mean more pressure on Netanyahu to back a ceasefire?
Well, what I would say to that is you heard from the president on the South Lawn just a few moments ago, a couple hours ago actually now, that certainly this will make things more complicated, but he is continuing to work aggressively toward a hostage deal that would involve at least a 6-week ceasefire and help us expand the flow of humanitarian aid into Gaza. And of course, we hope that would be the basis for something longer. Since we've been in the air, we've released a couple of readouts of calls that the president made to the heads of state of Egypt and Qatar, where the tragedy that we all woke up to this morning was discussed. The need for a hostage deal and expanded humanitarian aid, temporary ceasefire was discussed. The president is going to stay on every available opportunity to make headway in brokering a hostage deal and reaching a temporary ceasefire that could be the basis for something longer. He's going to keep at it.
Does he plan to raise this directly with Prime Minister Netanyahu, what happened on the food line?
I don't have any calls to preview, but like I said, this was discussed in calls that were on the books with the heads of state of Qatar and Egypt this morning. They had also discussed the plans for work towards a hostage deal.
How seriously are you looking at the idea of an airdrop of humanitarian supplies into Gaza?
I don't have anything on that front to preview, but certainly we're on the ground.
There's no
right
video.
now working to expand.
This is from Air Force
the
One.
Flow of humanitarian aid into Gaza.
In the
Just
air.
yesterday, Administrator Power announced $53 million in additional assistance for humanitarian aid to go into Gaza. She's working on expanding the channels, the corridors through which that aid can flow.
I'm
we're going to
almost done
keep
now.
at this. The events of this morning just
It's
underscored
almost 11:02,
how
so
deep
this time
and
we're starting
dire
good on
the
time.
humanitarian needs among civilian population in Gaza are right now.
Olivia, there have been a number of administrative actions taken just over the course of the past few days targeting China. Is it just a coincidence that these actions are targeting China over the span of a few days? What's behind these actions?
I think you're referring to the actions that the president announced this morning with respect to connected vehicles. This is what you're talking about. So yes, as you heard from the president this morning, the president is committed to ensuring that American automakers, American auto workers are best positioned to outcompete the rest of the world in the years ahead. And he is also concerned about countries like China. China's right now, sorry guys, this turbulence might be a little much. China is right now looking to flood the market here in the United States and around the world with vehicles equipped with advanced technology from countries of concern. And so that is a security risk. That's a national security issue that we take very seriously, and it's the basis from which the president decided to direct the Commerce Department to review those national security risks and take any regulatory action they deem necessary to protect our people and our national security.
What explanation, going back to the people killed while waiting for aid, what explanation have the Israelis given the U.S. as to what happened?
I don't have any details to share on that. As you heard from the president, we're still working to get to ground truth, so I just don't want to get ahead of the preliminary reports.
And a quick thing on the trip today, will he meet with migrants?
I don't have anything of that nature to preview for you. As you heard from the secretary, this is really about hearing operational, on-the-ground updates from the law enforcement and border personnel who are on the front lines of dealing with these challenges and who have been under-resourced and caught flat-footed as we've seen migration surge. We currently, today, have the same number of Border Patrol agents as we had 4 years ago, despite the fact that migration has surged 250%. That is just simply unacceptable. It's a national security issue, and the president is really here to hear firsthand from the frontline personnel about what they're facing and what they need to do their jobs more effectively and keep us all, keep our border secure.
And one more, if I may.
Can we just have you move forward because there's a bunch of people who want to use the restroom right now.
I'm so sorry. Can we just
we can move down this way. Okay. Can you give any preview of Prime Minister Maloney's visit to the White House tomorrow, and also what when the president has these meetings and conversations with people like Prime Minister Maloney and Chancellor Scholz, what can he say about the U.S. credibility beyond the fact that Republicans are holding up aid on Capitol Hill when you do see Russian advances into Ukraine and Ukraine is badly outgunned and really need all these equipment? I mean, what beyond blaming Capitol Hill, what can you do to shore up U.S. credibility?
Well, look, the president has continued to aggressively make the case for Congress to pass the National Security Supplemental. That is literally the only avenue through which we can provide Ukraine with the resources, the ammunition, the weaponry that they need to defend themselves against Russia's aggression. There's no substitute for it. There's just no substitute for it. There's no mistaking that. It's a clear message the president has continued to send. It's a bipartisan message shared by many members across Capitol Hill. And so, we're going to continue to press Congress to act. Every day that we do not pass the supplemental is a good day for Russia and a bad day for Ukraine, and we can't let that stand.
Can seized assets fill this gap at all? Seized
Like
Russian
I said,
assets, obviously.
There's no substitute for our ability to provide immediate resources through the National Security Supplemental to provide Ukraine with the weapons and ammunition they need, like right now. So this is an urgent matter. It becomes more urgent by the day for the people of Ukraine, and we're already seeing the impact of this lapse, and we need to see Congress move immediately to put the National Security Supplemental on the president's desk, and he'll sign it.
Do you have a sense of the lag time between any bill being passed and actual munitions reaching Ukraine? You got to make this stuff before you send it.
I don't have a sort of precise timeline for you. All I can say is that we'll move heaven and earth to get that assistance quickly out the door as soon as Congress sends a bill to the president's desk.
You blamed President Trump for the blockage or the derailing of the border compromise. Do you think that, given that there is broad bipartisan support for Ukraine funding, does the president believe that the former president is a big part of why the Speaker has refused to bring the supplemental package to the floor?
I can't provide a portal into those conversations, but look, there was clean support for Ukraine and Israel on the table, and the House didn't act. So you'll have to ask them why they didn't move on that. But our message has been unmistakable and clear. We have sought the resources to secure the border. We've sought the resources to equip Ukraine to defend itself. Sought the resources for Israel to defend itself against an existential terrorist threat from Hamas. And we are meeting inexplicably with continued resistance from the House Republicans. And, throughout this process, we've bent over backwards to try to extend, in good faith, a hand across the aisle. It's hard to explain. Senate Republicans are working with us. So, look, I can't again provide a portal into the thinking of House Republicans right now, but it's obviously having a demonstrable impact on not just our national security, but the security of partners and allies around the world.
Does the administration support a discharge petition to get this supplemental on the floor of the House for an up or down vote?
We always leave the mechanics of these congressional processes up to leadership in the House and the Senate, so I won't weigh in on particular procedures. What we think is important is that this legislation get to the president's desk immediately, and then he'll sign it.
Does the president expect to learn anything new today when he hears from border personnel? Anything that might move the bill along, or?
I think he's likely to hear in vivid detail what it's meant that Border Patrol has, staffing has remained flat. That asylum judges are just facing incredible backlogs. That ICE detention centers are well over capacity. I think he'll hear directly on the ground from people who are on the front lines trying to secure our border without the resources they need to do their jobs. And having those stories and hearing those stories and taking them back to Washington will be an important part of his ability to tell the American people who's responsible for holding up this critical assistance.
Just on Israel and Gaza, the president told Seth Meyers on Monday that he's concerned that Israel is starting to lose support on the international stage. Does the event overnight sort of increase those fears among the administration, and will he convey that to the prime minister?
Well, I can't speak for other countries, but I can say that the president and the administration, certainly we've expressed our concerns about civilian casualties in Gaza, the mounting humanitarian crisis there, the need to surge resources into Gaza to address the extreme civilian harms that are occurring there. He's been unequivocal about that. The administration, everybody in the administration has been unequivocal about that. And as we've continued to communicate our concerns directly to Israel as recently as this morning in the wake of this tragic event.
Communicating those concerns hasn't moved the needle. Is there any talk of withholding aid or changing the aid to Israel?
Look, Israel is also a sovereign nation that makes their sovereign decisions. We are vocal about our concerns, and I think it's also important to bear in mind that they're a close ally. They'll remain a close ally. They are in the throes of an existential battling, an existential
LVTX
crisis,
is going
existential
crazy.
Threat to their existence.
That was the Pfizer
from
one.
Hamas, and we're going to continue to
Again,
support
that
them
was
in that
all rumor.
process, even as we continue to make very, very, very clear our concerns about how these military operations are prosecuted, and our concerns that civilian life be protected
They're concerned
at every turn.
about lives. That's why they get into wars. So, Chadadonia, I hope you're feeling good. I hope you know the day is almost over. Isn't it wild to think about? The day is almost done with. Can you believe it? We only have a couple of hours left. Today was the day of the PCE. you got a couple of movers out there still. Celsius, that LVTX in the bottom right still going nuts. You got some plays after the bell now, and that's why we are going to talk about earnings. So this has been what we've been doing for the last couple of months here, covering earnings, going over the earnings preview. Believe it or not, I do have the Fubo earnings preview. Yes, my friend, we are ready to go. There's some I'm missing, but let me give the general disclaimer and informational caveat to what we are about to do right now. And I do think yesterday was a super good lesson because, like, we did hit kind of. I mean, you got like 50%. To then today we had a great post-earnings play. We did good on the pre-earnings plays, but, you know, I didn't get to hit the damn Snowflake or the Duolingo. Duolingo was a little bit more pricey, but there were still opportunities out there. But even afterwards, too, there was. But the number one thing, like, literally, go watch yesterday's video. Go look what the option chain was pricing in. Like, dude, no exaggeration. These stocks moved almost exactly the dollar amount that we were pricing in prior. So that's the number one thing we're going to go over. I'm going to go over these previews. We're going to go over a little bit about the companies and how they did. Then we're going to go into the option chain and see what the option chain is pricing in. And then we're going to do our little strategy. But like I'm saying, this is what you're supposed to get out of this, is how the stock is expected to move. That is something very objective that you could walk away from all of this and do something pretty good with. So that being said, what we're going to do here, go over the plays, price them in, then we're going to double up the pricing. That is my strategy there of ghetto standard deviation, and those are going to be the low probability plays. But like we've been saying here, these are low probability plays. If you miss one and it don't hit, you lose it on all of them, and it's very easy to hit every play except for the one that actually hit. If you know, you know, baby. But that being said, do not blow up your account on this. Do not be unwise with any of this. And the phrase of the year so far, bro. This is what a wise man once told me. He was just in the Chad, wandering through Chadadonia one day, and he told me, he said, Joshua, I don't know, I feel like a wandering man would talk like this. Nah, but he told me, money that you need is cursed. That's it. So that being said, I think that's a good way to end it before we go on these plays. Don't do anything dumb looking at earnings plays. Like I'm saying, you can learn how to price in stocks, what's expected, factor this into any strategy, factor this into your general market knowledge. You know, at least you'll know what's going on. And from there, be wise and good luck. And let's get into it. Everybody on the same page? Is everybody agreeing, bro? That LVTX, bro. Benzinga pump. They said, hi. They said, Pfizer going to talk about it. They're like, yeah, that's 100%. Fuck yeah. Let's do it. We on the same page, though? We ready to go? And again, this list might not be comprehensive, so if I'm missing any of these, you let me know, all right? You let me know, and we will find them afterwards. But I do have a prepared list for you with whatever I could get. So Zscaler, let me get rid of LVTX, Leviticus, Lava Therapeutics. The floor is lava. Ah! No, you guys didn't. Yeah, anybody hear that Daniel Tosh joke? All right, I'm just seeing. I need to stop interjecting because we've been taking a while on these. Like, low key. We could just have way too much fun with earnings previews. All right, Zscaler. They're expecting $507.6 million in revenue versus guidance of 505 to 507. Non-GAAP gross margin 80.1 versus guidance of 16 to 17. Oh, they're expected to do very well on margin. That seems like a very big difference. EPS 58 cents versus guidance of 57 to 58. Cash from operations 112.1 million. Non-GAAP operating margin 16.8. Maybe that's where the difference is coming from. Free cash flow, $68.0 million. Deferred revenue, $1.51 billion. Billing, $614.3 million. Quarter 3 revenue expected to be $532 million. Non-GAAP gross margin, 80.2. Non-GAAP operating, 16.6. EPS of 58 cents. Cash from operations, $132.8 million. Free cash flow, $83.8 million. Deferred revenue, $1.57 billion. And billings of $600.7 million. Since last, or full year guidance, July 2024, They are expecting EPS of 248 to 248 excluding items, revenue of 2.09 to 2.1 billion, billings of 2.52 to 2.56 billion. Price history since last close, November 27th. Zscaler is up 26.4. S&P is up by 11.6. XLK is up 11.5. Near-term options imply 11% move. Last 4 quarters, gain of 1, loss of 3, gain of 5, and loss of 11. Revenue has beaten 20 of the last 20 quarters. EPS has beaten 20 of the last 20 quarters. Forward quarter revenue has beaten 20 of the last 20 quarters. And forward quarter EPS has beaten 11 of the last 20 with 4 in line. So that's Zscaler. Honestly, good history of earnings. They're pricing in a shit ton. And the last 3 quarters, they haven't really moved that much. That margin, this gap and non-gap, I think that's the issue. So this is saying non-gap operating. I think this is probably gap. This is gap operating margin. That's probably non-gap. But yeah, they've moved up a lot. Zscaler moves a ton. I think we've hit a play on Zscaler in the past, but yeah, if it's pricing in a lot, I mean, I don't know how I feel about that. Zscaler. So that's the preview. Let's see what's priced in. TD Ameritrade saying 28.78 right there on your option chain. 240, 241. I'm getting 28.90, 29.30, 28.70. That says 28. We'll go with the lower amount, I think, in this case. 28.70. I'm sure it's going to be all similar. So literally 28.70 divided by 241.18. This is 1 standard deviation. Stock is currently pricing in 11.8%. So pretty much 12%. It's a big amount. So we'll need about 22, 24%, which would be, again, you saw 3 of these moves yesterday. So that's the caveat to all of this. So again, it's expensive, but granted, if these, like I've been saying on some of these plays, if you have a bias or you think they're going to do better or not, or if you've been following along with their history, you might be able to make that judgment. But, you know, you just saw 3 of these companies move 20% that are pretty big. So it's still probably going to be expensive. But in that case, 1 standard deviation, remember, it's $11, you know, or $28 both ways. If you wanted to play shares, you at least know that's what your risk is. But you could factor that in accordingly. But $28, $28.80 is one way. So that's what's priced in 1 standard deviation. We're going to do ghetto standard deviation times that by 2. So this would be double. That'd be 57.60. 131. So 298.31. What did I just do? So we're going to go to next week. It's at 298. Still $200, Habibi. Very expensive, very expensive. So 57.60. 57.60. 183 to the downside. I'd say, of course, these time they're cheap. Kind of, I mean, 88 cents. I mean, what the hell does Zscaler even do? Not worth it. I mean, I think the puts are worth it, as always. They're kind of up there, though. I thought they were going to be 80's a little bit much. But these 182s, damn, these are up 200% today. Bro, we've been low-key getting robbed day of earnings. I think it's just like a little just late. We got to do these previews in the morning now, but like this is the last week of earnings. But then again, like some of these Celsius, so the puts are good, but Zscaler can move. I mean, it's literally, look at where this stock is at. This thing is ready to, it hasn't moved a lot in the last 3 earnings. Yeah, AMD's at 180. My goodness. So I think it can move. I think the puts aren't bad. Maybe, again, though, here's the problem. Like, I don't know if you guys noticed, some of these plays, they're pricing in a lot. Even if we're going further out the money, you're going further out the money, even if they hit, but it don't go that far, you're still like, you're not really getting much gain. So, yeah, Is it cybersecurity? I don't know. Zscaler. What do you guys scale, huh? Is it scaling it? Come on, what do you have? They engage in provision of a cloud-based internet security platform. They offer zero trust exchange. Why I want exchange with zero trust, Habibi? This sounds very, very, very bad. What do you mean zero trust exchange? Client connector, client internet access, Zscaler private, Zscaler business to business, Zscaler cloud protect, and digital experience. Company founded by Jagtar Singh Chowdhury and K. Kailash in September 2007, San Jose, California. Wow. They have 5,000 employees. Zscaler or Zscaler? Oh, that is the question. So yeah, tech play, cybersecurity. So I don't know, man. I think this thing might have potential. Surprisingly, the puts are juice, the calls are cheaper. But the calls are still like expensive for what they are. Does that make sense? Because we said $299. I mean, you could go a little bit out. Why did it just drop to 200? It's kind of like Okta. But why did it drop to 200 the other day? Oh, Palo Alto, duh. Yeah. I was going to say, why did it just die? I don't know. It might be worth it because the Palo Alto effect. So everyone's kind of expecting something already, but you could go a little bit out. I mean, realistically, that's what I'm saying. Those puts, they are, what, $200? Isn't that the price? What's the price of the downside? 180? And you were just at 200? So I don't know. It could be better. I don't think it's the worst. Maybe if there's no other play, it's going to move tomorrow. That's going to be a definite mover. So that's play number one. We'll come back to it. There's not that many for the day. Next up we got is Dell. Actually, the next one up is SoundHound, I believe. So I don't have an earnings preview, but I could price in SoundHound so you all know. Hey, heard you guys are getting ready to gamble on my earnings. Well, if I could help, all you got to say is earnings preview. Or Josh, what's the play? He probably won't tell you afterwards because you weren't paying attention. I don't know why you're putting that burden on him. But either way, SoundHound. So, since we're lacking the earnings preview, all I could do is price it in. Since some of you have trouble understanding priced in when Josh explains it, maybe I'll give it a try. So you go to your TD Ameritrade, enter in the ticker. Once you have pulled that up on the option chain, go over to the option chain on the date of the earnings. That's March 1st in this case. Then, go over to the right side of the option chain. You'll notice there's a plus or minus. That dollar amount should be telling you how much the option chain is pricing in for that option expiration. And in this case, since it's earnings, you could use this as a rough gauge to understand what the option chain is pricing in for earnings. So in the case of SoundHound, my home provider, my mother, they are pricing in $2.31. Not bad. So, if you want to know what that means, or if you want to verify, come down to the option chain. You'll notice $7 or $7.50 where the stock is trading at. Add up the strike prices, $1.05, $1.20. That's $2.25. You'll notice that's a couple cents off from what TD Ameritrade priced in. So this means the option chain is expecting a move of $2.30. Why does that mean priced in? Great question. Because if they were pricing in more or less, they would charge more or less. If the option chain or the option market thought that the stock was going to move more or less for earnings, they would charge a higher or lower price. Kind of like my menu. Hey, Wendy's. So in this case, you're pricing in $2.25. So if you take $2.25, then divide it by the current stock price of $7.39, you walk away with 30%. Some people would say that's a shit ton, because it is. You're pricing in 30% expected move. So in most scenarios, if the options or the stock moves around 30% after earnings, the option chain will probably not move. Why? Because that was what was expected or what was priced in. So now, let's say you had a little bit of that ghetto-ness in you, you would do what Josh does. What does Josh do? He does something called ghetto standard deviation. Why does Josh do that? Well, because it is not as specific, and the mathematics of it are not as specific or technical as some pompous mother effers would prefer. So, by using a rough outline, Josh can figure out, generally, where a stock will go if it moves beyond what was expected for that earnings, or any event for that matter. So how you would do that is take what was priced in the case of SoundHound, $2.25, and then multiply that by 2. You simply double it up. Although it has provided very sophisticated results, it's very simple. In this case, that would be $4.50. So if there was an outsized reaction on SoundHound, it could be expected to move $4.50, and that would be 2 standard deviations. In this case, that would be an almost 60% move on this stock. So now, with that information, we could go to the option chain and determine if this would be a good deal to make a high-risk, high-reward play. So in this case, if SoundHound had to move about $4.50, that would be $13. Those contracts are currently going for 65 cents. That is extremely high priced. I don't think Josh would end up purchasing that. To the contrary, if you go to the puts, that would be around $3.50. Those are going for 15 cents. Still kind of pricey, but usually the puts have limited downside, so even if it does go down, you probably won't make that much on a put play. So that being said, the 2 standard deviation plays would be $4.50 or $13 for SoundHound. Good luck, and have a wonderful day. Like the video. Thanks. All right. Well, that's SoundHound, brought to you by Josh AI. So there it is. There you got the tutorial live by the AI. Thanks. I like you too. Any questions on that? The 250, you get that from the at the money options by adding the call and the put. I'm pretty sure Josh AI did that, man. Come on. You didn't even get it when he did it? All right, no questions. Moving on to the next one. Yeah, I'll see you soon. Have a good one, and good luck. Yeah, I'm not buying the SoundHound options.
What about me haters? I'm still here. Fuck Josh AI. We the best. Get a long-term GG.
Okay. Anyways. So don't sleep on him. I ghetto spreaded the Celsius. And then I drank a Celsius. You miss hearing me on the... Man, where you been? You been working? On the grind? It's good to see you, though. It's all good. Well, yeah, SoundHound, I wouldn't play the op. SoundHound is expensive. Unless they're going to have, like, this earnings has a reason for them to go crazy. I'm sure it could move. I mean, we've been watching a lot of stuff. Biotechs, AI, everything go nuts. So That's all on you. Oh, Caleb, God bless you, baby. I had the strawberry kiwi one today. I got to celebrate. I'm going to have caffeine tomorrow now, too. Uh-oh. What if I get addicted again? I didn't think about that because tomorrow's Friday. It's good, man. It's good. All right. Well, that's SoundHound. The next one in line, we have Fisker. So I don't have an earnings preview for Fisker, but we could price that one in as well. So again, you go to the option chain the week of. That says 48 cents. So the stock's at 50. This one's, I guess, I get 30. That says 40. That says 40. I guess we'll go with 40. Two of them say 40. They win. So 40 cents is what's priced in. That's like 50%. I don't even understand this. So 80 cents, 100%, and they're going for 8 cents. So you could buy 8 shares or you could buy one option. That's totally up to you, Fisker. I don't know, man. If they do good, they could rock it just because all EV has been bad. I mean, damn, they were just at $6. That seems kind of nuts. I don't know. How did they... No. So they died with everything? Even then, they were at like $1.60. Yeah, you could play shares. I mean, 100 shares is $75. Best case, it bounces. I don't know, though. I don't know. What is that valuation? I don't know if Fisker still has a lot of that. It's $403 million. That's at least cheaper than any of those other ones. Yeah. But I don't think I'm going to play it. Good luck. Good luck. All right, the next one in line. Dell. I have Dell. Dell of the jungle. No, it's George. I don't know. It doesn't make sense. Ooh, Dell is... I didn't even know Dell was like skyrocketing like that. Well, Dell, their revenue is expected to be $22.17 billion versus guidance of $21.5 to $22.5. Infrastructure, $9.3 billion. Client Group Solutions, $12.01 billion. Non-GAAP gross margin, 23.6. Non-GAAP operating margin, 8.7. EPS, $1.73 versus guidance of $1.70 plus or minus 10 cents. Next quarter expected to be revenue of 21.38. Infrastructure, $8.63 billion. Client Solutions, $12.04 billion. Non-GAAP gross margin, 23.4. Non-GAAP operating, 7.7. EPS of $1.40. Since last quarter, November 30th, Dell is up 23.4%. S&P is up 11.2%, while XLK is up 10.6%. Near-term options imply 8.5% move. Last 4 quarters, loss of 5. Gain of 21, gain of 1, and loss of 1. Revenue has beaten 15 of the last 20 quarters, and EPS has beaten 18 of the last 20 quarters. So, I don't know, man. They went crazy. And carts breaking out, 32.90. Damn, son. I didn't know Dell was moving like that. They moved 20% 2 earnings ago. But they're pricing in a lot. Even then, other than that last earnings 2 quarters ago, they don't really move a lot. So like 94.50, 94.40, 7, like $8 almost. 7.90, say 7.50. We'll go with 7.60, 7.65. I'll go with the TD. That's a lot. %. I guess it could do 16, but that's the cheapest out of any of the ones we've seen lately. But again, without the last couple earnings, they haven't really moved that much. So $7.65 is expected for 1 standard deviation. That's literally what is expected. 765 times 2. The ghetto standard deviation, 15.3. 15.3, 109.75. $0.75, kind of expensive. It's $100 stock. I mean, it's kind of like it's a little cheaper than the Octas, but then they're at all-time highs already. So, I mean, they could just either keep ripping or not. And then they were literally just at $81. And they opened up the year at 74. So, I have a strange feeling the puts are going to be really expensive. No? So, we said 15.30. So, 79.18. Let's take a look. $79. 30 cents. Habibi, they were just there, Habibi. It was just at the $80. 3 days ago. What happened 3 days ago? Was NVIDIA? I don't know, man. That's wild. I like it, Habibi. I like the put. Very contrary, you know, but like still, like look, 17. It's very, very high. I don't know, Habibi. Oh, what the fuck? They just moved up the ask by 5 cents? Man. Well. The 80s, if those are 35 now. Oh, someone got filled at 39. There, they brought it back down to 30. I want it, but I don't. But they moved a lot. If you cannot, they're not giving it to me. They don't want me to have it. Maybe it's not meant to be. Because that doesn't make sense. If you're going to go 35, you might as well get to 80. It's all a scam. You like the upside. Did it? I think it just went up because of NVIDIA earnings. But again, that's a wicked pre-earnings move. All these options. All right, well, we'll come back to it, but if it's not going to be cheap, screw it. So no Dell played for me. Okay. I don't know. I kind of don't like the option chain. It's like very deep. They've moved a lot, though. We're going to come back to the Z-scaler. So who's the next one? Next one is DNA. I think some of you guys like this one a lot. DNA, Ginkgo Bioworks. So I got a preview, but pretty small company. I don't know if they've had a reverse split, or are they that new? Is this a SPAC? They're expecting revenue of $42.5 million, adjusted EBITDA margin loss of 320%, EPS loss of 10 cents. Since last quarter, November 8th, they're up 2.7. S&P is up 15.9. XLV is up 14.5. Near-term options imply 22.9% move. Last 4 quarters, loss of 15, loss of 13, loss of 1, and break even. Revenue has beaten 9 of the last 19 quarters. EPS has beaten 1 of the last 9 quarters with 1 in line. And short interest is 19%. Junk. I thought there's some people who like it. Doesn't Kathy Woods like DNA? I thought there was people who love DNA. I feel like this was pitched to me at one point. DNA, well, I think it's pricing in a lot. TD says 36. We'll just go with that. So what? 72 would be 2 standard deviations. Yeah, 210. Yeah, I don't know. They're cheap. 5 cents even. You could buy 2 shares. Not as bad. But 30 cents, $1.40. That's 20% priced in. All right. We have not done Autodesk yet. I think they might be next. Yeah, Autodesk is next. Unless there's any question on DNA, dog. Beyond and Eve on the high. Autodesk, they got a little bit of a recovery going on. And they got some lows. So they're expecting $1.43 billion in revenue versus guidance of 1.422 to 1.437. Non-GAAP operating margin 35.7%. EPS $1.95 versus guidance of 1.91 to 1.97. Cash from operations $384.4 million. Free cash flow $376.4 million. Deferred revenue $4.23 billion. Billings $1.64 billion. Next quarter revenue expected to be $1.39 billion. Non-GAAP operating margin 33.6%. EPS of $1.78. Cash from operations $386.3 million. Free cash flow $376.4 million. Deferred revenue $4.134 billion. Billings $1.29 billion. Since last quarter, November 21st, Autodesk is up 18%. S&P is up 11.9. XLK is up 11.8. Near-term options imply a 6.5% move. Last 4 quarters, loss of 7, gain of 2, gain of 1, loss of 13. Revenue has beaten 18 of the last 20 quarters. EPS has beaten 17 of the last 20 quarters with 1 in line. Forward quarter guidance has beaten 7 of the last 20 with 1 in line. And forward quarter EPS has beaten 3 of the last 20 with 1 in line. Ba-da-bop-bop-bop. So Autodesk, honestly, there's one thing I like about it. Kind of has had a lot of movement lately, but literally it's pricing in 6.5. So that's smaller than some of the other ones we've seen lately. So that means 2 standard deviations is 2. But I think they moved because I was looking at these in the morning and I saw these things move ahead of time. So I don't know. Game got my heart, game got my soul. So TD saying 1750. I think we could go with that. I get 1780. We'll go 1760. So 1760 is 1 standard deviation. That's what is priced in currently. That's 6.8. Yeah, that's small. But they moved up. I don't know. Maybe the options didn't move as much then. But they look juicy in the morning. But that's not pricing in as much. So literally 12%. So what do we say? 1760 times 2. 3520. 258.25. So 2 standard deviations. Ghetto standard deviation to the upside would be 293. Kind of expensive though. I guess it's an expensive stock. Yeah, they don't let you have no cheap shit here. So you still got to spend $100. But I think they'd go up to 300 if they beat. I'm surprised. Oh shit, what did we say the amount was? Wait, no, we just need 35.20. $223 to the downside. 80. So both of them are gonna run you like. These ones are what? $1.25, 295s, or the 300s for $1. The 222 still 85 cents. I mean, it's not bad. Now the next question is, do you think they'll move or not? They might, but they kind of have the pin to the high side. Again, their history, they either don't move or they have had a move to the downside, 2 standard deviations in the last year. Then their latest move was what they're pricing in now. This is for Autodesk. I'm going to stay away just because I stayed away in the morning. If I was going to play it, I did want those earlier in the day. I think was it this chain they added a bunch of them? I was looking at something else. Yeah, and they've already climbed. Yeah, I don't like these. The spreads are just nuts all day. Z-scalers on the high. All right, so that's Autodesk. Any questions on Autodesk? The next one is Green Brick Properties. I don't know why I have this one, but I do. GRBK. It's a home builder. But I have an earnings preview. I mean, in general, all of these home builders have been skyrocketing, so maybe get familiar. They're expecting $478.1 million in revenue. Home building gross margin 31.9, EPS $1.77. New homes delivered 845. Average price of home delivered $569.7 thousand. New home orders 687. Since last quarter, October 31st, they are up 48%. S&P is up 20.7. XLY is up 20. Near-term options imply 9.7% move. Last 4 quarters, gain of 7, loss of 7, gain of 23, gain of 2. Revenue has beaten 15 of the last 20 quarters. EPS has beaten 17 of the last 20 quarters with 1 in line. Been in since 12. There you go, baby. Yeah, no, they move a lot too on earnings. So 3 quarters ago, they had a 20% move, but last 2 back-to-back earnings, 7%. I mean, that's going to be a decent amount. So options may be expensive. GBRK. No, GRBK. Green Brick. Yeah, no weekly, 650. That seems about right, though. This is 570. I'm getting 660. We'll go 650. So 650 priced in, so a little bit more than 10% is priced in now. It's kind of high. So $13 either direction would be 2 standard deviation. So $71.80. And then you could use these. $1.20. Does this chain go that deep? Maybe the April 75s. 45, not bad, honestly. If you think they're going to have a stellar home building quarter. 81 minus 13. Then downside would be 45.81, 20 cents. Honestly, probably one of the cheaper plays. It's a cheaper stock. I think at that point, you just want to play home builders or not. I'm still in the eBay. I don't think they did much. I think they're down. Like yesterday, they went up for a couple seconds. Yeah, they held around where we bought them at, but yeah, they're down now. There is some data tomorrow. I wouldn't want to say no data, but it's not. I mean, today was the real big one with PCE. And keep in mind, even on the day, we're doing earnings previews now, but you're generally within pre-market levels. We did give up that PCE level at one point and then bounced. Baba thoughts? I like Baba. They don't have earnings, but I like Baba. All right. So that was Green Brick. The next one, Hewlett Packard, HPE. Didn't we just have HPQ yesterday? Do we have to do this one? Aren't these the same? Didn't we just do HPQ? So they're expecting $7.09 billion in revenue, guidance of 6.9 to 7.3, non-GAAP gross margin 35.3, non-GAAP operating 10.6, segment operating margin nothing, EPS 45 cents to 42 to 40 or to 50. Revenue full year 2 to 4, non-GAAP 182 to 202, non-GAAP operating growth profit 3 to 5, free cash flow 1.9 to 21 billion, down 10% since last quarter. SPY is up 17, XLK is up 22, and pricing in 8.4. Last 4 quarters, gain of 6, loss of 2, gain of 3, loss of 7. They've beaten revenue 8 of the last 20 quarters, EPS 15 of the last 20, and forward quarter EPS 9 of the last 18 with 3 in line. I never differentiate the two. So yeah, we'll just say they're pricing in 8.4 if you want to play them, and then just go look at HPQ. And then the next one is Vive. Viva Las Vegas. No. I was very concerned when Travis Kelce did that, so I would hate to keep that going. Red Chicle, we are moving down a little bit. All right, Vive, they're expecting $621.1 million in revenue versus guidance of $620 to $622. Non-GAAP gross margin 74.8%, non-GAAP operating 36.5 versus guidance of 36.5 to 36.6, EPS of $1.30 versus guidance of $1.30, cash flow $87.1 million, ending deferred revenue $1.06 billion, billings $1.03 billion, and revenue next quarter expected to be $645.8 million, non-GAAP gross margin 74.9%, non-GAAP operating margin 35.6, EPS $1.27. LVTX is going crazy again. That's the Pfizer one. Cash from operations expected to be $540.4 million in revenue, ending deferred revenue $1.05 billion, and billings $648.9 million. Since last quarter, November 8th, they're up 16.1, S&P up 15.7, XLV is up 13.9. Near-term options imply 8.8% move. Last 4 quarters, loss of 3, loss of 14, gain of 8, and gain of 20. Revenue has beaten 19 of the last 20 quarters with 1 in line. EPS has beaten 20 of the last 20. Forward quarter revenue has beaten 12 of the last 20 with 1 in line. And forward quarter EPS has beaten 15 of the last 20 with 1 in line. This one I like. So it moves its pricing in a lot, but literally 3 out of the last 4 earnings, it's moved minimum what it's priced in. And then the last time it moved a little bit. I don't know. Viva Las... Okay, I'm sorry. I get really into it. So TD Ameritrade. Let's see what its price on earn. 21.55. 20. Oh, these strike prices very far away. I see 2070. This is 1980. We'll go with 21. Just 21 flat. $21 flat priced in. So 245 is what's priced in. There you go on the upside. That's expected. So we're going to double that up. That's 42. Vive. Plus 42. 266. And they only have these weeklies. 80 cents? And it's pricing in what? 8? It's expensive. These ones, I don't know. These might be a little too far out the money still. You might just play the post earnings. But that's not bad. 16% though, they would need something big. It's not the I've seen worse. Again, this is on a $270 stock or $225 stock. And then 182 to the downside. Those are 90 to 50. Just depending on where you get filled at. My goodness. So not too bad. All right. I think I'm going to skip that. Next play. So I'm going to go back to Zscaler and Autodesk, but I've kind of got over the Autodesk. Yeah. All right. This one. Oh, is this for the morning? Well, hold on. Yeah, I don't have ESTC. So is there any other earnings for today after the bell that I did not cover? Is there any earnings I did not mention before we move into tomorrow morning? Tomorrow we got Plug and Fubo, and that's it. Those are the last two remaining. We went over Zscaler. We went over Sound. We went over HPE. You said Riley? Riley. I saw Riley moving today. Really? We have Fubo upcoming, but I'm saying after hours. Vive will crash. It might move big. Really? Really? I don't have a preview for really. I don't know. I don't even know what Riley is. B. Riley? Oh, the bank. So they're pricing. I mean, they're probably pricing in a lot. Haven't they been getting clapped? 580 priced in. Yeah, looks to be about right. 550, $11, let's say. So two standard deviations is like 29, 30 bucks. And those are still, I don't know, B. Riley might move a lot because those are still 95 cents. This whole chain is like crazy. So if B. Riley reports, again, remember, they've been like kind of what, failing bank borderline? This might have a big move packed into it, but those options are insane. You're not getting any sort of deal on that. We didn't play Sound, no. We didn't short Airbnb. NTAP. Does NTAP have earnings? EYPT has earnings? You said, are you sure? Is NTAP today? Don't they usually move? NetApp? NetApp reports February 29th. That's today. The Street expects revenue and operating margin at the midpoint. Expects revenue of $1.648 billion, plus 4% year over year. Gross margin of 70.70, plus 170 basis points. Operating margin 27.6, an increase of 140 basis points, and then EPS of 173, 12.3. Oh, I have another preview. Yeah, they are. NTAP. Did we not go over NTAP? Habibi. No, we didn't go over NTAP? No way. Good call out on that one. So they're expecting $159 billion versus $151 to $167. Non-GAAP gross margin 71.3%. Non-GAAP operating margin 28%. EPS of $1.69 versus guidance of $1.64 to $1.74. Cash from operations $336.9 million. Free cash flow $285.8 million. Deferred revenue $4.03 billion. Revenue next quarter expected to be $1.65 billion. Non-GAAP gross margin of 70.7%. Non-GAAP operating margin of 27.5%. EPS of $1.73. Cash flow from operations $386 million. Free cash flow $330.7 million. And deferred revenue of $4.1 billion. Full guidance for the year, revenue growth of 2%, implying year-over-year $6.23 billion. Non-GAAP operating margin 26%, and then EPS of $6.05 to $6.25. NTAP since last close November 28th is up 12.9. S&P is up 11.5. XLK is up 10.8. Near-term options imply 7.3% move. Last 4 quarters, gain of 15, loss of 1, gain of 8, gain of 1. Revenue has beaten 11 of the last 20 quarters. EPS has beaten 17 of the last 20 quarters. Forward quarter revenue has beaten 11 of the last 20. And forward quarter EPS has beaten 10 of the last 20 with 1 in line. NTAP. NetApp. So 6.2. So they're priced it in less than 10. I get 640, 620, 617. We'll go 625. 627. So 627 is priced in one direction. So 2 standard deviations. That's like what? 1254? 1250? Calculator. $101.70. 60 cents. Okay, not bad. Oh shit. 76, 77. All right, not bad. What do we say the high side was? Was it 100? 12, 99, 102, 101? I think it was 101. Let's see. Yeah, man. I don't know. I like the ones for next week a little more. All right, I grabbed one contract for next week. A 6.5 or for 2 weeks out. And then 76. And then I bought the put, but I grabbed the 100 call for March 15th at 65 cents, and then I grabbed the put for 25 or 20 cents. I like NTAP though. Again, it's moved a lot on the last. It does have the ability to not move, but those aren't bad at all. So you need a 16% move, which it has moved recently, and then it's $60, and then it's a $100 stock. 76. Okay, any more for after the bell? Is there any more for after the bell? NTAP, NTAP, NetApp. UYPT. I think they're still waiting. We're just waiting on buyout with that one. Low key, but then again, VKTX data helped them out, and then people started talking buyout. So I low key, EYPT might be good. If their earnings are good, people are going to keep talking buyout with them. We already went over Fisker. We already went over Dell. Unfortunately, if you missed those. All right, anyone else? We have 2 more for the morning left. We did sound. All right. Let's keep it moving, baby. Let's keep it moving. So next one, we did Autodesk already. The next one is going to be Plug. Plug what? I don't even understand how to... My Plug... You guys remember when Plug Walk swept the world? Fortnite and Plug Walk. You guys remember people were like, think I'm up in a space coupe. You guys don't remember that? I remember it. I remember it. Plug Walk. All right. Bugle Sticks. Plug expecting $235.2 million in revenue. Sale and fuel systems $157 million. Gross margin loss of 35%. Operating income loss of $216.9 million. Operating margin 99.8% loss. EPS 37% loss. Cent loss since October 10th. They're down 52%. S&P is up 16.3. XLI is up 17.1. Near-term options imply 14.7% move. Last 4 quarters, loss of 40, gain of 5, loss of 16, loss of 2. EPS has beaten consensus 2 of the last 20 quarters. Short interest is 31%. Do you want me to price this? I think this is going to be like the other, like even, who was the other one? Fisker was pricing in like 100%. Bro, what is this? Yes, a lot of loss, and it's 16, I guess not that bad. 35. It's about 20% priced in. We'll go with 69 cents, 70. So $1.40 is 2 standard deviations. $4.90, $5. That's your 2 standard deviations. Or $1.50 down, $1.40 down. You'll be at like what? $2.10. 1 penny for that. That's not bad. You spend $1. But the max you can make is 200 if it goes to 0. And like literally, bro, I remember seeing Plug when I was a kid. That's the crazy part. It held on though. It held on. Anyways. So the final one, another classic, goal. No, that's for all the people who like soccer. That's what we call it in America. Some of you may know it as football at one point, and the only place you could watch good football was on Fubo. I think it still holds true. I think a lot of people still watch Fubo for the football. They got good telenovelas too. So the company, I wrote Fubu because I often confuse it with Fubo. They're completely different, but I don't know why they chose a name so similar to Fubo TV. Literally, it's called Fubo TV. You guys could have just called it Football TV or FB TV. Nope, instead they said Fubo. So like Fubu. They're expecting $397.8 million in revenue, adjusted EBITDA loss of $67.9 million, adjusted EBITDA margin loss of 17.1%, EPS loss of 31 cents, paid subscribers 1.98 million, revenue next quarter expected to be $393.6 million, adjusted EBITDA loss of $42.7 million, adjusted EBITDA margin loss of 10.9, EPS loss of 23 cents a share, paid subscribers 1.89 million. Price history for quarter 4 since last quarter, November, they're down 27%. S&P is up 17.6. XLK is up 21. Near-term options imply 18% move. Last 4 quarters, gain of 9, loss of 2, gain of 31, and loss of 14. Revenue has beaten 11 of the last 13 quarters. EPS has beaten 4 of the last 13 quarters. Short interest is 17%, and forward quarter revenue has beaten 7 of the last 12 quarters. Well, Fubo TV, this is the last one. This is the last one. Fubo, can't you see? Sometimes soccer hypnotize me. I only watch when the World Cup is on. So that's only once every 4 years. All right. 48 cents. Seems to be on the money. 45. All right, I'll go 45. 45 cents priced in one direction. That's about 20%. So one standard deviation, 45 cents, either direction, up or down. 2 standard deviations is 90 cents. So $2.98, $3. You could buy that option for $7, or you could get 2 shares. Then 90 cents to the downside is like 110 or something. 120. 1 to 4 cents. Yeah, you might as well buy the shares. Honestly, this one could be a good one for shares. Maybe a good share gamble. But I'm still in the Weight Watchers, so I don't really have the same desire. But they were doing good prior. Kind of looks like Redfin in a weird way. They do pop a lot. And they're down 80% from a year ago. That's kind of crazy, actually. No. A year. No, is that true? Oh, no. Same price almost. That was 2 years ago. So 2 years ago, they were trading at $10 still. We already did sound. All right. Well, that's it then. I think, is there any others for tomorrow morning? There's a couple. I just don't have the previews. But we've already went over a lot. Look, these are all the ones we went over. Oh, I can't even open. I could just X them out. That's that one. We went over Zscaler. We went over that one. Oh, I guess it's just all show. We just a lot. We went over all of these. People are very obsessed with sound. Yeah. So that'll be fun to watch. Sound is pricing in like, I think, 30%. So 30% priced in for sound. 2 standard deviations is 60%. So I think if you want to play sound, you play shares. So yeah, nothing else for tomorrow morning. Tidewater, Rapid, RPID, RDNT. I don't have previews on any of these, but I think we're over with it. I was going to do Autodesk, but I think since I made a play on NTAP, I might just call it a day and do Autodesk as my only play, or my, NTAP. What do we say they're pricing in? $257. 1770. $18. Oh, 1750. 35.40. Was it 300s? Yeah, that ask is crazy. That wasn't to the downside. $35.40, like 220-ish. Yeah, I'm good without it. Let me check Zscaler too one more time. Yeah, I want to go back to that one as well. But I think I like NTAP the best, low key. I think Zscaler just got a lot of juice. Damn, 27.80. I think Zscaler might be a little bit too much. 55.60. 290. That one's $300 too. 55.60. And 187 on the mother in Z scale. This one expense too, Habibi. But they've dropped a lot recently. Actually, let me see something. Oh, wait, that was a March 15th? I still think these are all pricey. Yeah. If you had a small LT and small deposit, would you spend it on one stock or spread it out? Well, have you already spread it out to begin with in a couple? But I would start with a couple of names to focus on. That's what we did when we restarted Colt Sister. We did buy a couple of names and eventually got some, but that account has way less names. It's the smallest out of all of them, but we focused on a few names and I've been building it up until you get like small positions working, have a decent amount, and then you could work your way into other stuff. Yeah, Dell, I don't think I'm playing Dell. Dave, is it okay to drink margaritas? All right, we're done with third. I think only one play, man. One play at NetApp. That's it. NetApp, March 15th, $100 call, 65 cents. And then a 76 put at 19 cents. $84 spent total. Grand total of one earnings play. Grand total of one earnings play. Going up on a Thursday. And then we have 50 minutes left in the day. Great timing. Mara coming up a little bit. Some of the crypto plays. That's it for that's from the interview. Yes. What strike? Didn't I just said it out loud? You hate me, bro? You just hate me? You want me to like say it? You just it's a 100 call. A C note. Yeah, ARM is back to 140. Did SMCI pop back up? No. Well, but then again, they're up 5. The low end of Sound? Dude, Sound is pricing in 30%. So, whatever that is. It's more than $1.40. I think it's $1.50. So, it's like $3. I think $4.20 to the low or $10 to the high. I'm not in Zscaler. I do think Zscaler could move. NTAP, I like NTAP the most. That's why I played it. And then Zscaler, I just think could have a big move. But that one, maybe we just get lucky and pick those up in the morning. That's the only problem, my brethren. I think Zscaler can move big in either direction. It's just one of those names. Just one of those names that the earnings goes to when the market maker cuts you. Don't want to take it out on you. All right, I need to go pee, man. We only got 45 minutes in the day. I can't believe it again. The days have flown by. The week has flown by. It is Friday, Junior. You got Friday tomorrow, but I will BRB, okay? Follow me on Instagram at The Trading Fraternity. I love you. God bless you. And I will
X's mission. That you do that first, you create a savings benefit for somebody, and then on the back end, split up the dollars so that everybody gets some and everybody wins.
There's been a lot of discussion here now about this idea of a rebound, not just in the shares, but the idea of putting this company back on a path to material growth here. When we talk about the bottom line, and whether we're talking about GAAP or EBITDA or whatever metric you guys choose to embrace here, when do we start to see that, I guess, get back to a level that's going to support a much more upside here for investors?
Yeah, thanks. I think we're in a nice spot. So we guided, in the coming year to $800 million of revenue and $250 million of EBITDA. And that EBITDA margin is pretty close to 30%. So GoodRx as a business makes money, makes quite a bit of money, converts to cash nicely. And in our results, you're seeing nice growth, not only in margin, but obviously as revenue grows, it flows through the bottom. So we're having a nice trajectory.
But how do you protect that as well, Scott? I mean, we've interviewed your predecessor several times, and I'll ask you the same question I asked him, I think, every time he's been on here is, how do you deal with the competition from, a behemoth like an Amazon or a behemoth like some of the other pharmacy benefit managers here? How do you address that?
I think the biggest thing is to focus on 25 million people a year that use GoodRx and the 15 billion of savings value we created for them. As long as we keep saving people money on prescriptions, we're going to be in great shape. And I think that stacks up nicely relative to Amazon's and relative to the system, whether they're pharmacy benefit managers or retailers. Those are really partners for us.
Just a broader scope here. We talk all the time about the weight loss drugs and stuff. What do you think is going to happen with them? Like, do you think the insurance companies are going to cover them? Do you think the demand's going to be as great as it is when the CEOs are talking about it? What's your visibility right now?
That's an awesome question. So here's what I think is going to happen. So it is very clear right now that every weight loss drug is flying off the shelf. And the biggest thing in the market is a supply question around, boy, there's a heck of a lot of demand for people for all of these drugs. It's obviously a very nice part of our business as people are looking for them as well. I think if we look forward over the next couple years, you are going to see a lot of different formularies, both brand, generic, all addressing the same proposition. And some of them are going to be covered through insurance and some won't. And that's a really nice opportunity for us at GoodRx, particularly for those kind of instances where people are, it's not covered by insurance. You're paying a crash price. You really want it. And GoodRx is in this unique position, and this is what we're working with the manufacturers on, to put a real price that somebody would want to pay against it. And that's the things that I think not only we're working on, but are the big opportunity over the next couple of years.
Hey, Scott, really appreciate you taking time for us. Scott Wagner there, interim CEO over.
Thanks for having me.
Absolutely, over at GoodRx. Alex, he loves your questions.
It wasn't mine, it was Aviel.
Yeah.
It was our producer. Credit where it's due, man. I was going to ask about CVS and their cost advantage plan. Hers is way more interesting.
Yeah, it was way more. And actually, I'm glad you asked that because it does get to this idea. I mean, particularly the whole point of GoodRx was the idea of offering consumers something that was more affordable than what they were going to get from the traditional pharmacy benefit companies. And they did that for a while, and they sort of ran into some hiccups with that. And whether they can sort of have the negotiating power and, more importantly, the leadership to actually do it, that's a big question here, I think, for the stock.
Yeah, and also just the transparency. Like, who would have thought you'd have transparency on drug pricing?
Yeah.
Like, that feels a little unheard of, no?
Yeah, don't worry, Alex. I'm sure corporate America will get right on that. All right, coming up here, we're going to focus in on another big corporation out there, Best Buy. Its sales slipping in the fourth quarter, but that isn't stopping Best Buy from taking a more optimistic view towards demand. We're going to recap the results and tell you what...
Rizzler himself, baby. The Rizzler himself. Let's go. Your account, you're depositing $100 a week. You think 100 ain't gonna go far? Oh man, you tripping? That's a lot. 100 a week. That's more than the YouTube account, the smaller one. So that's bigger than Colt's sister. He'll be fine. That's always enough. I mean, a couple of years, it'll be a down payment. That's actually great. So I've been loving it, man. Even today, again, Airbnb is up on that account. It's doing good too. But it's just like the smallest purchases. So this account's off of $300 a month, but it was started at $200. I wish we still had the TD where you could see it in the good old days. But yeah, man, it goes a long way. So it'll add up, man. You could do it. But every single purchase on this, I was going with $200 a month. So you'll get that in 2 weeks, but it was generally enough to buy whatever. And if a stock costs more than your deposit, you got to wait on deposits to be able to do it. Are you still not buying houses or being very picky? I mean, I'm still buying them, but I'm not like, it's definitely not the rate I was, I guess, a year and a half ago. But no, I still have properties being purchased, but I am picky still. It's a weird mix. It's not as if it's like I don't want to buy houses. I actually prefer to buy houses still. I've been on that vibe, but it's not as if I've not been trying to flip them as much. So I have liked cash flow plays, and again, places that yield as much or more than the rates, and that could put the money there as well as have appreciation. But in general, I'm still very, I think, cautious towards both over leverage in real estate and then trying to, leverage at higher prices and flip for higher prices. General Motor Cruise shares estimated Q1 at $11.80 a share. Down more than, how is that? Bigger volatility in March? Maybe, but March is usually chill unless it was last March. MPW selling off. They were doing good earlier. But finally it does its little sell-off. Still green. Can you analyze Airbnb and we make a call for tomorrow? But like, why? What? I don't want to make a play for it. I'd like the 160 level, but I don't think it has any other catalyst. I think if anything, maybe we could play it next week when we get closer to the data. Otherwise, long term. It hit 160 today, bro. That's great. It keeps edging up higher, and I like it in the environment, all things considered. Airbnb is the only travel name that is like actually going up here. So again, Expedia is still lower, but Expedia is still elevated more or less. But it's good to see Airbnb kind of continue on since earnings, because they did have the best earnings out of all of them. You out, Mr. Belvedere? Enjoy it. Is Bill still in play? It is. I've been using the Fidelity account since I moved, and also I've literally just bought stocks instead, so I'm not even holding that much cash. But you can still play Bill. The rates are at 4.99 right now. So like on any of these like highly liquid short-term investments, like related to the rates, you're getting 4.99. That's insane. It's still up there. So granted, you might now, the only difference is the stock market this year and everything else is outperforming that like heavily. But I mean, the last 2 years now, if you get a whole nother year of that, it's about to be like 10.25% risk free. I mean, it's not bad. It's not bad at all, which is kind of crazy. So Bill is still in play. It all just depends on what you want to go after, your strategy, what you're liking, what you already bought or not. But I've been going into value. That's why I don't have cash. So although I do like my 5% on cash right now, if I'm willing to take more risk with a guaranteed yield, even though some of them are a little more volatile in terms of guarantee on that yield, but I'm going after value plays with a lot of that. So I'm fine putting my money to work as long as it's bringing back a yield, and if it is at a relative discount. I mean, I'm down, bro. I'm down. Kodak explores tapping pension funds $1.2 billion surplus. Kodak. They're popping. I did not add any snow. No. No snow. Well, you have more than 20%. I think 20% is like the cash threshold. Like I'm saying, I don't think you need to hold more than 20% cash. Because if you have 20% cash and markets do take it, you guys saw it. I mean, literally, plays you made at the bottom. I mean, they went up hundreds of percent. It's like your 20% cash would go a long way. So as far as holding bill or not, the way I look at it, I mean, if you have 20% or less in cash, I mean, that's fine. Anything above 20%, you could start putting it to work in value. Add more growth. I already had PayPal, Disney. Yeah, there's not too many like growth plays that are cheap unless they just got clobbered off earnings. You know what I'm saying? Like that's the key. So that's like PayPal's the only one that just like hasn't really moved. Like Disney's already up 20%. Like Alibaba, I don't know. That one again, Baba just can move a lot. It's like Disney in a weird way. It could just move a lot, but also go down a lot too. But other than that, most of them have moved quite a lot. Vanny still holding. I mean, this is an exit opportunity. So you could get out. We were positive again on it for twice in a row. Last 2 days, we've gone green on it, and then it sells off. So I'm still holding it, but like I said, I plan on getting out on one of these pops. For now, I'm gonna hold this one. 20% of total portfolio, yes. So like if you have 10 grand, I wouldn't be holding more than $2,000 in cash. If you have 100 grand, I wouldn't be holding more than $20,000 in cash. It's like, what are you going to do with it? You know what I'm saying? Like if you have a $100,000 account, you have 50,000 in cash, like what is the plan for like those dollars? Same thing, you have $10,000 account, 5,000, like especially if it's small, like start getting it, you know, you can at least put it to work. And I'm not saying go and buy all. You can even go for a little mix of names that have ran up a little bit and balance it out. But in general, yeah, you could collect interest, but at some point, you know, is your plan then just to collect interest? You know what I'm saying? Like if you are on a 10-year plan, like, you know, Bill and all those plays, like they are short-term interest, right? It's all based on, you know, 1, 2, 3 years, even less sometimes when it comes down to that. So it's like, what is your plan for 10 years? So that's the thing I'm keeping in mind when I'm putting my stuff to work, is that I am still thinking 10 years out, you know, so don't let anything ever fool you. I mean, no matter what, I'm always just kind of keeping in mind that we are looking ahead for 10 years. There is currently right now, but like we're looking at a long end of the future for things to kind of play out in that sense. That's why I'm like, you know, I want my 5 when things are volatile and I'm not really seeing good deals, and then, you know, you're watching valuations still plummet and rates go up and the market still adjust. You know, it's good to get paid high interest for waiting, and that's why I'm saying, like, even right now I would still get paid high interest for waiting, but I wouldn't be heavily in one position or heavily in no position, more or less. You know, and that's what kind of just speaks to everything of like diversification. You know, we got growth, we got dividends. You want a little bit of real estate, a little bit of stocks, businesses. That's how I'm viewing the next decade or so. But even then, for the long term too, it's easy to make decisions on the long end sometimes. But as long as you're committed to them for that time period. I have 50% cash. I don't know what to get other than a little bit at a time. Well, as long as you're putting it to work, that's the best thing you could do. You know, I'm not trying to pressure you to dump all your money in, you know what I'm saying? But get it to work, because the more you stack up without doing nothing, like that's a habit. You know, I don't know. Do they hear? I don't know. They hear. They don't hear me, Chad. You guys know you can get into the habit of doing nothing. You can very easily. Burying it and just habitually doing nothing, having the money saved, building it up, but then not necessarily putting it to work. So again, it's good for now because you're getting paid on your bonds, but you know that isn't going to last forever. Isn't money the goal, so having money is good? It is. But you have to put your investments to work. The object is let your money work so that eventually you don't have to. So it's good. The interest for now is good, but you do have to, just as easily as we got into it, you do got to think about a plan for the future of how long are you going to do this for, and what are you going to buy? Because interest is it's not going to always stay like how it is. And then again, too, like I'm saying, every company we've bought with a dividend, it's paying more than the cash, as well as giving us, the potential to move around a little bit. Why do you want to not work? What kind of question is this? He's like, so why do you want the money? Okay, if you want money, wait, why you want to work? Sound like my nephew. Go down the list. I don't know, man, because I hope one day I could do nothing, and then I don't know, or maybe my kids, if I have kids, or anybody, man, I don't know, so that they just something's generated without requiring me to be there. I think that's a good goal. It's a good goal. It's a worthy, virtuous goal, I guess. Where's the long term? It was up in the morning. Oh, long term's still up today. Yeah, Airbnb, Habibi. And then the Uber and the DraftKings. It's crazy. DraftKings and Coinbase are about to be green. That's kind of funny. Oh, CRM's going up? Coin's still above 201. I don't know if those CRM options went up. CRM, they did actually. 28%. Those are tricky little buggers. Baidu puts are up 100. Call from yesterday's down. Pump it up level is at 5,200. It's kind of wild. We have 30 minutes left. So see if we get any of that ramp capital. I don't think there was news on AMD. I just think chips had a lot of movement today after the PCE. Again, even SMCI is up 5%. No Zoom scalar plays. Only earnings play today was NTAP. No, Kodak said they're tapping their pension fund or something like that. Where is BNB, man? I would like BNB go to 160. That was a good home. NTAP calls went crazy. NTAP. NetApp. And then Vanny came down. Celsius. That play's still holding up 500%, literally all day. Why no love for Kenview? Do they have earnings today? I might have skipped that. Would you ever consider rotation of some stocks in the long term? Yeah, in like 10 years. You know, maybe, even almost 5 years. But I think after that amount of time, you could really judge things. And then you could choose to rotate crops. But, the fact that I'm like still building it, the fact that we have like a deposit, it's, we're every day slowly morphing it. Damn, Kodak's up 30 off of that. We had that in the first minute. It was only up like 2%. That's crazy. I did add Baba into the long term. I was even considering splitting up this month's deposit so I could grab, because if I grab 15 more Baba shares, we'll have an even 100. Fedmester January PCE data was not too surprising. Where is Fedmester?
Right, and doing that until we get back to our 2% goal is going to be important. So
Kodak
right now,
insane,
my feeling is that, my baseline forecast is that we'll see some moderation demand because we do have restrictive monetary policy, and that's affecting the economy. We haven't seen that much on the consumer side yet, but we have seen some signs that consumers are being more careful with their spending, right? We have seen it on business investment. That's come down. And we're seeing it in manufacturing. When you go out and talk to manufacturers, they're being more cautious. And so that's going to help, bring supply and demand into better balance. And then that'll help get the inflation back down. That's up till now, a lot of the movement has been on the supply side, right? So global supply chains have been normalizing. They were very restrictive before. Those kind of disruptions have been easing. And on the labor market, we've had people come back into the labor force, and labor force participation rates have gone up. So I think that that's going to basically mean we can't rely on the pace of deceleration in inflation that we saw last year continuing, and it's just going to be continuing to make sure that we get inflation all the way back to our 2% goal.
So when you look at this morning's number, how does this change the calculus, if at all, for you, for the policy path?
So it really doesn't change my calculus because what I need to see is, better balance between demand and supply continuing. As I said, we have seen that come into better balance, but there's more work to do there. When we do that, what we'll probably see is wages continue to disinflate a little bit more than we have already. I mean, when we talk to our business contacts in the 4th Federal Reserve District, what they've told us is that their expectation is that wage increases and nominal wage increases this year will be 4%. A year ago when we asked them, it was 5%. So you have seen some wage, come down, and that's also very helpful in terms of getting inflation back down to 2%. I do think demand will begin to moderate further, and that growth this year will not be as strong as the growth we saw last year. And that normalization, coming back to better balance, is going to be what gets inflation back all the way back down to our 2% goal over time.
Do you think there's enough time between now and the June policy meeting to get enough confidence in the downward trend for inflation? Bumpy has sort of been the term that a lot of your colleagues have used, but do you think there is enough time between now and June to start to get that confidence to begin cutting?
So I think I would like to phrase it not in terms of time, right? This is really about how is the economy evolving? Is it evolving according to what we expect, right? And that, for me, it's, growth slowing a bit, moderating a bit, inflation continuing to move down, right? And I do expect that there's going to be some slowdown in employment growth, right? Not a bad, employment picture by any means, but I do think we'll see some moderation on the employment side. And those are the conditions that we need to see to be able to assess, okay, the economy is evolving the way we want. If inflation expectations, a year ahead, inflation expectations continue to move down, right, then I think we're in a good spot where we could consider right, an easing of the restrictive level that we're in. But we have to sort of allow the economy to be able to do that. And you're right to point out that one of the things is we need to be more confident that inflation is on that sustainable downward path back to 2%.
To your point on the employment picture, Fed Chair Powell said that back in the January press conference that if there were weakening in the job market, that would point to cutting rates sooner. So if we were to see a couple of cooler employment reports, an increase in the unemployment rate, would that be a trigger to cut rates?
I don't think of it as a trigger. What I do think is going to be characteristic of policy this year is really risk management, right? Up till now, really, when inflation started moving up, higher than anyone wanted or liked and well above our goal, right? And employment was actually pretty healthy. Our sole focus was on our price stability part of the mandate. Right now, as inflation has started to move back down, which we're very happy about, right? We need to start now managing the risks around both parts of our mandate. And I think that's what is characterizing policy this year. Now, we have the luxury of being in an economy where growth is still very good, very solid, and labor markets are still quite strong. And so that gives us the opportunity, right, to collect more data, assess conditions, assess those risks, and see that the economy is moving in the right direction so that inflation gets down to 2%. I do expect, my baseline forecast is that we'll see some moderation in the labor market, but that it'll stay healthy. And that's what I'm looking for. That'll give me more confidence, right? That along with the fact that inflation continues to move down, that we'll want to start thinking about the next phase of policy. If things evolve differently than what we expect, right, either on the inflation side or, as you pointed out, on the labor market side, then we'll have to reassess, right, the policy stance.
If we get to June, middle of the year, and the inflation picture, the economic picture looks similar to what we have right now, would that be an argument to push back the timing of rate cuts or to cut back on the number of rate cuts?
Well, it depends on what you mean by looks like what we have now, right? We need to see continued disinflation. We need to see inflation moving sustainably back to 2%. And you're right, any one data report, right? We don't want to move on one data report. We want to sort of see that the trend is continuing down. And so I think we just need to sort of look
AMD's
at that,
hitting a high,
right, evolution of the economy to be able to assess,
we've touched the
right, the
PCE
balance
level
of
a couple
risk,
times
right?
here
And you're
in the
still
morning
viewing
and came
3
back down, and now
rate
you're right
cuts
back
this
up.
year as your
CRM
baseline.
breaking
Yeah,
out
that
those
was what I
contracts
had
up 50
submitted
now.
in the last round of SEPs. We'll get another round, of course, and I'll do a total look at it. But right now, that feels about right to me if the economy evolves as I anticipate it will. But again, if the economy moves in some unexpected way, we'd want to take that into account when we're thinking about policy.
And you've also mentioned, and I know you don't want to put a time frame on when you're going to cut, but you have used the phrase later this year. That is still your thinking at this juncture, given this morning's data?
Yeah, given what we're seeing and the fact that we are in an environment where growth is solid and labor markets are very healthy, I think we have the opportunity here to be sure, to see that things are evolving, right? It would be a different picture if things weren't evolving according to our, expectation. But right now, we're in a really good spot. I think both the economy's in a good spot and monetary policy's in a good spot. And that gives us this opportunity really to look at, the balance of risk between our dual mandate goals, making sure that we're on that sustainable downward path to 2% inflation.
Loretta, thank you so much for your insight. As always, it's great to see you.
Thank you very much.
That's Loretta Mester, president of the Cleveland Federal Reserve. We'll be right back after this.
Do you like waiting hours to drive anywhere? New Cybertruck pulling a Porsche. Just kidding, it's silent. New Tesla. Buy our stock. We need your help again. Where did everybody go? Man, this is why I don't have friends. You know why? Because everybody used to love Tesla, and now y'all could just talk mad shit about Tesla. Tesla 3 years ago, Tesla could do whatever it wanted. And if anyone said anything bad about it, y'all would hurt them. Physically, mentally, it would hurt them. Now, look at now, we don't care. They moved a little bit in the morning, right when the PCE came out, but then they chilled. But that's why I don't know. Goolsby really spoke to me today, especially even then getting more data. And like I was talking about this yesterday on the watch list, where like, you know, because I hate to be there. We always do this, but it's like it is what it is. But like you still have to like you see it so starkly as of lately. It's just like you just always have to be looking ahead to the next data set. You always have to be looking ahead, and it just seems like as of late, there's a lot of hype and the stakes are high. However, the data is like this little bumpiness and like, you know, that they keep talking about. It's like they have a real good general idea of where it's going, and it just seems that it really does have to do with the lags and the timing of it all and when it all actually ends up showing up. And that's what they're going off of. So it's like if you're looking at the data, it's not it. It's like I really think external factors. I'm kind of with it. I kind of just believe I kind of believe that although I think, let me start off by saying I still believe in a hard landing. And I don't necessarily fully believe in a soft landing. But essentially, unless there's an external event, we are going to get a soft landing. Does that make sense? I could get behind that. So I don't know what's going to be the cause of it, but I'm not necessarily, but like, it's like you are getting a soft landing. Like, no, it's already soft landing. But there's just going to be an external event. I just don't know what the external event is going to be. That's the only. So, but then again, because it's just like at this point, the Fed, I really do believe they just know what the data is. And I think they're a year ahead. That's why they have to waste 6 months at a time. Because then a couple months before they know what's going to happen in the next year, they could just fucking guide for it. And call it a day. That's kind of what's been happening. So it doesn't have to be like an attack. Y'all are so, you Americans, man. Fucking, you guys are just all trained. You guys are like an attack. No, it could be like a bank going bust. It could be commercial real estate. Maybe we find out Sam Bankman-Fried had like a child in the government or something. I don't know. Maybe like a presidential scandal. Maybe we get into, I don't know, another war. Y'all fucking love war. Y'all still, I don't know why we still in wars too. We can maybe another one. Y'all know that? That's it. You got the rapture folks. They thinking Jesus. Maybe Jesus come in, but I guess that event I don't know. It's different. Aliens. There's so many things, but I think you get the idea. I think it's only an external factor at this point. That's just the irony of it. It's like you do soft land until there's an external factor, but that could be anything, and that could happen between now or a couple years. Otherwise, the Fed is going to guide for everything with the data 1 year behind, and then they're going to be able to know what they're kind of guiding for until things get back to quote-unquote normal, and then at that point, we'll just start reacting to things as we normally should. Like, you know, bond, stock correlation, dollar, all that good stuff. Like, that comes back to normal once this inflation data bullshit comes back to normal. So, yeah. 7 years of feasting, 7 years of no more growth. The years ate all the profits when the future is unknown. So who controls external factors? I mean, No one. That's why it's external. It's a conflagration of many different events and factors and markets and economies and actors and individuals. Central bank? No, not necessarily. I mean, they just raised rates the fastest they ever had in history. So they just raised the rates, jacked them up out of nowhere to a crazy-ass level, and that didn't cause, it did. Again, we saw a little bit of pullback, and you saw things in the market, but it has not brought the economy to a screeching halt. Yeah, the participants said simply. Bro, yeah, some of y'all said you hit 1,000% on those Kodak when we called them out. That was a pretty nutty move. Kodak still up. It's at $5, $4.95. Where's Disney? Bro, and AMD all the while just been hitting 192. Nobody's business. It's doing its thing. NVIDIA going up. SMCI surprisingly stayed pinned. ARM kind of staying pinned, but above 140. 10-minute rigged in 5, 4, 3, 2, 1. At the highs. Brrr. Hard tickers off. Look at that. It's beautiful. I look like a Christmas tree. Yeah, making a big move there. High ticker is going crazy. NASDAQ just below 1%, but everything's green now except for the VIX. CRM, yeah, again, CRM, 3%, not bad. We got it. It was like break even. Options up 50. But still. And then Kodak, a lot of things. Big tech, small, Pure Storage. That was the other earnings winner from this morning. I think even Duolingo trying to climb. Who was the other one? No, he didn't even do too bad. Oh, Okta, they died earlier. They came up a little bit. Market on close, $4.1 billion to the buy side. I forgot. Welcome to the end of the month. It's the end of the month. All the bad news last week meant nothing. Stocks go up, won't get today. Kinda. It's like we go through pockets of like the data's bad but not that bad, or we're like, oh, is the data gonna be bad? Let's not move. And then something happens, and then you just go right back. But this is what I'm like, this is the golden path. Like it literally just seems like until again we get a change on that dot plot, or there's like something that really changes what people are expecting. I don't think it's gonna. I think we're kind of like the data is not as important as crazy as that may sound. The Goolsby golden path. It really is. I mean, he was right about it, though, because he was saying that in 2020, like at the beginning of 2023. I remember the first time he said that, some of y'all got mad pissed. I was even like, all right, man, this guy has good weed in Chicago. All right, golden path. All right, man, pause. Hold on. What do you mean golden path? Calm down. Calm down, Goolsby. I was a little taken back the first time he said it, but that was pretty on point. And again, that's just him saying we know all the data for the next 12 months. And it's not going to fluctuate that much. It'll still be elevated. So until that changes, we flushed from this point last week. Are we at the high? I think we are near the highs, though. We're doing very well today. So, I mean, you might end this week with another all-time high. That's been the vibe. Yeah, you're 11 points off of a new all-time high. Every day, baby, to end out February. They said seasonality who? Who? Seasonality did not show up at all. What do you mean worst February anything? Market did not give a shit. Very great February, actually. Yeah, bro, look at this month. February, the biggest month of the year so far. Massive. It moved a lot last February, but it ended negative. Not this time. Amazon ripping. Amazon kind of launching. Apple Chica. Oh, dude, it's end of the... I forgot. Yeah, No. Anything you're seeing, you could maybe try to play options. I don't know if they're going to move. It's end of the day, end of the month. So I forgot. You're going to get these like crazy ass moves all of a sudden. None of them are really going to mean much, but the market will probably move. SMCI, I wonder NVIDIA. Again, you got AMD, TXN. So like, look at all these names on the high. You're going to watch this crazy ass moves. I forgot. Airbnb, just go to 10 million. Final 5 in 15 seconds. Apple down, Intel up, Amazon launching. Hi. How are you? Well, there you have it, folks. Welcome to the end of February. I need to see the percentage, but it was a killer month. It was a killer month, my friend. Amazon, dude, I got it up here. It's going nuts. The Amazonian, bro. It's literally shot up to Airbnb, the SPY, bro. So I think there was a lot of money waiting on the sidelines. You're at 5101, above 5100 with ease now. Maybe we melt up, but like literally end of the month, no negativity in February. You have people after everything. PCE today, again, even after you kind of moved a little bit range-bound or range-wise. But, I mean, dude, people are still lining up here because, again, that's a lot of money at the end of the day for the rebalance. But there it is. But Chattadonia, I love you. God bless you. We got a couple more earnings, but it's been an amazing Friday, Junior. You know how I know it's been amazing? Because time has flown by and the day is already over. So we are about to land this. That means we are ending out our day, but I just want to give you a warning that it is about to get extremely loud in here. So when you hear me say earmuffs, that is your warning sign to mute your speakers if you are sensitive to loud noises. You have been a very great audience, and I want to see you here tomorrow. So that's why I give you this warning. And you know, some people have reported the noises have been so loud, it has revived dormant BBB. It has given them ruptured eardrums bleeding. Some people say it has gotten them, it's led to long-term avoidance syndrome. I don't know how. I don't know. That makes no sense. A lot of things that don't make sense, but you know, I've come to learn that loud noises and sensitivity to loud noises can affect anybody. Okay? It can affect anybody. So when I say earmuffs, just know I'm trying to protect you and protect yourself, okay? Sound good? Bro, look at this. That's your end of the Habibi, Amazon, the end of day. This is holy, but Chad, earmuffs. 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 You're right, ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats. So be coming to the aisles with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. As we make our final approach into San Diego International Airport, it's about 62 degrees, sunny on and off there, depending on where you're at. But looking like a good day, especially if you just bought SPY calls or even just bought the dip, because the market doesn't care about anything. That's word to the golden path. Yeah, I don't know what that means anyway. But good news is we are no longer to COVID guidelines until the election, so no mask are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in the Cole Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for along with the Colt, and hopefully have a wonderful evening. Chadadonia. It's time to wrap it up, baby. You only have 1 minute! Go, 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 go! Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Shares, options, futures. What are you going to do? Are you playing the earnings? Make up your mind. Are you playing the data? You still got a little bit more, but the market is doing its thing. You have less than 10 seconds to wrap up your plays. That's it. The time is up. 5, 4, 3, 2, 1. Ding 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 ding. Horn, let's go, baby. Oh, Chadadonia, whoa. Look at that end of the day candle, my goodness. Oh, I don't care, though. You just got here or not, candle or not. You made it. I need a GG in the chat right now. Let's go, baby. Good game. It don't matter if you made money or lost money. I know you learned something. Everybody that contributed brought something to the table. Plays, news, vibes, infos, personalities. You were part of the day. Good questions, baby. Way to hold it down. Way to drop that GG. Way to show sportsmanship. Listen, without a GG, you're more likely to get banned. That's the word on the street. That's all they say, man. The dentist, 9 out of 10, they say you will get banned. Kodak is still going crazy after hours. Marcus Hanlon still showing love. I love you, baby. God bless you. Good game, Chad. You too. I see you too, Twitch. Way to hold it down. Members, non-members, stream alerts. You throwing in donuts. See, you didn't have to, but you did. I love you, baby. Thank you for supporting the channel. God bless all of you. Everybody who had a good time. Everybody who made it a good time. Helped out another Chad. Good game, baby. That's what I'm talking about. Way to play. Way to play. I'll see you tomorrow. GG, baby. GG. I'll see you tomorrow. Good game. Good game. Good game. God willing tomorrow. GG, man. That's how you play. Good week, man. Happy Friday, Junior. I need me to rock. You won't see me a lot. Monday through Friday, you need me. Let's talk. Huh. Oh, wow. We didn't listen to this. Oh, I thought I saw N-Tap on the high. Oh, there they go. There you go. Remember, that was pricing in 6, actually. So maybe we get lucky. Why is Kodak still going crazy? That's earnings. We did it. We made it.
It's a call, baby.
Song I heard the other day.
Letter to the people, I like it. I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapon.
GG, baby. Autodesk. Oh.
It's a call, baby.
300 though. If we don't get near there, I ain't gonna get happy.
But it's
C-U-L-T, my team. Yeah, I was pricing in 25 though. I was doing what's priced in. We need another 25, man.
I can't be moved.
They think they cool when shit get hot. I'm chillin'.
Feel out Tom Cruise. I cannot lose because I'm on that mission.
There's Autodesk earnings in the chat. 209. Estimate 195. Operating income 522 instead of 512. They beat up on guidance too by 0.1.
They think they cool when shit
Full year guidance a little higher too. Beat and raise. Oh, sound. Oh my gosh, why are you guys not looking at sound? Are you kidding me? Oh, humble business. Shukran, Habibi.
Got a little bit of Vegas, got a little Wall Street. On my band grand, got some buffets on the team. I can kick a couple theories, I'm the modern main cage. Why the people never bring it, always asking what to eat. Thought you told me you was leaving, but I see you every week. All good, that's a show on the loss. Men lie, women lie, the premium don't. No trend lines, my mind really just know. I exercise my time, cause I'm trying to take hold. Poet and philosopher, I feel like the road. They told me what's impossible, I told them alone. Cause even though it's there, I can stay on the road. Cause little after little, it's gonna turn into grow. Tryna hit big, but it says CDCULT. My team so different. Off me, all week, I think they speak more than they do.
That's it, that's earnings. It's Thursday, man. I don't really like Friday earnings to begin with. It is Thursday, but I think that's it. Yeah, I don't have these numbers. NTAP 161 versus 159.
Tryna hit big, but it says CDCULT. My team so different. Off me, all week, I think they speak more than they do in living. I can't be moved, they think they cool when shit get high out chillin'. Feel out Tom Cruise, I cannot lose because I'm on that mission.
I think that's it. I don't know. Do we have any other earnings? I think we'll wait for sound. Other than that, again, I think NTAP got a beat. I need to check the guidance. We'll see. That's how it happens. Don't forget, I still do music. All right, big money, NTAP, big money. I wish I knew the full year. Oh, they say guidance range, full year 640 to 650. And then EPS 194 versus 169.
Loading on my F3.
I just don't know what their expectations were, but they did good.
Gas tank still on empty, but I'm gonna keep on driving all week. Think I just missed my exit. A Prius wouldn't let me merge. My driving got my girlfriend stressing, screaming in my ear like a bird.
Oh, Z-Scaler down 6. Again, they were pricing in 10 too.
Ain't going slow, man. I used to say the same thing.
So Z-Scaler, 525 million. Calculating billings grew to 626.6 million. Yeah, that's how I have the numbers. Let me pull up. I need to compare the expectations. So revenue was 507. What did they do? They did revenue of 525. They beat. Billings were 626. They beat that by 10 million. GAAP net loss 28.5 million compared to a net loss of 57 from last year. I don't have the easy numbers on Zscaler, but those are it. Net income loss was 19 cents per share compared to 40 last year. Do they have it on a non-GAAP? Deferred revenue 1.502 billion. Sound Dell running. Oh shit. Oh, Dell might. Dude, Dells are gonna hit. Bro, Dell is insane, right? Wasn't Dell pricing in? Oh no. They were pricing in 10. Never mind. You need 20 on Dell. Sound dump. Oh, sound down to 6.3. I think Dell is out. Yeah, Dell reports revenue 22.3 versus 22.1. I have numbers on Dell, not the easy numbers though. So give it a sec. I could come back to it. SoundHound. I don't see SoundHound out. Dell, fourth quarter adjusted EPS 220, estimate 172. Operating income 2.14 billion, estimate was 1.91. Total net revenue 22.3, estimate was 22.1. Yeah, they beat. SoundHound isn't out yet. But they need to move a little more. Oh, NTAP right at 100, but I don't get happy anymore. Fuck you, earnings. You know how many earnings we've hit and killed it on? And then you know how many earnings we were in the fucking money by $1,000, and then you open up and then it's like break even? These damn scammers, bro. So I don't get happy anymore. You could be happy for me. That's fine. I'll accept that. You know, but that's it. I don't screw these guys, bro. Autodesk, I think they did good too. So, NTAP is going to tap our strike price and sell off. So I think we're just waiting on Sound Hound. You waiting on the hound of the sounds. The sound of the hounds. Zscaler, 76 cents. Estimate was 58. Revenue 525. Estimate 508. Full year adjusted EPS 273 to 277. Saw 245 to 248. EPS 664 to 65. Seems like they did good, but I think Zscaler had high expectations. So Zscaler might move like Celsius did. I think they just had a high bar. All right. Fisker, not out yet. I think all we care about now is Soundhound. Everybody else came out. I think Dell might be the closest to beating. Dell's up 15 now. Yeah, those are 110s. Damn. But I think Dell might be the only one close to hitting. HPE, they're down 2.4. Dell and MTAP, those are the best. Yeah, Dell's in the money then. Now Dell hit. But again, those are still like 50 to 100. Yeah, you could have got those for 60. I like the puts on Dell. I remember that. So, I don't know. But then they ran. But Dell, those are in the money. Nope. Never. Yeah, they are. And then NTAP tapped 100. NTAP, that hit, yeah. For now, we'll see. NTAP, we have time on it too, right? That's the good part. You actually have an extra 2 weeks. Sound says 5 p.m. Oh, you got me fucked up, sir. Is that how you say it? Because I'm not staying until 5 p.m. I have to go, actually. I need to go now. I'll give you one more song, man, and then that's it. I'll give you a classic.
2020, baby. Yeah. Got the color, got the put. I can make the money both ways, always. I can buy the whole chain, go away. Got a lot of love and throwing no shit, no games, small change. I just made my own band. Probably trading stats where you still at the snoring. Morning, scoring. I'm just bringing more in. Hissing the DeLorean, sourcing. You could throw your own in. Drop it like a ball when you holding. I'm shorting. Skinny motherfucker, but I'm eating, seeking, scheming. I get paid for sleeping, dreaming. Hating for no reason, you a demon. Leeching, heating. Wishing you could be me, ain't easy. I told you I'ma do this, don't forget this shit a marathon. You make a move but stay in the same place, so that's a Peloton. Make 100 off a phone call, now that's a telethon. Benjamin's, Jefferson, YOLO to a ghetto spread. Yeah, you know I invented that. Who's been like a Trinidad? I'm moving like a president, can kill me like a Kennedy. I'm trying to be a better me, but they just keep on tempting me. Release the demon, set him free, he come back, bring me 50 G's. Nowadays it's hella smoke, your game like I'm from Babylon. My capital got stamina, I wrap it up in lamina. Talking in new blabbering, but I'm not understanding, bro. You hating and complaining, but you still watching the channel, bro. I do this for the real ones, but the hate is still involved. I just closed another building, I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah, the faith is never wasted if you reaching for a goal. Do this for the real ones, but the hate is still involved. I just closed another building, I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah, the faith is never wasted if you reaching for a goal.
Reports record quarter, 80% revenue growth to 17.1 million. Adjusted EBITDA improved by 80% year over year. They did 17.1. What were they expecting? I don't even know what they were expecting. Gross margin was 77%, increase of 6 points. Fourth quarter earnings per share were a loss of 7 compared to 0.15. Did Zscaler bounce? I just hope it opens up red tomorrow. Because I just think the bar was high, but it was a good earnings. I don't know. I have no idea what the fuck Sound. Was anybody, like I said, was anybody expecting anything from Sound? I have the numbers. Adjusted EBITDA non-GAAP loss of $3 million compared to loss of $18 million in the prior year. So a lot of improvement over the year. I mean, it looks like they're kind of benefiting off the hype, but it's still like all loss everything. Full year revenue was $45.9 million, increase of 47. Full year gross margin 75%. I don't see any guidance. They made an acquisition. Won a deal with prominent U.S.-based EV maker to voice enable their full fleet of market-leading vehicles. I'm looking. Tele, dual screen. More than 100 customers added AI restaurants, including Beef O'Brady's, Blake's Lotta Burger, Bozelli's, Babuku's Burritos, Chicken Shack, Core Life Eatery, Doghouse, Naz's Halal, and Noi Thai. What have y'all ate at any of these locations? Did I say a name any of y'all know about, or is this all just made up Grand Theft Auto names? Beef O'Brady's is real. Buckaboos, Bubaku's, Nas Halal. These all sound like Grand Theft Auto restaurants. Doghouse, I think I've seen in a mall. They got Chicken Shack. What do you mean chicken? It's like a Shake Shack mixed with like a chicken Taco Bell. Why did Taco Bell get introduced? I don't know. That's crazy. I had an Oracle. I don't think they have guidance. I mean, they made a good change from last year. Their business grew 80%, but like I said, I don't know how that stacks up. More earnings, Real, DHIL, IGC, XPOF, Origin, SoundHound sees revenue 63 to 77 million. So again, 63 to 7. Is that for full year? That'd be big if they just did 17 million. Yeah, see 63 to 77 million. Sees positive adjusted EBITDA for 2025. Sees AI exceeding 100 million revenue in 2025. No, that's for SoundHound. Zscaler dancing. What's the other one? Natap. Fuck. I can't type it. It's okay. Maybe one day, if you know what it means to find your dreams come true. And I wonder if you know what it means. All right, Chad. I think that's it, man. That's it, man. That's it. It's time. It's time, baby. We got to end it. I love you all. It's a good time. You pray for NTAP. I said that last time. I think tonight, I don't know. I kind of been liking it. We might just have to do a Thursday night live watch list. Thursday night live, baby. Yeah, caffeine got me singing. I did have caffeine today. So I'm down, bro. I'm down. And I wonder if you know what it means. You think I could do opera? Maybe that'll be my next foray. I could do that NTAP. Hey, man, inshallah, 110, Habibi. Inshallah, you know? Inshallah. I'm just going to ride with it, man. We're going, just like I said, I'm not excited yet. I want to see where it opens up. I've been attacked and violated many times before during this earnings season. You know what I'm saying? You know, you're RSVPing now. That's cool, man. I might give you guys the most, like, schizophrenic show ever one day. You know that? Because I said I want to do a comedy show. Maybe I'll do a comedy show for you. Wow, but then I'll sing you opera. And then I'll find a way to get Uncle out there for you. You know what I'm saying? And then I'll do like a talent show. I'll like show you like I'll like bring out a basketball rim. You guys will be free. It'll be a live event. I don't know. It'll be a weird circus is what it sounds like. Anyways, well, Chad, that is the day. I love you all. Thank you all for being here. We are going to have a live watch list tonight. So second link, baby. Don't be afraid to explore. If you explore the option chain this last earnings season, you may have learned something. So don't be afraid to explore the watch list and the description of this video. There's alerts. There's free ones. There's paid ones. There's free watch lists every single night. There's a prayer request wall, so you pray for me. I pray for you, man. It's all love out here, and that was even the PHILO, man. There was a lot to get out of it, but I hope you're peaceful. I hope I see you tonight on the live watch list. It'll probably be around like 6 or 7 p.m. I will schedule it in advance for you, but other than that, that is our day. I hope you enjoyed it. Follow me on Instagram at the Trading Fraternity. Second link, fill out the prayer request wall, all that good stuff. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. Not New York NYCB is dying. Huh? But Chad, that's it. I'm out, man. I'm out. Go read the books. Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. Don't forget why we're here, why we keep going, why that faith, hope, and love ain't never going out of style, why we showing love no matter what, baby, and don't not rejecting the love, baby. Why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Oh, no, let's go. Yes. Chad, and New York City Bank and Community Bank says identified material weakness in internal controls. Stock is down 10%. Material weakness in internal controls. And Miguel, about to celebrate my anniversary. Gee, is it tomorrow or is it today? That's the question, baby. Or not. Happy anniversary to the Ramirez family, baby. Let's go. And many more. No? Okay. Is there like anniversary songs? SEC sues Lordstown Motors for misleading investors. I am not buying the dip on NYCB. No, that's all you, man. But that's it, Chad. I'm out. That's the day. I'm going to see you tonight. Live. We'll have all the time in the world to be live. We'll see where the end tap is tapping. We'll see where the futures. Maybe we'll make a future play. Last live watch list was very profitable. So hopefully I see you there live, all right, around 6 p.m. Pacific time. It's okay. I'll see you there, baby, all right? All right, I'll see you in a little bit. But I love you. God bless you. Thank you for holding it down. But that is the day, my friends. I am out. And peace out. And goodbye. That's it. Yeah. I got to go, Josh. Where you got to go? I got to go on the campaign trail. We got to campaign. You know, Phil Marsh, you got to get the young voters out there. I'll lower your weed payment loan, or I'll lower your student loan so you can smoke weed. How's that sound? Huh? Don't be dumb about it. Just vote. Come on. Exactly. Is that what you think you're gonna? How many times are you gonna offer to buy me an eighth of marijuana and pay off my student loans? How many times are we gonna do this? Is it ironic you offer this every time? It sounds like you're a sugar daddy trying to get my vote. It's been 4 to 7 years of this, practically. Exactly. 8 years, 9 years, 20 years, man. Damn it. I reclaim my time. Have a wonderful evening. Goodbye. I'll see you later.